Good morning. Well, I just made it just in time for the opening bell. There we go. Stocks up. All right. I'm your host, Cousin Benny, coming to you from theclosingprint.com at the opening bell. Apologies for the tardiness. I had some emergencies this morning, just watching the futures, looking for a push. See if we can't get this off the low from the overnight session. Okay. Okay, ARM is up. We've got about 30 stocks advancing at the moment on the NASDAQ 100. Okay. Okay, we got 171 stocks advancing. The majority are either unchanged or declining. So, Brent is out of stocks at the moment. He mentioned the 73.90 level. As long as we stay down below 73.90. Risk off. Okay, we could rally a bit here. We're inside of the wick from yesterday's price action. Okay, yesterday we had a pretty decent bounce from 72.40. If you recall, that's the 50 EMA. Things change if we can manage to get back above 73.90. So 73.90 is just overhead. Let me just grab this from yesterday. 73.90. Okay. 73.90. Where are you? Huh. Did I delete it? That's weird. Okay, well, 73.90 it is. We need to get above 73.90. The risk pivot. Okay, so 73.90. Okay, there's not a whole lot of support down below. Depending on what hedging flows tell us. Let me just grab a copy of this. Okay, so here we are. We got 73.40. That is a 89 percentile level. This is 90. Okay, 0 days. Also 73.45 is a level of resistance. Can we get above that? Okay, looks like Intel's starting to push a bit. Intel's pushing a bit. Just watching futures, kind of hanging here right where we opened. Let's see what we're going to do here, folks. Okay, so yesterday's low is the 50 EMA. The 50 SMA is just below that. You can see that blue line on the right. That's the 50 SMA. Simple. 50 EMA. We went right through the 50 EMA yesterday and bounced. Okay, number one on the NASDAQ 100 would be Applied Materials. Okay, that's looking okay. All right, KDP just took its place. KDP, Keurig Dr. Pepper. Okay, we're starting to see more of these cyclical and defensive names. KDP is continuing. That looks pretty good for a setup. We're just starting the day. Okay, just got moving there. Keurig Dr. Pepper. I don't know if they had a announcement or not. Keurig looks good. Diamondback Energy. Energy stocks probably catch a bid with the news with Iran. Lind, Lin. They produce a lot of chemicals for semiconductor manufacturing. That's breaking out of a big base. Okay, Lin. I think I bought some Lin a while back, didn't I? Pretty sure I did. I must have sold it. Okay, sold it inside the base. All right, well, it's inside this base. Looks like it could keep going. Lin, Lind. They produce chemicals and gases used in semiconductor manufacturing. They're the number one in the U.S. and I forget where else they are based. I believe they have some operations in Europe too. Lind, K-L-I-N. Woking, UK. Okay, I know they have some offices here in the U.S. too, I believe. Regardless, this is a pretty good company. In the thick of it, when it comes to picks and shovels, you need these gases and chemicals that the company produces in order to make semiconductors. Looks like it's breaking out of this base above 519, 520, currently trading 521.20. That's Lind, L-I-N. All right, so Keurig Dr. Pepper slipped down the list. Clack has been busy lately. That's still trending. KLAC, another semiconductor. MSTR, we had some bullish activity in Coinbase yesterday, right? And then it slipped, wound up closing on a doji. So we're still looking for a base here in Bitcoin related names and Bitcoin proper. Give it a few minutes to catch your bearings and see what the market's going to do. We're starting to see the S&P turn up now. Okay, the fact that it's just sitting here, not much to do. I mean, you could try to trade this back up to 73.90. Let's see what hedge flows look like. Hedge flows turning up. Okay. Okay, big node here. What's this right there? That's a 97 percentile at 7,400 and 7,430, 97 percentile. So there's no big strikes down below, as you can see, non-zero day, 0 day. Let's go to net open interest. If you're going to trade S&P, okay, there's some levels down here at 72.55. I don't see us getting down there, but you never know. Maybe we test the 50-day. There goes Intel. Intel's on the move. S&P is trying to hold its own. Intel. Okay, so this looks pretty good for semiconductors. Remember, Intel put this big deal together with Google, and providing a second provider or chips. I wouldn't be surprised to see Cerebras catch some deals too. That CEO's got his what together. Okay, Cerebras is up again this morning. We added to it on the lows yesterday. CRBX I added to. CBRX. I always get these backwards. CBRX. Okay. So we bought some yesterday on the way down and near the low of the day. I've been building a position, looking for this company to outperform. I got to believe they're going to get management's going to get out there and put together some deals. These companies The producers like NVIDIA, AMD, they can't produce enough chips fast enough. Taiwan Semi can't keep up with it. So this is yet another company just came IPO. They have a superior method of producing an on wafer. It's the size of a kitchen plate, with all of the semiconductor parts in one big chip. Supposedly, it's a hell of a lot faster, which is interesting, faster than NVIDIA offerings and AMD. So I'm not sure at this point whether they produce their chips do they have ASML machines? I don't know. ASML is another part of the process. They produce the lithography machines that produce these 2 nanometer channels in these silicon wafers, and then they stack them for NVIDIA. If I screwed up the technology there, I'm a neophyte when it comes to semiconductor design. I understand parts of it, but I don't know the entire process enough to give a lecture on it. But these companies just have so much potential. Cerebras is one of them. Okay, there goes Microsoft. Microsoft is still laboring down here below the 50-day. That blue line over there on the right is the 50-day. Okay, so Microsoft has to do some work. We also saw that Microsoft had this base on the daily, a range basically. Okay, so that's that low right there. Okay, so you got this range. Okay, highs, lows, highs, lows. We popped above it, went through the 200-day a couple of weeks ago. We're right at the lower part of this range. Does it turn back up? Watch RSI and MACD. If you think so, I have a position currently underwater. Okay, there goes Cerebras, CBRX. I'll get that straight. Okay, Oracle with earnings, as you heard. All right, so I'm just kind of taking it easy, watching if we can manage to bounce here. Apple's still moving lower. Apple's just a dog. Probably gets down to the 50-day. Apple at this rate, right? If it's not already there. Apple. 50 days right there. Okay, so I had a nice run up during the months of April and May. Peaked in June, coming back to 50-day. RSI is recycling. This looks pretty good, actually. If we get down here and start to base, that would be something to look at. Netflix still dealing with these lows. Netflix. Okay. But back to the stocks that actually move in the markets right now. We had a nice mix yesterday. Coca-Cola is still following through. That was that's still on the watch list. Verizon, Chevron still below 190. Travelers Insurance, J&J, that's on the watch list. McDonald's, looked at that yesterday. We were looking for a follow-through day. We're getting it now. Okay, so anyway, I'm with you. I'm Cousin Vinny, your host. I'll be here until 4 o'clock. I was a little late this morning running around. Had to run some quick errands. It was an emergency. We need this. Why is it always my... Why is... You know the expression, a mistake on your part isn't an emergency on my part? That applies to this morning. Mistake on your part does not mean emergency on my part. Constitute an emergency. That was me running around this morning, trying to get back here for the opening bell. Google looking good. Okay, Google still basing up here. A lot of people are concerned about the secondary, that $80 billion worth of stock and equity offering, with Warren taking $10 billion, or Berkshire Hathaway management taking $10 billion, being approached by Google with an offer. They said, sure, we'll do it just like we did with Goldman Sachs back in 2007, 2008. If you recall what happened then, the markets went on to a historical secular bull market. Secular is the longer term bull market. Intermediate are cyclical bull and bear markets inside of that secular. We've been going since 2009, and this secular bull market still hasn't stopped. So back in 2008, that's when Warren got that offer to help out Goldman. They got warrants and a few other things, I believe. Anyway, we know the story and where Goldman is now. Of course, they got the IPO Friday for SpaceX. Goldman Sachs and Morgan Stanley are the leads. These are pulling back a little bit. Microsoft, still looking at that one. NVIDIA trying to bounce. NVIDIA. Okay, what's that? Okay, Bank of Canada rate decision 2.25. Bank of Canada rate decision. Okay, so NVIDIA just sitting here. Intel is still moving. Intel still on the move. Okay, we need to get above 120 in the next couple of weeks would be nice. Intel. Okay, so we're green on Intel. All right, futures continue to push. Let's keep an eye on Trace. Okay. Net open interest doesn't show a whole lot. 0 day, we got a level at 7,400, so we're not too far away from that, 7,400. Meta, looking for Meta to continue. Meta, looking for Meta to continue. Oh, sorry about that. Intel continues. Intel looking pretty good. All right. What's working here? Broadcom. I don't know if any of you took that position. I took that off. The put side. I still have the call side of the Iron Condor. That's up about $400. I only had 5 of those. I was going to do it double up, so it's a good thing I didn't do that. Anyway, Intel's still rising, looking good. Futures are still pushing a bit higher. I don't think the bulls, I wasn't expecting it. I was expecting the market to weaken even further with CPI and everything that's going on right now. Above 73.90 is what we need to see. Okay, we're just below that level right now, looking like we're running into resistance. As you saw with Trace, there is resistance right there. Okay, this is 0 day, 7,400 resistance. If we blow through here, look for it to move up. Look for these traders to move their strikes up. If we start to rally a bit, you can see hedge flows are starting to turn down. Oh, boy. So what was Brent saying? Resistance 7,400. Yeah, we saw that. That's pretty obvious. All right, so he's looking for market makers are positive gamma arching lower for the day. All right, so you can see how that's rolling over a bit. Let me just see if this is a little better here. Okay, you can see those contour lines. Yeah, I see the little bit of a red there. So it goes from this level all the way down to this red zone down here near 72.50. If we start to visit the 50-day. 50 EMA was a touch yesterday. So I don't see much to do on S&P. Right now you can see it's a doji on the daily. All right, so nobody's winning this game right now, psychologically or monetarily. We're just sitting inside of this price action. If it picks a direction, we'll probably go with the direction, all right? So for now, though, we've got the top 10 are mostly chips. There's a few consumer staples like Keurig Dr. Pepper. Let's see what else is on here. Diamondback, Energy. Zscaler finally climbing up the list. What's Zscaler doing? Zscaler. Okay, that made a nice rally too with all the other stocks that ran up, like Microsoft ran above the 200-day. Zscaler ran back up and then reversed. Still basing down here. New York Fangs. Let's look at junk bonds. Let's see what junk bonds are telling us. Junk. Okay. VIX. Junk is neutral. VIX. That spiked obviously yesterday. It took my 22s off for June while I had the opportunity. We were in 23 there at one point yesterday. So I got out of that one with a little bit of profit unscathed. The prior day when we had that big move, was that Friday? When we had that big move on Friday, I took the 22s off on July. So I have no VIX exposure at the moment. Probably won't buy again unless we get a little bit of a dip here back to the 200-day. All right, so we get down here between 1850 to 19. If you're thinking about hedging, I'd like to do that with VIX, but I'd probably look at August now. Same strikes, August 22s. But I'd only do it if we pull back a little bit. And that's probably only going to happen if the S&P manages to rally a bit. All right, we're just sitting here trying to figure out what the markets want to do. Okay, you can see a level right here, 7,300 just built. That wasn't there, right? Was it? Okay, 7,400 wasn't major on 0 day. So they matched that. Okay, 940, you could see 7,400 starting to build right there. This level right here, 7,400. Okay, starting to build, 7,300 also building. You can see right here, this level, you saw that red right there. The negative gamma just bought, somebody was buying right there. Somebody's buying, red, selling, purple. Okay. So same level, well, different levels. We got 73, 7,400 now. Could ping pong between these levels as a doji. So it looks like what they're planning right now so far is a range bound condition until we get more news, maybe. I don't know. CPI was okay. Futures bouncing a little bit. But going through the list again, the top 10 on the, let's look at the S&P 500 top 10. Let's see. Robinhood, number one. Robinhood. That looks pretty good. It's a little elevated already. Okay, so maybe if it dips a little bit more, Robinhood will be a potential trade. Get a B pivot early. Okay, Robinhood looks good. It's number one on the S&P 500. Just scoot this over a bit. Okay, so Robinhood, LITE, the optical companies, GLW. Tell me it bounced. It bounced. Okay, it's back at the 50-day. I don't trust this one. It's not. RSI keeps drifting lower. Andrew, I know you took this off yesterday too. I mean, I lost a little bit on it, but I just took the capital and put it aside for now. CLAC, KLAC. What's Cerebras doing? Cerebras. Okay, that's still going. Cerebras. CBRS. Nice reversal. Okay, we got a little dip yesterday. Probably one of the most difficult things for a new trader to navigate is I get into it with a swing mindset. The stock rips a hell of a lot more than I thought it would. And I say, you know what? I know it was a swing trade, but I'm going to take profits. And you were right. You were right. You come in yesterday, you buy the dip, right? Now you're right again. And what you started with, a swing trade, you are now day trading basically, or 1 day swing trading. What I'm trying to get at is it's very difficult to ride these trends. I mean, I'll show you another one. Here's this one. Very hard to navigate this when you get this back and forth, these major moves back and forth. It's really tough to trade this, right? So here's Oracle bouncing again, right? It's in phase two. So the point I'm trying to get at is be able to identify what phase you're in. So if you're day trading or swing trading, doesn't matter. If you're in a bullish trend, phase two markup, you're pretty safe if you're buying the dip and selling the rip. If you're swing trading it, going through this up and down is, I know, exhausting. 250 down to 200. That's 50 points. That's a lot, right? For somebody who thinks, okay, swing trade, and I'm going to hold this until next year, which is what I'm doing. But I'm also trading inside of it. So I have a core position and I'm trading around it inside. So that's what I'm getting at. So if you get something like this and you're trading Cerebras, you can day trade it, but I also have a core position, which I'm not going to touch unless this like takes out the low, of course. That would stop me out. So I do have to bring my stops up. I'm not going to let this run up to 310 and put my stop down here at 196. I'll keep running it behind a trailing stop behind prices. All right, so Cerebras looks pretty good. Take a deep breath, Benny. I still feel like I'm running around this morning mentally. 250. Amazon pull back. Google's still pushing a bit more. Google's another one. I have a core position in my IRAs, and I have day trades or short-term swing trades that I'm doing with options in my trading account. And Google, it needs to respect this 50-day. If this base starts to push to the upside, that's exactly what we're looking for. If it loses the 50-day, then I have to stop out and just call it a day in my trading account. Swing trading, the long-term account, the IRA, core position. I don't know. I'd probably have to close that too. So the 50-day or these lows, 354 probably for the longer term position, 354 would have to hold. Microsoft's still pushing a bit. Okay, maybe today will be a day where Microsoft actually creates a bullish engulfing candle and takes out yesterday's high, gets back above the 50-day, gives us some hope into Thursday, Friday. Everything is reset. RSI almost, stochastic RSI, MACD, Google. Okay, Netflix. NVIDIA is just kind of chopping around. Intel just pulled back a little bit. Futures. Okay, it looks like futures are going to be stuck in this chop. S&P right below 73. You got to get above 73.90. Just remember that number, 73.90. Mike Santoli. I like this guy. This guy reminds me of my architect friend from Notre Dame, Art Margiotta. Guy is like he could be his younger brother. All right, looking for get above 73.90. Okay, that's the level we need to get above. Okay, again, let's take a look at the stocks that are working today. Stocks that are working from the Dow Jones, IBM. Maybe we get, it's right at the 200-day. IBM, that's a good shot there. Ooh, do I want to do IBM? I do. All right, let me buy some IBM here. Let's see, IBM. Let's see what this looks like. Already dipped. Shoot, I wish I had seen this a little earlier. All right, so if you like IBM and you got a few days that you can handle a little bit of consolidation at the 200-day, this is starting to be a good position. Now, I could just wait. I like to have a second day bullish, just to have RSI and everything turn up. So if this turns tomorrow, if we got a bullish day tomorrow, IBM, remind me if I forget. You know what? Let me just put an alert on here. 282, 280, 280. I probably might hit that today. 285, IBM. All right, let me put a IBM an alert at 285. 285. All right, 285.17. All right, so I got an alert for IBM. Okay, so if you're wondering how to create an alert on TradingView, just come over here in the margin and just grab this little plus sign. You can come down here to 280 and create an alert. 297, 279, that's fine. 279.97. All right. Okay, so that's IBM. What else is looking good here? Clack, Applied Materials, Devon Energy. The energy stocks are catching a little bit of a bid. Range bound. Airlines, right. Thank you, Carl. Delta Airlines, flat. American Airlines, JBLU. These are all back down. All right, what's Taiwan Semi doing while I'm thinking about it? Back down again, Taiwan Semi. Damn it. Google. All right, Google's got something going here. Google got something going. All right, might break out for a new high of the day. Okay, can we take out yesterday's high? That would be key. If we can take out these highs on Google, I would say maybe some August or September options make sense. Okay, so this level right here.
President Trump is expressing his frustration this morning after an exchange of fire between the United States and Iran over the past 24 hours. President Trump writing on social media, Iran's military is a complete and total mess.
Yeah, really. What the hell are they thinking over there? You know, just a bunch of angry people from the ISRG, determined. I don't know. You got religious zealots. It's kind of hard to make sense.
Now, it's not clear what exactly the president intends to do militarily, but his
okay, so Google, we get through this level at 369. 370 would be perfect. If we get through 370, Google, let me just put an alert on Google as well. 370. 370. We take out 370, that'll be a buy.
The U.S. called its operation a proportional response to Iranian action, including the downing of a U.S. helicopter yesterday. Now, we also saw Iran say last night it had launched strikes in response to that, targeting a U.S. military facility in Jordan. And Kuwait said last night its air defenses were firing after Iran said it would target that.
Futures still grinding up. Futures.
Continuing, and it may continue through the
hedge flows are pointing lower. However,
the House is increasingly opposed
to Apple turning back up. Apple turning back up.
Energy inventories are a concern, and it's hard to imagine the administration having to wear.
Yeah, and you're at this point now, Carl, where you've got these questions of pain thresholds, right? Do the Iranians have a higher pain threshold than the United States, or does the United States have the higher pain threshold here? You've got this situation where both countries have decided, we're in this stalemate. We're going to call it a ceasefire. We're going to try to negotiate our way out of this. But in history, generally, you don't see many examples where somebody's been able to negotiate something at the negotiating table that they weren't able to win on the battlefield. And so it's going to require one side or the other making concessions here. And what we've seen psychologically and politically is that neither side has been willing to make those concessions, or at least enough concessions to get a deal over the finish line. And that's sort of where we are. And that's why you see this back and forth military action, because it's easier to do that than it is to make the concessions that are going to get to the deal, at least for now. The question is, how long can that persist?
I keep thinking about what you said, Eamon, in the very early days of the conflict, and that was that it does take two to tango. You can't just say the war's over without hearing from Iran, but increasingly now from Israel. What if the deal did come together in which they got some uranium or some labs and maybe a small payout? Is that something that Netanyahu would go along with?
Well, it's an open question, right, Carl? And you've seen this relationship between Netanyahu and Trump really strained in the past couple of weeks as Trump reportedly called and screamed at him. Then you saw both sides, including Netanyahu on our air with Sarah, saying, well, no, that's been patched over. We're good now. If the president of the United States is more willing to cut a deal than Netanyahu is.
Yeah, I believe half of what you see and nothing of what you hear. The media is just so, I don't know, man. They just can't watch it, that's for sure, unless you have to. Futures continue to rise, so we're scooting up against this 73.90 zone. Got a feeling there's some stops up here above 7,400, and we've got, of course, these levels over here, 0 day, that would have to scoot upward. We just need to see hedge flows turning up. Google's still pushing. Feels kind of sluggish today, doesn't it? Or is it my imagination? Feels sluggish today. All right, so GLW is building a little bit here. Won't be the first time I've taken something off on a stop and have it reverse. It's always easier with a stop the day after. Second guess. ARM, Intel. Intel's bouncing higher low now. Looking for another higher high in Intel. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 10 o'clock, 10:09 on the East Coast, Wednesday, June the 10th. Okay. Futures continue to climb. This is looking good here. We might start something here. Let's go S&P. All right, we'll watch this for a minute. S&P 500. Yeah, that looks good. Cerebrus is looking good.
So in general, with all these
Man,
companies,
that's word
right,
salad.
you think about this announcement, right? It just tells you that AI demand is really strong, and so it's pulling demand for all the names you just mentioned there. With Cerebrus, I think that they are really well positioned to sell into this
Spit it out.
for advanced inference.
He must be freaking out on camera. This guy is like, just get it out.
Where does that all fall around?
Talking about Cerebrus.
Because it does seem as if the street runs a little bit hot and cold. It's kind of like we gave NVIDIA credit for multiple years of continuing to be at the center of all this. So how are you viewing it right now?
I think NVIDIA is undervalued. I think it's
All right, so Alex Karp is coming up on Palantir, CEO on CNBC. Let's see what's Palantir doing this morning. Palantir down here at 132 again. Okay.
I think with NVIDIA, they are still the biggest beneficiary of AI. Things are so constrained.
The problem with going long here is you got 7,400 some major resistance levels just overhead. So if we flip to 7390, we'd be watching for 7,400, this level here on trace. We'd be looking for 7,400 right here to push a bit higher. So we're watching for that. Okay, so let's zoom in a little bit here. All right, hedge flows are starting to turn. See that? See it? Hedge flows starting to turn. 7,400 is immediate resistance. Looks like we're going to go above 7,390 right here. 7385. Okay. Looking good. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's just 10:12 a.m. And we're looking for S&P to get above 7390. This flip point. We touched the 50 EMA yesterday. What I'm thinking is we could push off of this level. And if we do, that's going to change the complexion of the rest of the day, you know, what we can do. All right, Cerebrus looking pretty good. We're up here near 2450, currently trading 24. Cerebrus, I did add at the dip yesterday on the dip. CBRS. Nice move here coming off the low. CBRS. I have a position in CBRX as well. CBRS, I have options that the deltas have increased incredibly. I bought it like at about an 8 delta. There were lottos, 4,9,500 for January. Ridiculous, I know, ridiculous trade, but that's up quite a bit actually. Let me see what that is. I might, you know what I'm going to do? I'm going to take the profits from this. I'll take the profits. Next time this inflates a little bit more, I'll take the profits from CBRS options and I'm going to roll it into CBRX shares. Okay. Looking good. NVIDIA looks like it wants to do something. NVIDIA. All right, we're right at the 50-day. You can see on the right, NVIDIA. All right, let's stick with S&P for a minute here. S&P, trying to push above this level.
Saw productivity pick up kind of commensurate during that period. We had strong employment growth in 1990s, almost 2.5 to 3% employment growth and strong real GDP growth. We don't have any of that today. We've got this one sector that's doing well, but it's not really bleeding out to other sectors of the economy. Ultimately, it will, but we got a real timing problem.
All right, futures pulling back a little bit.
You kind of said, I think that these
73.90 is resistance for now. 73.90, 7400. A doji. If we start to move lower, we can always come back and test the low of the day. Stay in a doji. Right now, I'm looking for this to continue higher. Okay, I'll come back to this in a second, I promise. Okay, so Google, watching Google, pushing the highs of the day. Google. All right, that just came back. Google. Looking at stocks that are trending. 3M. A lot of people looking at 3M. David was looking at 3M, pushing through the 200-day. We looked at it yesterday. I liked what I saw, along with Home Depot. Let's see. Nike was moving. Nike was moving as well. Still trying to push. Nike, Procter & Gamble, the defensive stocks. Kimberly-Clark, pushing higher. Walmart. Okay, Walmart still consolidating in this area. Costco. Okay. Coca-Cola, of course, that's on the watch list. Breaking higher. Coca-Cola. J&J, that's on the watch list as well. Pharmaceuticals. J&J, Merck, AbbVie, Abbott Labs, ABBB. Okay, looking for these to follow through. Abbott and AbbVie. Was it Biogen? Amgen. Okay, what's XPI doing? XPI. Okay, IBB. This is a risk-on asset. When it's rising, risk off when it's declining. Right now, it's kind of in a range, so it's sort of neutral signal. But biotechs are considered very risky, so risk on, risk off. Okay, depending on what's happening. IWM, same thing. IWM moving higher is bullish. Yesterday we got tricked. It looked like we were going to break higher and wound up the 10-year yield moved a bit higher. Now it's fading. So if the 10-year is still stuck in this range, so if you're trading small caps, it looks like day trades make the most sense. You know, when you get these changes in direction on the 10-year, you can trade these. When the 10-year drops off, the IWM should move higher. Bitcoin also a risky asset class. We want Bitcoin to continue to build off of this low that it put in this week and last. This low over here on the left is what I'm watching. Okay, 60,000. It briefly dipped below 60,000, took out some stops probably. Now we need to see a higher high in order to add back to IBIT. I took that position off because it wasn't working when it lost the 50-day. Also had some BITX, took that off. Same reason. Coinbase, that was looking interesting yesterday. It wound up closing on a long-legged doji. That needs to get above that 154, 165 level. 165. Coinbase. So that's Bitcoin. That's another risky asset class. We want to see crude oil back off. Okay, crude oil is still hanging in there. I believe the reason why it's not at highs is because, you had futures pushing up so quickly. And because the conflict sort of leveled off, it wasn't this constant bombardment every single day like it was back in February and March. It gave futures time to kind of fade a little bit and crude oil prices to back off. And we were at 396 at one point. We're down to 336, I think it was. 336 per gallon. It was 226, 260 or something like that before the conflict. So there's still 90 cents in there somewhere. If we can get that to back off, that would be a risk on asset, risk on signal, I should say. Future's still moving. We're just kind of grinding along here. All right. So the good thing is we got positive gamma, all this purple. We got this positive gamma overhead. Feels like it's getting sucked up into this area. Hedge flows are turning up. You got resistance at 7,400. So you don't really have a big trade on S&P at the moment, unless this changes dramatically. Realistically, we don't have a trade until we get back above 73.90. A trade in the sense of, everything's starting to move. With that in mind, with that mindset, let's take a look at the sectors and see what they're doing. You know what? Let's just go here. Let's go here and see what's okay. Energy is up the most. Energy followed by consumer staples. Retail. Okay, retail again. Huh, that's interesting. I didn't expect that. Retail TJ Maxx. TJ Maxx. Okay, that's pushing higher on the. Ooh, that looks really good. It's breaking out of a weekly base. Summertime is always active here in Myrtle Beach. I mean, the TJ Maxx store by us, just you can't get in there and get out of there in 45 minutes. You go in, you pick up a couple polo shirts, which is what I like to do. I wear them for a year. I donate the year-old shirts. I donate to Salvation Army or whatever. But I'm always going in there and buying a $20 Ralph Lauren polo shirt. Retails for $100. I buy it for $20. I wear it for the season. Every time I go in there during the summer, I go in, grab a couple of shirts. I know exactly what I want. Go to the line. And of course, the line is like wrapped around the store, but I don't mind because it's like $20 a shirt instead of I'm saving $80 a shirt basically. And yeah, so it's like really busy during the summer. So prices, I would think that we're going to continue to move higher. Let's see what some of the other retailers look like. Brother Bill's favorite, Casey's. Holy Toledo. I'd be surprised if Brother Bill's not jumping up and down in the trading room. Let me go take a look. Let me go take a look. What the hell happened? Oh, whoa. Casey's. Is that right? Is that the right symbol? Holy shit.
Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see.
What the hell happened with that? Wow. And he's not in the room today? Oh my gosh. And he's not in the room. Tell me. Oh my God. Don't you need to use his name in vain, but he's not in the room? There he is. There he is. Okay, cool. He was in there earlier. Okay, cool. Congrats. Okay, you can take your victory lap. I know you've been pumping it.
Trading at 419 bucks and change, but this has had a good run. This stock.
Oh boy.
Time now for the big picture, so let's welcome in Nate Peterson,
He's done for the day.
Yay.
That's funny, Andrew.
Obviously, we're seeing
Oh boy.
candy stripes today.
Oh, that's good. That's good. Happy for you, dude. Happy. All right, S&P continues to move higher. That made me laugh. All right, we're above 73.90. S&P moving above the risk pivot. Could be a big deal. 73.90.
Of course, the yield spike, 2 years hitting a 52-week high on that strong jobs report did not help. June seasonality, bearish. We've got, a SpaceX IPO on Friday that's coming up. We've got the first FOMC meeting with Warsh coming up next week. You add all that together in context.
Why can't Walmart do that? Let's see Walmart do it too. That'd be cool. All right, let's go see what Costco looks like. That's wild. Okay, Costco. It's funny. You look at a stock. Whenever I look at Tesla, I always think of Jennifer. I don't know if you guys know Jennifer, but she's been in the room for a while. I haven't seen her in a while. She's probably pretty busy, but Jennifer traded Tesla back in the day. I remember she held on a swing. It was 100-point swing. It was like, wow, that's really cool. And now, not to belittle that gain, but that took like, I don't know, 3 or 4 months to do. Nowadays, I mean, you get 200, 300, 400 points out of a stock like Micron in weeks. It's crazy. Or what was that one? Avis car. Remember that? What a dump that one took, right? And the reverse is true. 847 down to 200 in 2 weeks. 2 days, sorry, 2 days. What the hell happened there? Was a short covering rally or something? I'm sure there's people over here thinking it's going to do it again. That's wild. But certain stocks, like with Cayman. What's the name of that stock you're always looking at? GameStop, and what's the other one? Beyond Meat. Haven't seen you post about Beyond Meat in a while. What's that doing? Beyond Meat, BYND, BYND. Mondo, it's IWM. Paolo, it's usually the S&P. Frano, she's got a number of stocks, so I can't really zero in on one name with Frano. She's got a good diversification of stocks. Steven, he likes to trade Apple a lot. Apple. What else do you trade, Steven? Usually it's Apple. Jeff Sundog. Jeff, I know he talks a lot about Intel. Andrew, I can't pick you out. Is there any particular stock that you like to trade? But everybody in the trading room, generally, I remember that there are certain stocks that they like a lot. Like Brian, our insurance executive, he's always talking about all the insurance names. Of course, he posted a little while ago at 10 o'clock. Who else? David tends to post about Intel and Apple and a couple of other ones. David from Texas. Okay, so Stephen was talking about Intel this morning. All right, looks like Intel wants to go some more. Brother Bill usually is GE Aerospace, Casey's. GE Aerospace, Casey's. What else do you like to talk about? And Grover's usually the futures, NQ, mostly NQ, right? You trade NQ a lot, Grover, Brian.
A lot of people are turning their attention to that. You've got this lack of progress on the peace talks as well. It feels like the markets are suffering from.
Yeah, Frano's got, she's got such a diversification. She's like the flavor of the week.
When Trump accused Iran
When you get these sector rotations.
and you just wonder why.
And of course, Russell, everybody knows what Russell is.
And that is obviously when we've started
The major indices, it's always puts usually.
see that. So we've got
Anyway,
coming up.
kind of got sidetracked there. But every trader in the room generally has a few stocks that they really tune into a lot, tend to be their favorites. If you ever think about what your favorites are. With mine, it's usually the top 10 New York FANG components because I follow them all the time, whenever they're working.
Yeah, so Sam, to me, so the war situation.
I'm trying to think what my favorite stock is.
Back and forth in terms of a headline.
Well, right now it's Cerebras.
On and then attacks.
Right now it's Cerebras. I got to believe this company is going to do really, really well. I don't think people are really pricing in what this company has, the potential they have. You're buying at the low. You got a low pivot. The thing I like about IPOs is once you get a pivot, once you get pivots, the pivot high from the IPO, the pivot low right after the IPO, once you have that information, then you can start to plan around it. Build some positions. Like I said, I have a core portfolio, a core position in CBRS, and I'm also day trading in and out on some of it. But I could see this. I could see this stock beyond 500 by the end of the year. I have January 490, 500 call spreads. What I plan to do with those, they were like an 8 delta when I bought them. They were out of the money. It was ridiculous. But I saw that it was starting to turn. And I got the news that Kathy Woods, not that that's the best benchmark, but she started buying. So when Kathy starts to buy, other people start to pay attention. Other analysts might look at it and say, you know what? This is gone 3 weeks now from the IPO. Looks like it's time to start looking for a pivot. And institutions like to buy lows. They accumulate down here. And now I'm starting to think, okay, that core position, I want to start building up to about 1,000 shares. I'll day trade it with a few hundred or more. The CBRX, maybe a couple of thousand with that. CBRX, I don't think they have this yet, right? CBRX? No. Okay. CBRX. You can trade this intraday, hit it with a couple of thousand shares. Depending on the size of your portfolio, can make some nice intraday profits. But yeah, this thing long term, do a little bit of research, technology. It does have a tendency to move quite a bit intraday, so it does have intraday volatility.
Download the Schwab Network app and stream live coverage wherever you are. While others recap the news,
Depending on how large your portfolio is or small, I mean, maybe you buy a few shares and you just sit on it, forget about it, put it away for your kids. I have my son buy 20 shares. I think he's up to 25, 30 shares of, because he wants to buy other things too. 25, 30 shares of CBRX. I talked to him about why it makes good sense. Because if you had bought NVIDIA back when we first were looking at it, I mean, it was below $30 per share back in 2015 or whatever. Split adjusted, $30 per share. When we first started the trading room, we had the foresight, no idea that it would turn into the beast that it is now. But $33 per share, I think it went up to what was the highest price for NVIDIA? NVIDIA highest prices split adjusted. Split adjusted. pre-split. Highest prices pre-split. All right. You're probably posting in the room already. Highest prices pre-split was $1,200. So we went from $33 to $1,200. So knowing that, and you buy something with the prospect, okay, I'm going to put $500, $1,000 into this, and I'm just going to like forget about it. Just going to forget about it. And, put it aside for my kids. Imagine you did that with 1,000 shares of NVIDIA in 2016 and had it split and do whatever else with it. So have a core position and day trade around it. One day we're going to wake up and this thing is going to be double where it is right now. No doubt in my mind. Let's see. Intel looks like it wants to take another path to the upside. Let's see what S&P is doing. Futures continue to grind along. We're right at 73.90. Haven't been able to push through this level. The mindset that I was just discussing with Cerebras versus NVIDIA, back when I first started investing, I had that mindset of just, buy and hold. I bought IBM back in 1987, December. That was my first trade. It really wasn't a trade. It was guy from Shearson Lehman called me up on the phone. I guess he was cold calling. We've all seen the movies where they make these guys cold call the big pits they have in these brokerage firms. So Shearson Lehman guy calls me up and says, you want to buy some. First he said, you don't have any money to invest. I don't know how to get the list or whatever, but I just started working for a developer in New Jersey as an architect. Came up from LSU in '87. Get this cold call and he says, do you have any money to invest? Long story short, he got me into NVIDIA. Into IBM. That was my first investment. I had been reading about investing prior to that. I read a really good book while we're waiting for the markets. I read a really good book I would recommend summer reading if you're interested, by James Stewart. By Den of Thieves by James Stewart. I remember James Stewart. This is a really good book. Okay, it's about Ivan Boesky and Michael Milliken. Okay, Dennis Levine, insider trading in the bond market, the junk bond market in particular, which is how I got to know my friend that works for UBS, because he was they were dealing with junk bonds as well. And learned a lot from my friend as well. But this book is really good. A lot of intrigue. This is what got me really interested in investing. And over the years, just putting money aside, forgetting about it, was probably the best decision I ever made. That my father told me a long time ago. Save $10 a week. If you can't save $10 a week, there's something wrong, right? Now I guess you need to save at least $25, $50 a week. Watching the S&P 500 right here. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Wednesday, June the 10th, 10:38 a.m. Just sharing stories with you while we're waiting for the markets. Intel's on the move here. Intel's starting to go. I'd love one day to meet, like in Vegas or something like that, some kind of get together where we all can share stories and, how we got into investing. And I get to hear what you guys have to say instead of me talking all the time. Mondo said I talk too much as it is. Just joking, of course. But I do. I talk a lot. I like to talk a lot. I like to tell you everything that I want to say before I hear what you have to say. Paraphrasing Bill Burr, the comedian. I love that guy. Yeah, comedy. You know, you get too serious with life. You really got to tune into comedy. You know, take the seriousness out and turn off social media. That'll make you crazy. Social media will absolutely make you crazy. There's nothing good out there. Just absolutely nothing good. CBRS is starting to push here. The 15-minute on the left. Let me go to the 3-minute chart. Okay, this is starting to push. Social media. My son's always chastising me. Papa, stop scrolling. That's pretty interesting for a 15-year-old to tell his father to stop scrolling. It's like a thing with them. With his age group, he told me that they sit around, they don't like sit on their phones. They actually do things together. Like yesterday, they were at Top Golf. All of his friends, no cell phones. They were just playing golf, you know, hitting golf balls and having a good time with the father's credit card. But that's what we used to do as kids. You know, we go outside and play all day. Football, basketball, softball, baseball, whatever, you know. Here we are at CBRS. This is looking pretty good right here. If you're thinking about starting a position in CBRS, put a stop underneath VWAP maybe, or underneath this price action right here. Okay, I'm going to post this on social media. The only thing I do with social media when I'm not scrolling is, post, obviously. Okay. All right, we're breaking out here. CBRS is breaking out.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day.
Oh, CBRS.
To the earliest analyst calls, get your watch list ready. 8 a.m. Eastern, Morning Movers only on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
All right, let's see.
Welcome back to Morning Trade Live. I'm Sam Bonus, coming to you live from the New York Stock Exchange. It's time now today for a look at the international stories impacting markets right now. We are joined by AJ Kaling, who's the Director of International Trading, Charles Schwab. AJ, always nice to see you. Thanks so much for your time. Let's start with Asia, because obviously that's where all the attention and the focus has been, particularly on South Korean stocks. I mean, you've got Goldman, looking at a 12,000 year-end target on the cost sphere. A lot of that has been concentrated in just two names. We're seeing SK Hynix reportedly now looking for an ADR here as soon as August. But what stood out to me is that foreigners have been net sellers of Korean stocks. I think that's the head scratcher. Just walk us through what clients are saying, what you're seeing as far as the flows right now.
Well, you're right, Sam. Good morning. And it's interesting, the volatility that we've experienced in the Kospi. It seems like every day it's a 5% swing. I think last night we saw 4.5%, so it's actually a relatively calm day. I think it's probably driven by a lot of what you just mentioned there, is that there is the bulls battling the bears there. Of course, it's the battle.
Really? Okay. That's nice to know. Okay.
It'd just be gravy for a minute. Yeah, exactly. So we'll see how that plays out. All right, we got the SpaceX IPO. That is the big news. Like a corollary to that is, what does Elon Musk do with the rest of the stuff that he owns? And most notably Tesla and all the stuff that's in Tesla. What's the deal with that? I don't know. A lot of folks, I think, are suspecting that at some point, if nothing else, they'll just kind of roll it up and run to be there under SpaceX. Steve Mann,
DOT may resume in less than a minute.
All these investors and analysts will be involved. Hey, Steve, you talk to Tesla investors. Is there an expectation that at some point Elon Musk and SpaceX will buy in
WCT.
Tesla? It really depends on the timeline you're talking about. I mean, you can speculate. There's a lot of WCT. Probably many years away from now that for for example, Tesla vehicles could be riding on, driving on, the surface of Mars, or the boring company is, drilling tunnels in Mars for colonization. But, that's very, very far away. We probably
Okay.
Tesla really considering on a consistent meaningful way is actually the battery storage business. And even that it's a small chunk of Tesla's profit. So we don't really see an imminent or near-term synergy for a merger.
Okay, so if there were to be a merger or roll-up, or whatever you want to call it, is that an admission that one company is not really performing, that it would need the other to help prop it up?
I wouldn't necessarily say that. I think Elon really has a long-term view on what he wants to do, specifically space exploration. And that's where, Tesla could really contribute. Like I was saying earlier, we can have cars
WCT. SMCZ.
WCT. I mean, you can see all the possibilities in both energy and vehicle, but I think a lot of those things need to be proven out first, and I think that's what we're trying to do.
WCT.
First. And secondly, Tesla really the focus is really on the global.
Okay, nice little pop. Starting to pull back in. What else is going on here? All right, futures pulling back. Not surprising. Futures are fading from 73.90. Okay, so what I'm thinking is Doji. Best case scenario right now, we pop higher, obviously. Next plan B would be a Doji just stays inside this price action. Worst case scenario, obviously, it drops off and tests yesterday's low or the 50-day moving average. It tested the 50 EMA yesterday and bounced the S&P. So it's really hard to say what's going to happen. We got to get above 73.90. Everything else is day trades for now. Okay, Palantir did what's his name come on? Palantir did Alex Karp come on? I don't know if he was on this morning yet. I know he was supposed to come up. So Palantir is moving off the low right now.
Are fighting it out in the market, and again, it doesn't mean that we're headed for a bear. I don't see that. The trends have not broken, but it does.
All right, we're losing VWAP now. S&P losing VWAP.
We're seeing the beginning of that now, and for investors, what to look for. I think if you can get through the summer, historically October in a midterm election year through the next year is a very strong seasonally. So I think we're just looking at a choppy summer.
I mean, I keep looking at Mike Wilson's note this morning again, Jim. I mean, looking at just EPS for the S&P, I'm trying to think. He's at 339, 380 next year, 429 for 2028. I mean, the earnings prowess that he would argue will support the market.
Okay, what's Axon doing? Axon.
Everybody at the beginning of this year was talking about, hey, we can't go much higher.
Okay, a little bounce on Axon, looking for that higher low. Looking for the phase 2 to start, the markup. RSI turning. All right, need MACD and stochastic to turn up and take out the earlier highs of the week. And last week, 515.80. Axon, body cams, police, equipment, military. They use their equipment too. Broadcom, Walmart.
Also, deregulation is helping the market as well. If we could get some clarity on interest rates, I think this market could see a big move up in the fall and beyond. But right now, there's a lot of uncertainty, particularly with what happens in the straits, that could keep us choppy for a while. Not to mention the supply and demand situation for stocks right now and the liquidity situation. That's it's something we haven't seen for the last 3 years.
Yeah, it's true, Jim. Although, you know, it reminds me of
Tesla's still drifting lower.
All that time, and I've argued this was a placebo. We thought that was why the market was partially going up, and it didn't. It's kind of like in 2021. Oh, the Nasdaq's ripping higher.
All right, so yeah. What's Zscaler doing? Zscaler. All right, those are bouncing. Palo Alto, CrowdStrike. Okay, those are bouncing today. Again, what's working? Dow Jones. Let's look at the S&P. Casey's up $118. Congratulations to Brother Bill. Insight. Robinhood. Devon Energy. LITE. Campbell's Soup. Wow. Campbell's Soup is rocking and rolling.
These are real companies. These are real spins that are coming in, and it's going to create opportunities for investors. And investors need to look around on this because some of the stocks that they might be looking at aren't what they're looking at. Material stocks, and we're seeing natural resources in heavy demand around the world. People are fighting wars over natural resources. These are some great places.
They always have been. Look at Japan attacking Pearl Harbor. Always about resources, natural resources.
Obviously, kind of a heavy revolution, not a light one. Jim, thank you very much for the time this morning. Talk to you again soon.
Get Campbell's Soup.
What the options market is signaling about Oracle earnings coming tonight.
Campbell's Soup big.
Later on, don't miss a conversation with the founder of Torture Management, Philippe Levant, including a warning.
Wow, big move there on Campbell's Soup.
Today we have AI, and AI seems to be such a big trend. Obviously, yes, we are a little bit at the center of everything, but last time I felt at the center of everything was in 1999. So I'm a little bit worried. I don't enjoy feeling at the center of everything.
DOGZ may resume in less than a minute. APPS.
Okay.
EFRD may resume in less than a minute. CRMT may resume in less than a minute.
Okay, Campbell's Soup looks really good here. Really good. Campbell's. Big mover there. Campbell's. KLAC. Applied Materials. Baxter. That's breaking out above the 200-day. Baxter. Let's just take a look at earnings on Baxter. Baxter International. Okay, so they have earnings again July 30th. Last time they beat. Okay, healthcare. All right, so healthcare stock's been doing pretty good, right? Healthcare, pharmaceuticals. Let's see. J&J Pharmaceuticals. UNHHUM. What's DaVita? DaVita Healthcare. I forget the symbol. DaVita Healthcare. DVA. All right, DVA. DaVita Healthcare. Squeeze. Was it Centene? CNC, right? Centene. That's a highs. All right. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's 10:55. Casey's, Insight, Robinhood. Let's see what the mid cap. Let's look at the NYSE. Lemonade coming off the low. All right, so maybe something here. Lemonade starting to show signs. LMND. Lemonade. Flat base. Stirring. Lemonade. Okay, that one's looks like this is stirring a bit. Flat base. Let's see what the weekly looks like. Weekly.
Ahead of Oracle results later today. Let's get over to Oliver Rennick at SIBO in Chicago and look at what the options market is signaling. Oliver.
Hey, Mike, Oracle might just be the event of the week. Options traders are currently betting it'll swing a monster 12% after its report. That's the biggest implied move for Oracle going into an earnings since March 2020. And yet the most popular contract by volume this morning is betting on the over. It's the 250 strike call expiring Friday. That adds pressure to what is already a crucial test by virtue of Oracle's size alone. It's a $600 billion market cap giant that's one of
Holy
the
shit.
leaders of the software group, despite still being well off its record high from September. It's the biggest weighting in the popular IGV software sector fund and leading that ETF by 15 percentage points on the year. How this stock performs will likely be the determining factor for whether the streak of bullish call buying we've seen during this group's comeback will pay off further. Calls in IGV are outpacing puts by more than 3-1 this morning, with twice as many
IWM.
calls bought versus puts, but at least as many calls sold as traders approach the group with a bit more caution after a 13% reversal since this month began. What's fascinating about Oracle specifically is that we've been noticing bullish options flow in the stock as early as mid-May, and that's continuing right up into this report. There's almost twice as many calls trading than puts, and 70 million of the 90 million traded this morning, and Oracle is tied to calls, guys.
Big event tonight, as you point out, Oliver. Thanks, Oliver Rennick, watching Oracle after the bell. When we come back, former NEC Director Gary Cohn's with us. We'll get his reaction to this morning's CPI print, talk about how possible re-escalation in the Middle East could impact the markets as we're rolling a little bit here. Dow now down 480 as the S&P.
Yeah, the 50 EMA is what we tested yesterday.
Since 2023. Stay with us.
Low tick alert minus 800.
Okay, looks like people are going to start betting on downside. All right, what's VIX doing? VIX. All right.
JLHL halted. HXHRC may rest in 10 seconds.
All right, looks like we're trying to produce a bear flag or back to break even on the day. All right, let me look at some spider puts for. Okay, we're starting to bounce. Okay, I don't like buying puts at the low of the day, so I'd like to see a little bounce back towards the highs here. SPY. Okay, so yesterday's low, a little bit down there a bit. This morning's low, we just got close to this morning's low, so we thought maybe a doji would keep us in this area. Hedge flows turning back down. Okay, we've got some pretty big levels here. You can see on 0 day, right where we are right now, 73.40. Got a 96 percentile at 7,300.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli here at Post 9 of the New York Stock Exchange. Sarah Eisen will be here in a moment. Tech volatility this morning. Trump's Iran threat. Inflation hitting a 3-year high. We're going to break down all the macro risks for investors with former NEC Director Gary Cohn.
Plus, a rare interview with Coatue founder and portfolio manager Philippe Lafont. Find out why he thinks index funds have corrupted and warped the public markets and why he calls BlackRock, quote, Darth Vader.
And another rare interview. Sarah sitting down with Valpo CEO Seth Klarman this morning. We'll hear why he thinks the market is showing aspects of a bubble. That said, today, again,
Okay, so they're starting to talk bubble again.
2% swings in various sectors. S&P once again back to 73.30, which has turned out to be kind of an interesting level last few days.
73.30 was the May low, so it was this kind of potential tripwire level we've been watching. It very unsettled action under the surface. As much as breadth has been positive, people try to broaden. This is sometimes, as I say, what a broadening market looks and feels like. We're going to start this morning with the CPI report that we got a couple hours ago. Steve Leisman joins us now with that. Hi, Steve.
Hey, Mike. Yeah, the hot inflation report this morning meeting heated rhetoric from President Trump about the Iran conflict that suggests it is no closer to resolution. Headline coming in at 0.5%. That's a tick down from where it was the prior month, but still fairly elevated.
All right, Microsoft, Apple starting to bounce.
Year, up from 3.8%. That's the worst in September 2023. Core rate a little bit better than expected, up to 0.2%, but still the core is elevated on the year-over-year.
Okay, hedge flows look like it's trying to turn.
President Trump, meanwhile, he said this morning, quote, they've taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price. Why does that matter? Well, oil prices push higher, and for economists, a longer conflict means higher prices for longer to incorporate into their forecast. Gregory Dago saying the longer the Middle East conflict persists, the broader and more persistent inflationary pressures are likely to become. For now,
Palantir grinding a bit higher. Let's see how many stocks are advancing. Let's check that out. 250 stocks advancing. So it's 50-50 right now. 50-50 on the S&P 500 advancing versus declining.
Pretty elevated at 3.1, and core services. That's something the Fed's going to watch. Ex-rent up 3.7%.
Up down volume. Survey says.
Of service sector inflation, along with a drop in goods prices, to get inflation back to anything resembling price.
Up down volume is 1-to-1. So doji it is. Doji day. A little bit higher on the Qs. 1.8 down volume on the Qs. 1-to-1 on the SPY. 1-to-1 on the Nasdaq Composite. That's 2,700 stocks on the composite. 1-to-1 on the NYSE. When in doubt, we always want to check the NYSE. Always check the NYSE and see what that's saying. Okay, that's neutral. NYSE is not forecasting a drop, okay? 2,400 components, not showing a reason to think crash. 1-to-1.
The market is saying, you know what? Inflation doesn't go away just if oil recedes. It's going to take more. There's also knock-on effects that maybe we should talk about, which is what's going to happen to food prices next year because of the elevated chemical and fertilizer and other costs that are out there.
Long tail in food. That's what one argument has been for a couple of months. Steve, thanks. We'll talk in a bit. Steve Leisman this morning, very busy. For more on how CPI is affecting markets today, let's bring in HSBC Chief Multi-Asset Strategist Max Kettner. Talk a little bit more about the data today, Max. There is a notion out of the Journal that the increase in pricing is not, it's changed character, Nick Timmeros argues. It's no longer about tariffs and goods. It's about the wealth effect, allowing producers to pass on prices, and that's going to make it harder to derail.
Yeah, good morning, and thanks for having me. Look, I don't think actually today's inflation report is this big game changer. Let's remember that when we headed into those reports, things like the Fed's nowcast, the Cleveland Fed's CPI nowcast, I think did see it at 4.2%. So we're bang on in line with those nowcasts. We also had the monthly CPI swaps, you know, the fixed things, seeing it at 4.2%. So that was pretty much in line. I don't think actually what you just said, that's not necessarily something bearish. That just means for margins, it's actually pretty good. Let's face it, if we got an inflation that is underlying maybe somewhere between 2.5% to 3%, sure, that means that perhaps every now and then we've got a bit of a scare in yields and treasury yields. But overall, that's actually pretty good because it helps us with debt. It helps us with perhaps over time inflating away a little bit of the government debt. It does certainly also help margins, and it helps revenue and nominal revenues grow. So, and for central banks, it's also less of a headache. You know, if there's any sort of exogenous shock coming, then that doesn't mean that they immediately have to talk about, like in the 2010s, about things like the zero lower bounds or about, oh God, do we have to do the 7th round of QE? I stopped counting, you know, what round we were on last. You know, that's actually pretty good, right? So I don't think this is the big game changer. Overall, I looked at this, I'm like, you know what? That probably means we're getting into the FOMC next week.
All right, he had as much coffee as I have, I guess.
But overall, it's pretty much wait and see. I think that hawkish repricing that we had in the last couple of weeks, that's probably enough.
Yeah, and Max, honestly, the market has been able to kind of allow the macro to kind of stay to the side to a fair degree. We got this high nominal growth economy. CapEx is raging. Jobs firmed up. That's all great. Yields have not gotten escape velocity. But now the market's preoccupied with this kind of treacherous rotation, whatever you think is going on, the momentum unwind, whether AI hardware as a theme got overplayed in the short term. I wonder how you see things more tactically here.
Yeah, I think it's probably very tactically over 6 trading sessions that we need.
All right, let's look at the NASDAQ composite. COMPQ, the NASDAQ composite, about 2,700 stocks. It is fading into yesterday's lows, that wick. All right, so the 50-day is right there. That's the 50 EMA, I believe, right? I changed that to the 50 EMA. Simple. All right, so that's a simple. So the NASDAQ did get down to the SMA. Okay, that's interesting.
I think those are the sorts of dips that you want to buy now, because I don't think that they will go in next week and will create a sort of Jay Powell 2022 Jackson Hole moment where they will suddenly say, well, you know what, 6 weeks ago we were saying bias, but now suddenly we're saying we're really serious about bringing inflation to exactly 2%, and we're going to take away the Fed all of a sudden. I think that's pretty unlikely. And that already should bring rates all a bit down. That should calm the nerves a little bit. And that should then allow really the market to really breathe a bit of a sigh of relief in the next week or two.
The other aspect that's getting so much notice, as you know, is equity issuance. Looking at some reports out today saying it's not going to derail the market. It's as a percent of the Russell 3000, it's kind of in line with long-term averages. I would assume that's your view.
Yeah, absolutely, Carl. You guessed it right. That is definitely our view. I think there's maybe a little bit too much scare. Again, that's what we're probably going to get through over the next week. I would actually say, when you look at the equity issuance, one thing that is underestimated is your sentiment chart. If really the SpaceX IPO does turn out to be successful, and we are then going to see a sort of over the next couple of days, we're seeing stocks not really selling off, then you know what, we can genuinely say $1 trillion IPOs are the new normal. You know, billions sort of feel like, I don't even know what billions are anymore, right? Brilliant is the new measure. And that, you know, from a sentiment perspective, let's face it, that's super positive. One thing that is, I think, underestimated as well is there's a lot of wealth that is wrapped into those private assets. Because obviously previously we've had companies that are going.
Okay, Intel did pull back as well.
Trapping that wealth. I'm not really worried about liquidity because, on the other hand, there is a lot of wealth that is now being untrapped that is actually liquidity coming back into the system. And again, that should be a bit positive.
Yeah, I think 4,000 millionaires on SpaceX alone, according to some estimates, and that money's going to get spent somewhere. Max, we'll see how much of it flows back into markets. Always a good gut check with you. Talk soon. Max Kendrick.
Thank you.
Also sounds like public investors giving exit liquidity to lots of folks.
Okay, SPY.
For a while. All right, coming up, a rare conversation with Co2 founder Philippe Lafont, why he's criticizing large funds like BlackRock and major indices, plus his take on investment.
Feels heavy. Markets do feel heavy for sure. Maybe some put exposure makes sense. Okay. Okay. SPY.
CRMT may resume in less than a minute. DSY may resume in less than a minute. HIBS.
RDT.
RK may res in 10 seconds.
WCT.
RTO.
All right, we are pushing a bit lower now.
IREZ. SSG. UPIX. CRMT may res in 10 seconds. OXS. DSY may res in 10 seconds. RK halted to the upside. SG.
All right, I did buy some 730, 725 put spreads on the SPY, 730, 725 put spreads just in case. I don't like buying at the low of the day, but it looks like we're not going to hold this level. 730, 725 for Friday. Just a little hedge. The rest of everything else looks okay. 730, 725 for Friday. SPY put spread. 730, 725 Friday. Put spread. Okay, let's watch the SPY here. SPY. Okay, 730, 725. S&P is down just shy of 30 points. Let's see the futures. Yep. All right, I'm going to take a 2-minute break. I'll be right back. Got support right here at 7,300.
Really straightforward. Look, $7 billion in equity financing, and most of those orders are coming in 2027, which starts in July. And the way I'm calculating it is like 30 billion of that comes in the second half of this year. AI servers, right? And these deals are really, really expensive. So if you think about it from this standpoint, a typical AI server deal can range anywhere between $1 billion to $5 billion each. So we're talking about a handful of deals that they're trying to fulfill. And look, they only have $1 billion in gross cash, and they really need the cash to buy the GPU to build those deals.
SSG. SMCZ.
Yeah, look, hardware margins are pretty awful, and AI server margins are probably one of the worst in the industry, primarily because you're selling in large scale and you have very little control in terms of GPU pricing. I will tell you, and I'm going to get a little more into here, is that there is part of the sale through something that they sell called DCBVS, right? And that's a margin accretive business. Now, conditions of gross margin around 8.2, 8.3% for the next year. If they can get a half of 50 bits on gross margin, it's about $1 interest accretion. If they're able to get $60 billion in sales, it's a $50 billion sales. So, look, this is why I think this could be ultimately positive over the long term, even though shareholders are going right now. No. Look, we've been joking around on this program quite a few times. You got to get Bell, right? And Michael Bell is trillion on the AI server side. $6 billion in AI server contracts for this year, and I think it's actually $75 billion next year. And that's really driven by that supermicro and the demand side of supermicro, because we're only one of two supermicros in the US that can provide that level of scale for AI servers.
Short-term gain, long-term gain. HXHX. HXHX. GCDT.
TZA.
VIBK. VSMA.
SSG.
HWH.
TCS. SQQQ. GPI resume in less than a minute. SOSS.
Fixed income portfolio manager, she's at JP Morgan Asset Management. Yes. She's in the building. Yes, she has a great view. On markets here. Inflation coming in.
CRTALC in less than a minute. HCA resume in less than a minute. IRZ. SOSS. UPIX. seconds. HCAI may rest in 10 seconds.
SNBR. CPOP. GLE. VSME. CIIT. CRMT.
ENRD.
ENRD. SNBR.
KNRK may resume in less than a minute.
CPOP. GLE. CIIT.
ENRD halted down.
SNBR. GLE. CIIT.
KNRK may rest in 10 seconds.
SNBR. GLE. CIIT. KMRK. CPOP.
KNRK halted to the upside.
KMRK.
KNRK.
DS1.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Matt Piper. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. They get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. U.S. inflation accelerated again in May as the Iran war pushed up energy prices. The core CPI, which excludes food and energy, increased 0.2% from April and 2.9% from a year earlier. That right now has stocks down this hour. The Dow is down more than 1%, down 550 points. The Nasdaq is also down more than 1%. The S&P is down 0.8%. We're down 65 points. The Bloomberg Dollar Spot Index is down 0.1%. Two-year yield near flat at 4.11. The 10-year is flat at 4.52. Well, that inflation report will likely be a headache for the Federal Reserve, which will make an interest rate decision next week. Economists Bloomberg spoke to say they see volatility over the summer after this report, with lots of uncertainty around the midterms and a new Fed chair that will get challenged on which way to go. Let's take a look at oil. The Brent right now is at just under $93 a barrel. Thank you. There it is. WTI at $90 a barrel. Thank you, Paul. My eyes were not great right now. Well, no need for gas in these things. Have you guys been in the wake of progress?
All right, a little bounce so far.
It's rebel taxi fleet, all in just 3 Texas cities. That's after Elon Musk said his company would have autonomous ride-hailing about half the population of the U.S.
Futures are starting to bounce. Futures are bouncing. All right, let's look at IWM. Starting to bounce. IWM. IWM starting to bounce. Looks like a long-legged doji again today. We had very similar experience yesterday, a little bit more volatility. Stocks are hanging in there for the most part.
I mean, we saw the inflation print today. There is no wiggle room for the Fed to lower rates anytime soon. Is that what you're saying?
Yes, I think they're going to have to drop their easy buys next week, most likely. I think the market already priced that. So I agree with you that it's hard. It will be
For
a
SK
very
Hynix,
hard.
according to Asia media today, are pushing through price increases, and that's also why Nvidia is one of the biggest beneficiaries. Most of based platforms, especially for the likes of Supermicro. And the race for capital isn't limited to server markets. Merit Securities analyst Kim Sung-woo says SK Hynix could list in the U.S. as soon as August, with SEC approval potentially coming as early as this month. That's where Reuters got the headline from this particular analyst. But I reached out to SK Hynix today, and they tell me it's sticking. They are sticking with their original position. It plans to issue ADRs within 2026, but the size and timing have not yet been decided. So whether it's Alphabet raising money to build more AI compute, Supermicro raising money to buy components, or SK Hynix, a memory maker from South Korea looking to access U.S. capital markets, the common theme is the same. AI is getting more expensive, and companies across the ecosystem are looking for new ways to fund the next phase of growth.
Christina, thanks so much. All right, after the break, former NEC Director Gary Cohn is with us on this morning's CPI print. Inflation climbing about 4% for the first time in 3 years. Squawk on the street. I'll be right back.
It's a good play. Paul likes to think he can hang out comfortably with 452 into 10, but I say duration risk. What's your view?
We do see some value in duration for a couple of reasons. To your point, it's near the upper end of the range. I think the Fed is extremely credible. I think they're independent.
Going across the low is the conventional method here, but you could also duplicate it and match it up with the highs. Oftentimes they match up reasonably well. Certainly not saying it's going to every time, but it can give you a set of boundaries to keep an eye on here. We did find 219.16 was the high point here. Now we've started to have a bit of breakdown. So kind of a similar thing that's some interesting tension in this chart as our last one. You could say, well, if I had a bullish outlook, this could be, again, that bull flag or bull pennant type of behavior here. We would be looking for a break above those initial highs. If you did have more of a bearish outlook and you think things are kind of fizzling out here, then you could be saying, well, we had these highs around 203 to 205 roughly. That was a short stopping point in our rally. And then our range bound area really stands out as this consolidative point between about 189 to 194. So our moving averages in this case, again, similar picture. We're between our 5 and 21 day EMAs. Those come in at 210 and 204 roughly respectively. Quarterly EMA 190, 137 in gold there. Also a bit further to the downside could be a supportive point if we were to have a fall apart situation here. RSI out of the overbought area, approaching 50 midline once more, making new relative lows right along with price here. So not really anything standing out from a divergent standpoint. Our volume profile study shows we had a smaller node here, 210 to 215, but we're falling below that area. There's another little pocket of activity here around 200, but the most notable one really kind of predictably matches up with our range between about 188 to 193 in this case. So that's what really stands out here from this volume trading perspective.
Yeah, as we look at Morgan Stanley today, trading down about 1% on a third. Financials overall pretty much flat so far on the session. Don, really appreciate you being with us for Big Three. Always love you bringing your picks and having three little bears for us today. That's Don Kaufman and, of course, Rick Duquette, our lead market technician, for always breaking down the technicals for us. Coming up, we are going to spotlight the streaming space and what's in store for the Paramount Warner Brothers merger. Seth Shatner will be joining us to examine the potential pitfalls and legal challenges. Trading 360 will be right back. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I think there's some of that happening. Now, the equity struggles are still concentrated. It's really driven by, I think, the tech names that had a really hot run. So I think that's why you might say, well, is this symptomatic of a broader risk off? So far, it is tech driven. I think it just makes people think maybe it's a balance. Something that gives you income, particularly if you have these growth sectors. I think where we see a lot more inflows is if the sell-off rises beyond just debt. If this starts to be people concerned about consumer, and they start looking at how concentrated everybody's equity position is in terms of
Welcome back. I made my way back down to the New York Stock Exchange from Palantir to talk about inflation because this morning's headline print did come in above 4% for the first time in 3 years, 4.2%. Let's bring in Gary Cohn, Vice Chairman of IBM, former Director of the National Economic Council. Gary, it was a pleasure. Welcome.
Thanks for having me.
So how big of an inflation problem do we have here?
Well, look, we're 4.2%, which in itself is a problem. But then when you take the other side of the equation, which is wages are not keeping up with inflation. So we are losing purchasing power in the country. We've been talking about for the last couple of years the K-shaped economy. Obviously, the top side of the K continues to do well. There's data out there that looks like in the consumption patterns that the top Americans are consuming over 50% of what's being consumed, and the bottom Americans, which is the vast majority, 80+% of Americans, are losing consumptive ability every day. So as prices go up and wages don't keep up, they're losing the ability to purchase. And I think we have to think seriously about that and what it means.
And what do you do about that?
Look, what do you do about it? It's obviously not an easy solution.
Does the Fed raise rates?
Well, look, historically, the Fed would look at this as an opportunity to raise rates and potentially slow down the inflation, slow down growth in the economy.
But then
I don't think we're at a time right now where the Fed is going to raise rates. I think the Fed is on hold. I think we will see some interesting output from the Fed. I think that the Kevin Warsh Fed will look different than the Powell Fed. I think we will see less forward projections. I think we'll see less data coming out of the Fed. I think that Kevin will try and work the balance sheet down over time. But on pure interest rate policy, he's pretty locked into where the market is today. And I think they're locked in almost for the rest of the year here.
You say that about the consumer, and yet, I mean, part of the story has been resilience of the consumer. I know we've seen the savings rate go down, but if you listen to companies on earnings, and I highlight a lot of them right here, I mean, nobody's talking about a big deterioration. I mean, I shouldn't say nobody.
They say the consumer runs out of money.
Kraft, okay, fine. Kraft Heinz.
Walmart says they're self-rationing gasoline.
Because nobody wants to buy Philadelphia cream cheese, but mostly across sectors.
I just bought Philadelphia cream cheese this morning. What are you talking about?
The consumer has been doing okay. Remember, the consumer got a windfall tax. So refund checks were dramatically higher than people thought they were going to be. That money has gone through the system. Look, we do have jobs. The most interesting part of this whole equation, and I always go back to the JOLTS report because I'm JOLTS obsessed. But if you look at the JOLTS report, we brought on about an extra 750,000 new job openings last month. So there's not a problem of work. Our unemployment rate stays steady at about 4.2%, but there is work to be had in this country. So to the extent the consumer needs to go out and consume, they can go out and work. What's troubling in those jobs numbers, and I don't want to spend the whole morning on that, is our participation rate does not go back up. We need people to re-enter the workforce. We need people to take the jobs that are available. And as we talked about before, AI is going to force some job retraining in this country. But there are going to continue to be jobs. This massive layoff wave that people want to talk about with AI, it's not happening so far. Maybe it's going to happen, but at this point, all of the data shows that there's a strong employment picture in the United States. So people that want to work can go work. There is some consumptive power, but you're losing consumptive power. If wages are going up at 3.7% and goods are going up at 4.2%, I think you're losing 50 basis points of purchasing power, which means people are being forced to make those decisions. Whether it's cream cheese or whether it's Nikes or whether it's going on a trip or whether it's going out to dinner to McDonald's, we're seeing it in certain segments of the economy. We are seeing the loss of purchasing power.
You want to help us get through this week? And whether or not, and looking at a chart here of equity issuance and whether or not it's going to derail the bull market, Goldman says no. But how important is this week?
I think we're at a seminal moment to some extent. We've got companies that have funded themselves in the private market for the last 5 to 10 years that are now at $1 trillion plus valuations that are deciding to tap public markets. Now, we could ask why. We could be cynical. We could say they're tapping public markets because private markets have decided that the valuation is too high and they're not willing to put more capital into these companies. I think there is some of that. You have to assume there's some of that. No one really yearns to be public for the sake of being public. There are extra burdens on being public. If you're going to use your currency, if you're going to use your equity to go buy another company, I understand why you would want a currency to go out and buy another company. If you need to give your employees liquidity, I get that. But most of these private companies have been private for so long, they have figured out ways to liquefy their employees during stock retenders. So there is something driving this public wave, and to me, it seems to me that it's somewhat like valuation. Even someone like Google last week, we forget that Google was in the market last week for $50 billion. $50 billion. You put on top of that SpaceX this week for $75. That's $125 billion of new capital that has to come into the equity market. Remember, this is new capital. Even if I sell something that I own today to go buy SpaceX, someone has to buy that something from me. So it's not like we're recirculating dollars. We have to attract new capital into the market. And I think it's getting more and more difficult to attract new capital in the market. Take that on top of the $200+ billion of debt financing that's gone into data centers. I think the question is, are we at a shift in paradigms? So in the last 20 years, we've lived through a bunch of paradigms. Go back to the early 2000s. We were the dot-com era. Dot-com era came, it went. We went from dot-com era, we went to BRICS. Everyone had to have emerging markets, and they had to have commodity companies. We went from BRICS to FANG. We went from FANG to Max 7. Now, I would say FANG to Max 7 was sort of a morphine. We took a company out, we added a few in, so we got to the Max 7. The question is 2027, 2028, are we going to still be talking about the Max 7? I don't know. I think we should think about that. The data center component and the AI component of what's driving Max 7 is just extraordinary. And I have a view, maybe dead wrong, that the LLM world is going to be a commoditized world. We're seeing more and more people talking about the price of tokens, what it costs you to get it, and what's the savings. I mean, people are not getting the savings they thought they would get out of the AI world.
How does token costs roll? And is that a Chinese-led phenomenon or something else?
Well, right now we're seeing more and more people in the Chinese LLMs because they're much more cost efficient. And at the end of the day, if it is a commodity, and these LLMs can learn off of each other, and one is more efficient today than the other, but the other learns off it tomorrow, it becomes a price gap. And if you look at the history of companies that become capital intensive tend not to have great returns on capital. We are taking companies that have not been capital intensive. They've owned intellectual property, they've monetized their intellectual property, and they've used that capital to grow, buy back stock, issue dividends, or make acquisitions. And now we're taking those same companies and we're making them very capital intensive. I grew up in the commodities business. The old joke is, if you want to destroy a lot of money, build a refinery. Because they're capital intensive businesses, they're subject to market price fluctuations. It could be that we end up with an AI world where you've got a couple major LLMs. They're in a very competitive price world, and really the cost is tokens. So what you're really you're managing is your token cost.
Okay, so I feel like you straddle Washington and Wall Street and tech with IBM. So how should investors assess this risk of the government owning stakes in AI companies?
Look, I think the government has done a pretty good job so far of taking stakes in companies.
All right, looking like we're going to get a higher low out of this IWM. All right, 7,300 is a 98.58, close enough to 99 percentile. If this bounces here, we could see a pretty violent move like we did yesterday off the low. All right, I don't know what the hell that was. Okay, hedge flows are trying to turn.
Find out why he thinks the market is showing aspects of a bubble and where he thinks the risks are mispriced. We'll be right back.
All right, hedge flows are starting to show signs of a turn right here at that 7,300 level. Okay, so be aware of it. This could surprise a lot of people. Nothing surprises me lately with this price action. Oh boy, hope everyone's having a good day. I had some really weird dreams last night. I think it's because we ate late. I never eat late. We went to a restaurant last night. It's called The Library here in Myrtle Beach. It's kind of like Ruth Chris. Same quality, same pretentious prices, 75 bucks for a duck la orange. Filet, same thing. I had shrimp scampi. I tell you what, the shrimp scampi was freaking unbelievable. I mean, I've tried shrimp scampi at lots of different Italian restaurants. This one blew all of those away. I was very surprised. Carmine's is fine. Carmine's, I like their shrimp scampi. This wasn't quite as good as Carmine's, but anyway, we went out to dinner late last night, 8:15. We were finished by 9 o'clock or so, 9:30. Had some awful dreams last night. Awful. There goes Microsoft bouncing. Microsoft bounce. Okay, Microsoft with a big bounce. Apple driving higher. Okay, Netflix. Tesla turning. Tesla shorts covering. Okay, Tesla shorts are covering. NVIDIA trying to do something. We could get a little turn here, folks. Okay, watch it here. Watch it here. All right, IWM starting to turn. IWM turning.
RAY may resume in less than a minute. CRMT may res in 10 seconds.
Okay, this might go here, S&P. We get a big bounce like we had yesterday. That'd be awesome. Wow, Thinkorswim is really slow right now. Jeez. 10 seconds? How long does it take to get an options chain? All right. Anybody having problems on the East Coast with Thinkorswim? This looks super slow. I don't want to reboot yet. Thinkorswim. Come on. What's going on here? Monitor, trade, S&P. I'd like to go long S&P if it gives me a shot. There goes Apple. All right, this is going to piss me off now. I'm going to miss a trade. Literally been sitting here for more than 20 seconds, waiting 30 seconds for S&P options chain to load up. Huh.
Some of the biggest names in AI, the large language models, pose a competitive threat. Listen.
It's a real question that no one in enterprise factually is worried. Like, investors are really interested.
Come on.
Have no idea what they're talking about.
All right, I have no choice but to reboot Thinkorswim. Yikes. I hate that. All right, let me clear out my cash and everything.
mean, most of them are chillaxing over their latte, reading a report about something that they don't understand the technical capacity of.
But they're hiring the kind of engineers that you have.
And those kind of engineers are great engineers. And I'm telling you, they don't talk to the enterprises or don't understand the technical challenge. And also, by the way, the ability to be a great investor and the kind of that's where large language models are more useful, because it's probabilistic and you don't have to get better than really 51%. If you want to manufacture a car and you need a part, or you want to send a rocket to the moon, or you want to put a missile on your adversary's head and bring home Americans safely, that stuff doesn't ship. And by the way, and there's not a single high-end enterprise like that would ever put, by the way, that's before you get to the cultural impasse. Like, when you go to San Francisco and talk to them, their base vibe is, we don't have to solve your problem today, because tomorrow you're going to go away and all of your problems are going to be solved. It's largely religious. And then you get to, we're going to replicate Palantir by doing
S&P.
Go there to solve the simplest, easiest problems.
Hedge flows. All right, we're watching hedge flows. All right, so I just rebooted everything. Okay, so we're back up.
So the product doesn't actually work the way. It's very expensive, and you got to overcome the fact that you may not realize outside of San. Like, actually, I'm not even saying I find them unlikable, because actually some of the best and most interesting conversations.
Imagine computers of the 1986, 1990 era compared to what we have now on our desk. All right, S&P turning back up, down. Sorry, S&P turning back down. Okay, so that little snafu there saved me from. I don't know. This could be. I'm watching this reversal here. S&P.
He is the frontier person of the leading frontier model company currently.
I still see a lot of stocks pushing up and to the right. Apple just trailed off a little bit there after being up.
And I'll tell you, he believes what he's saying. I just would say that, he believes all problems I think, and I impute him, or believes all problems of the current, present, and future, are transitionary to a perfect future. I believe that we need heaven on earth, not heaven in 20 years. And we disagree on these things, but doesn't mean that, it's like we don't agree on other things. It's like, they agree on certain national security. We disagree. It's not as simple as agree, disagree.
IWM.
These are some of the more interesting.
Okay, just got knocked down a notch there. Just watching hedge flows here. Okay, those are starting to flatten out again at the low. 7,300 major level. Let's see if we bounce off of this or not. Okay, I'll get our couple of trades ready here. All right, S&P.
Lately, which have to do with the fact that, Anthropic and OpenAI can replicate different parts of the software system. And he pushes back on that, first of all, by saying, look, we know enterprise better than anyone. We have spent our whole lives while they've been drinking lattes, dealing with the enterprise and getting into really complicated questions around that. But, this debate has heated up because OpenAI and Anthropic, I guess, have.
Okay, can we get a move here, S&P?
Deployed engineers, which is what Palantir has, which is.
Okay, so we're at 7,350. Can we get a move back to 7,400? Okay, resistance just overhead. I'm looking at 7,400 like we did yesterday. I'm looking at 7,350 is about a 50%, I guess. I'm just eyeballing it here. 7,350. Okay, nothing yet. Nothing yet. All right, let me just load this up by vertical. Okay, I'll just let this. I'll just keep an open trade here, ready to go. Ready to go. All right, let me take a look at this real quick. S&P, SPX. Okay, looking at a 50% retracement potentially. Okay, so that'd be back there near 7,350. So I did eyeball it fairly well. Okay. All right, S&P. S&P. Hope everyone's having a good day. I still feel kind of strange. Okay, so we're at the low of the day here. It looks like the put side is going to continue to work. I got the 7,300, 730, 725 put spread right now. All right, S&P is pushing back. SPY. So we get down to 7,300. Okay, we're below the, okay, starting to move a bit.
Low tick alert -800.
All right, so let me just grab that SPY setup. SPY. Yeah, SPY's working. Hedges are working to insulate at the present time. Hedges are working. What's VIX doing? VIX, VIX, VIX up to 22 again. All right, so I can't do anything with VIX. I sold that yesterday, the June 22s. Sold the July 22s on Friday on that spike to 23. SPY. Okay, so there's the high this morning, the low right now. Just watching this for now. 50% tracement would be back to 733.50. I really wanted to look at the S&P though. No, S&P. Okay, here we are. We're starting to bounce now. Okay, 730s. Okay, I'm going to take these puts off. I'm going to take the puts off. They're in the money. Okay. Okay, I'm out of the puts that I took a little while ago, the 730, 725 put spread, out of that. 730, 725 put spread, sold, all out. Okay, we're starting to bounce. S&P, let me just see what the hedge flows look like. Hedge flows, all right, so haven't turned yet, but I gotta believe the 7,300 is gonna hold. 7,300, let me just look at S&P 500. Attacking them hard.
Based on the helicopter, I guess we have the right to do that. You know, they shot down a very incredible, actually an incredible regime. And at first they said they didn't do it, then they admitted they did. Sort of easy because we have the bomb. We actually have the bomb. Got very lucky that bomb didn't explode. That bomb was lodged in the helicopter. It didn't explode. It was on fire, but it didn't explode. It's just those two guys. They knew how to fly, but they got very lucky. And then we had the unmanned boat.
Okay, no change in direction yet.
At speeds that you wouldn't want to go. That's why it's unmanned, I guess, because nobody.
7,300. Okay, let me just 7,300. It's a major level here. Zero gamma or positive gamma right at the 7,300 level.
It's a good deal. It doesn't give them the right to have a nuclear weapon. In fact, it totally prohibits them from ever having a nuclear weapon.
Makes you wonder if they're ever going to get fanatics to agree to anything. They just keep postponing everything. I just don't see it. I just don't see them doing anything. I don't think I'm alone in that thought. 7,300 gamma.
preamble of the JCPOA, and we keep wondering whether or not we're sort of in circular conversations with the Iranians.
Yeah, exactly. That's exactly what what's his name?
Whether this was anything like that deal that Obama made in 2015, because he said in this one that there was no enforcement on that one and no checks, and this time this deal,
Carl
yeah,
Catania.
and this is from the Israeli perspective, has to take the nuclear
Come on,
material out.
what's going on with this?
That definitely did not happen. But look, President Trump is framing this in retaliation for the helicopter and said we're going to hit them hard. The down market is something I was able to talk to this morning.
Okay, so far we're holding the 7,300 gamma level. Okay, that's a big level right there. 1.8 billion. Okay, so far we've traded, what is this up here? So far we've traded, oh, it's actually not that bad. We haven't traded that much today. Right around 2 billion. Usually a $10 billion day is a lot. We've only traded 2 billion, just under 2 billion. So we could bounce here.
Opportunities that happen in the worst environments can lead to returns for years afterward from deploying more capital into those markets.
What does that translate into in this environment that we're in right now?
This is a stretched environment, but it's an unusual circumstance, right? That people have asked me, is this a bubble? I think it has characteristics of a bubble. It's an optimistic tone around a technology, around a new era. There's kind of new era thinking. And you certainly see it in places like when Allbirds, the shoe company, added AI to their name, the stock did well. And that's crazy. That's reminiscent of the dot-com era. But AI seems like a technology that could be so game-changing that it would be hard to dismiss it or call anything in particular around in a bubble. What's hard is that it creates uncertainty. I think none of us can know with any confidence how's it all going to pan out. What are the winners today going to still be the winners? Will it be a winner-take-all technology, or will there be room for a lot of different winners? Where's it all going? And kind of what's the right price to pay? Are these good businesses that are forming? Are they great businesses? What will the damage be? So I think the market is tending to think about AI winners. Everyone wants to own those. AI losers, everyone wants to avoid those, and AI agnostic, which people are also kind of not interested in, because the returns are not as exciting as AI winners. So we think we're spending a lot of time on AI agnostic, where people are just not paying attention and the price is drifting lower. We're looking for some perceived AI losers that we're not sure really will be losers. For example,
Looking for a bounce here.
there's a lot of software related.
Looking for a bounce. 7,300 seems to be. 7,300 is holding.
Because he's been around for 44 years and had 5 down years, and the most down he was I think 10% or so around the financial crisis.
Looks like it.
You know, he does see risks out there that are not fully being priced. He thinks there on war risk, for instance, of higher energy prices. Says he expects inflation out there as well. Talked about the U.S. debt, you know, and the problem of that the U.S. has, you know, more than 100% debt to GDP, that kind of risk out there as well. But for now, obviously leaning into parts around of the AI revolution.
7,300 holding.
Oil is well taken. Brent up to 94. We just got data from the SPR. It's the biggest 4-week draw out of the SPR in the history of the reserve. And so we knew June was going to be dangerous in the way of inventories.
I mean, Strait of Hormuz still being disrupted, still, you know, bombs now again today. That obviously brings the risk up high, although we're well on those highs above 120 where we were at the start of the war.
Frank's in for the judge. Let's get to the half.
Yeah. Hair on fire over in CNBC. CNBC, hair on fire.
Stocks are volatile. Tech under pressure once again as questions remain around the rally's road ahead. The investment committee is standing by to break down the setup for your money. Right here at Post 9, we have Joe Terranova, Liz Thomas, Jason Snipe, and Steve Weiss. Quick check of the markets before we get the conversation started. As you can see, we are down across the board right now. The Dow falling more than 500 points. This follows the president saying there will be more strikes against Iran, saying that Iran is taking too long to negotiate. We're very close to session lows when it comes to the Dow. The S&P down about 0.75%. The Nasdaq down just over 0.75%. The 10-year also very notable after the CPI report today, sitting at 4.52. Joe, I'm going to turn to you. One of the things we're looking at this entire week, or the last week or so, I should say,
is the volatility in the market. Some people attribute that to the SpaceX IPO coming up. Do you see some other factors leading to some of the volatility we're seeing? I'm looking at the chip ETF, the SMH lower once again, looking at technology under pressure.
GCDT may rest in 10 seconds.
So you have a confluence of factors that have contributed to the spike in volatility, and I love that you began with the elevated volatility, because I think that's the most important thing for the viewers to understand about the environment currently. But whether it's the rise in oil prices, whether it's the uncomfortable rise in yields, the parabolic nature in which a lot of the AI halo trades and derivative trades, equity names.
There goes CBRX, a little dip. Now it's starting to pop.
Have been the catalyst for this elevated volatility. Now, what do you
Hedge flows trying to turn here. 7,300 is a major level. We need to stay above it.
to get tempted directionally in that environment? But you have to understand that when volatility elevates, generally the initial stages of that are void of a defined trend. The volatility is elevating because the market is trying to determine whether it's going to continue on the prevailing bullish trend, or whether we're at a moment where we are at an inflection point, we're rolling over, and a bearish trend is going to evolve. So I think while this process unfolds, you kind of have to sit back. I think this is a moment to maybe say, I don't know, I'm not so sure ultimately where this takes us in a bullish or bearish direction. I think you have to look at your positioning and make sure that you're sized correctly if you are long only, so you can maintain the ownership of those equity names themselves. But I think this is an environment that you have to make less decisions and kind of sit on your hands a little bit and allow this to play out.
All right, so you want to make less decisions. Liz, I want to come over to you. We do have the specter of that SpaceX IPO coming up.
Okay, I guess I should get a put
stocks and chip stocks with the idea that they're going to
trade set up just in case this rolls over, right? Quickly make it like a strangle. Okay, the 11. All right, so a little bit lower. Let's see, what's 72.80 maybe? 72.80. 72.80.
Through the week, and now I think this week this is what happened. So last week we had this basically prevailing wisdom or commentary in the market. Investors were getting increasingly more concerned. Everybody was worried about the parabolic.
Okay, let's see if we can't get a rally out of this. RSI oversold on the S&P. Okay, so RSI did get a little bit oversold. We made a lower low. RSI making a higher low. Let's see if this divergence plays out for the bulls' advantage. Okay, looking at other indicators like junk bonds. What are you doing, junk? Junk is a doji, neutral. Junk is a doji and neutral. Breath-wise, big caps, mid caps, small caps. Nasdaq's flattening out after being off last couple of days. Small caps rising. That's interesting. Small caps. Let's see what the 10-year yield looks like. This is neutral. It's right in the middle of the Bollinger Band, sitting on top of the 21-day. So that's a neutral signal for IWM as well. Bitcoin. Bitcoin just took off just now. I just caught that out of the corner of my eye. Bitcoin.
They said in 4 years, maybe 5 years. It will never hit it during the term. It was too much. I hit it in my first year.
I hit it.
Down, it was 50,000 was an impossible number. They said 5-6 years out, you'd hit. Well, I hit it in my first year. And now I get everyone in the room and say, congratulations, but now I'm going to take it down a little bit because we cannot let Iran have a nuclear weapon. And they all agreed with me, Todd, you remember. Everybody agreed. And we took a little journey down to Iran. We first stopped off at Venezuela, by the way. And we
New York Stock Exchange still sitting on top of the 21-day. The comp. All right, so we got a lot of mixed signals. Okay, so basically we were flipping a coin at this point. We could go up, we could go down, or just stay right in the middle. Best out of 5 coin flips wins. Okay. The diamonds, Dow Industrials, 30 stocks, small caps, IWM, neutral, equal weight. Let's see what the equal weight looks like. Equal weight. Remove the weight of these big cap tech names, and we've got basically an inside day. Not a sell-off, but an inside day. And the number of stocks trading above the 20-day have been climbing. Higher highs, higher lows. It feels like it's crawling up the side of the hill right now. Number of stocks above the 50-day, above 50%. Climbing higher, higher highs, higher lows. Is it cascading lower like the middle of April? No. We're above the trend line, 921 day. Okay, I got a put spread ready to go just in case. Anything below 7,300 if this rolls over in a big way. But call side looks like it's working at the moment. Hedge flows, looking for it to turn up.
Millions of barrels of oil has come out. That's why it's at $85, $90 a barrel instead of $250. But greatest military in the world, toughest military in the world, just the best in every way. Nobody even close. There's no military that's even close. I rebuilt it during my first term. I'm using it now. When this conflict is over, Todd said, please call it a conflict. As he does with the word, he did like that word. It's sort of a conflict. It's a military operation. When it's over, you will see oil drop to where it was before. We're getting gasoline. Just before it started, I was in Iowa, and we passed gas stations $1.85 a gallon, and we'll be back at those levels very soon. Thank you very much.
Thank you, Russ. Thank you, guys. Thank you, guys. Thank you, guys. Thank you. Thank you all. Thank you. Wait, you
All right, as you can see, the president just wrapping up his comments. We want to bring in our Megan Casella live from D.C. with more of the president's comments. Lots of things to break down here, Megan. USMCA saying we'll see, talking about oil prices, saying they're pulling millions of barrels of oil out of Iran, and that's the reason why oil prices are potentially not even higher. The president's saying around 85. It's actually about 90. I just want to get your take on some of his comments.
Absolutely, Frank. A lot there to unpack, hitting a number of topics as always. But one of the top headlines there was right at the beginning when the president said the U.S. is going to continue attacking Iran over that downing of the U.S. Apache helicopter earlier this week. Take a listen here to some of his comments right at the start.
We hit him hard yesterday, and we're going to hit him again hard today in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal. We're really close to a deal, but they keep tapping us along. They keep playing us for suckers because you know what? They dealt with some very stupid presidents.
Frank saying we're going to hit them hard again today. That's the first confirmation we had that the U.S. was planning further attacks against Iran, though, of course, the president also saying there that a deal remains on the table, as he's been saying now for weeks. I also want to talk about that USMCA bit. He said we're not looking to renew the deal. But we've known he didn't want to sort of rubber stamp renewal. July 1st is the renewal date for U.S., Mexico, and Canada to sign on to renew it for another set of years, 16 years. And the president said he doesn't want that. He wants to renegotiate it. So we know that the USTR and Jamieson Greer has begun those negotiations. And I will say as well, this is important here for markets, that even if the president ultimately says we can't get to an agreement, I want to pull out of it, the deal has a safety measure within it that will keep it intact for at least another 10 years while the parties keep talking. So there's not going to be a collapse of that trade agreement in this term, even if he says he doesn't want to renew it right now. He went on to say, we'll see if we can do something to make a deal, especially with Canada. Frank?
Yeah, Megan, the president also addressing inflation, of course, hottest headline CPI in about 3 years. The president saying once the war is over, he believes, he made a hand gesture, inflation is going to go down. I'm Megan Casella live from D.C. Megan, thank you very much. Good to see you as always. Jason, got to come over to you on this one. It doesn't seem this conflict is de-escalating, and that seems to be what the market thought was going to happen. A lot of people thought it would be a few weeks of conflict, maybe, and things would potentially be over by now. I heard a lot of traders tell me they thought it'd be over by the 4th of July. That does not seem as likely right now. Since the war began, the S&P's up over 6%. Your view on his comments and the market implications?
Yeah, so I think.
All right, just keep an eye on this level. If this starts to roll over, all right, we could test 7,300 again. But if you're a bull, you want that to hold. Have some puts ready to go.
Look at the numbers. Gasoline is up 42%. Fuel is up 60%. These are real numbers that are affecting the consumer day to day. And I think the other thing is I kind of turn back the clock to last week. Look at all the employment data that we got good labor statistics, right? And we think about what policy is going to look like from the Fed's perspective later on this year. Now, 98% chance of a hike in December is a very different story. And then as I kind of roll into the markets and to Liz's point in terms of breadth, 9 of the 11 sectors were up yesterday and the market was still down. But when you think about the math, obviously the semiconductors are now 30% of the S&P, so the math doesn't work out. So if you're seeing semis, we're rolling with that. So I want us to continue to see healthcare, financials, industrials play into this rally going forward, and I think that's going to be healthy as we look over the next couple months.
All right, White's got to come over to you. I mean, a lot of factors are influencing the market right now. It does also seem, in addition to the idea of the SpaceX IPO,
Just feels like a doji day, choppy. Let me see what up-down volume looks like again. Up-down volume is almost 3 to 1 down on the Qs, 1.5 on the SPY. So a little bit worse compared to this morning. 1 to 1 down on the NYSE still. NASDAQ Composite 1 to 1 down. SPY and the Qs a little bit more. 1.5 down on the SPY, 2.7 down on the Qs, 2 to 1 down on the diamonds, industrials, and 1 to 1 down on IWM. Still could be a doji day.
SpaceX has a lot to do with it, frankly. It may be hitting some stocks like a Rocket Lab or others. Maybe you're freeing up to take some profits, but keep in mind, if you're smart, you're doing the calculation. What's my gain could be in SpaceX now versus the taxes I'm going to have to pay for liquidating a position? So if you're in taxable accounts, that's the equation, right? That's what you got to go through. Nonetheless, what's killed, for example, the biotech sector in the past has always been, except for this time, and it was interest rates and other things, is when massive supply comes on the market. And we're seeing that broadly here. The market's got to absorb a lot of supply. And just under simple economics, supply and demand, you really need demand to exceed the balance of supply. I'm not sure we have that in terms of...
Man, this is just sitting here trying to figure out which way it wants to go. Flip a coin. That's what it looks like right now.
But then we heard about escalation of the war in Iran, and that's not going to settle anytime soon. To give you some perspective, the last time they went to Pakistan, both delegations, U.S. and Iranians. U.S. came with Kushner and Witkoff, right? The Iranians came with over 80 people representing many different factions. So the Pakistanians spent all their time mediating between those factions. So is the Republican Guard going ahead and executing the attacks while you have the clerics saying, we want to negotiate peace? So you just don't know. But one thing's for sure is that because of the way their country is structured, that they can withstand the war for a longer period than Trump can in front of midterms. So to me,
I feel like we're wading into geopolitics a bit too much. I understand what Iran may or may not be able to do.
Yeah, thank you. Oh, Frank not letting them go into the geopolitics too much. I really appreciate that. It really bugs me. They spend so much time talking about geopolitics instead of stocks.
This is all about Iran. You know why? Because it impacts inflation. It impacts, what the Fed's going to do. It's critical.
Yeah, we all get all that, but focus on the stocks. Focus on some stocks.
Mm-hmm. Is what the Fed really looks at for making their interest rate policies. What consumers look at is what they're paying at the pump, what they're paying in the supermarket. So all that's impacting it.
So right now, I think you're still in an overvalued situation. I take a look at CrowdStrike, right? 93 times revenue, right? Those are towards 93 times EBITDA rather. Well, cyber has certainly been a strong trade, but I just want you to on your idea. There has been a rotation. You look at healthcare over the last week, up about 4%.
Okay, Bitcoin had a nice little bounce, still basing down here for the past 4 days. Inside of Friday's price action, Bitcoin, Monday, Tuesday, Wednesday. All right, so if we lift out of this area, it would be really good for the Bitcoin traders.
Now, the rotation, if we're talking about the rotation, it's been short-lived so far, so still to be seen. It could be fleeting, very possible. But if you look just from June 2nd until now, money has come out of almost exactly the AI-related names plus software. So AI disrupted names, and then the AI names that had led up so strongly up until the correction. So the money came out of those, and then the best performing industry groups were healthcare. It was equipment and services. It was pharma and biotech. You've got banks in that top 5. So the question really before this pullback is, if there is a pullback, if there is an upset in sentiment, are people rotating entirely out of the equity market and making a defensive move, or are they just moving money around in the equity market and looking for more opportunity? When you've got pharma and biotech and banks in the top 5 industry groups during a pullback, my takeaway is that it's not a defensive move. It is a rotation of people still looking for opportunity. Banks are an industry group in particular that in any up market and in any down market, you want to use as confirmation. And I look at them for confirmation.
All right, markets have gone to sleep. The markets have gone to sleep. Not much to do here.
And if banks are doing okay, I think we are confirming that we still feel okay about the economy.
I want to come back to where we began the show because I think it's most important, and that's volatility. And as I'm speaking, if we could please show the VIX over the last 2 months, and you'll see the spike in the month of June. It's important to understand, I am not suggesting today when I say less decisions, when I say less is more, I am not suggesting that there's been some dramatic paradigm shift as it relates to the fundamentals. The fundamentals, I believe, are remarkably strong. The earnings growth, Steve, I think you would acknowledge, and you've talked about this, the earnings growth for a lot of these semiconductor companies, it is remarkable. That's not what has changed in the month of June. What has changed in the month of June is if you think about the market has a
All right, market's just chopping around here. New York Fangs, Microsoft trying to bounce, Apple trying to do something here. If we can get Apple and Microsoft to bounce, that's 13% of the weight right there. Netflix, okay, Nvidia, Google pushing lower. Google's not helping. Google's at the 50-day moving average, so this is something that Corey and I were talking about as far as the secondary. The proof would be a hold in this area rather than a drop. So the secondary is an issue with some. Futures have been flat in this area since about 11 o'clock. 11 o'clock, we hit this level, and we've basically moving above and below it since 11. S&P. Right around 11 o'clock, we hit this level, basically flat in this area, above and below. Okay, so we're just kind of sitting here, not going anywhere. So it's about 11 o'clock. Okay.
Let's see what happens with the SpaceX IPO. Let's hear from Kevin Warsh next week. Let's see where things go as it relates to Iran. You don't on June 10th have to jump in. Watch the next post game.
Before we get to the other parts of this conversation, we got to get to something we can't wait for. At least we're going to have to, can't wait till after today. Reporting its earnings after the bell, we're seeing some interesting options activity out of that print. I want to go over to Oliver Rennick, live at Cboe Global Markets in Chicago, with much more of that options activity. Oliver.
That's right, Frank. Oracle earnings are the can't-miss event for big tech this week and today. Options are currently pricing in a 12% move after the report. That is the biggest implied move in 6 years. But many traders think it could actually be even bigger. The most popular contract by volume right now is the 250 strike call expiring Friday. That goes for about $220 a pop and is traded almost 10,000 times this morning alone. If those speculators are right, it would give a much-needed boost to this market. But here's the catch. As this day's gotten worse, we've seen bigger money traders fading that optimism, not by buying puts necessarily, but they're selling calls. Right now, selling calls accounted for over half of all call premiums traded, Fred.
Now that's fascinating. A potential 12% move in the options market implied. Oliver Rennick live at the CPI.
All right, so Oracle 12% would be about what, $22? All right, so 22 would put us back here about a 50% move back in this direction or this direction.
Absolutely hinges on the capacity to convert some of that backlog that we've been talking about for multiple quarters. So we need
Oracle, so you're looking at about a $12 to $25 move being priced in.
we're expecting, EPS of $1.96, revenue around $19 billion. I think also the funding discipline has been a major story for them. Talk about OpenAI and what's going on there. They've raised about $39 billion in CapEx spent in the last 9 months, FY26. So I think those are the things that I'm specifically going to be focusing on is what they're going to do with the RPO number, the capacity to kind of execute there. Wise, we've talked a lot about that RPO number, you and I, right here on this set. Your view of Oracle after the bell, I know you don't own it, but just your view on what it could mean for the broader sentiment when it comes to AI and infrastructure.
Oracle's sort of its own thing. Yes, it's linked to the AI trade, but I wouldn't own Oracle here. I wouldn't have owned Oracle lower even because they've got so much debt. They seem to have lost their way a little bit in terms of their earnings profile, trying to make up for it by vendor financing, not just a little bit, substantial vendor financing versus what we're seeing with Google and others raising capital for their own AI deployment. Right, so I don't really, no offense, I don't really see a reason to own it. I don't see the value there. If I'm going to put money to work, and I'm sitting 30% cash, I was not tempted to put money to work yesterday. I'm not tempted today. This is not where I'd go. I'd go into the others, such as the Google, et cetera.
But your cash flow is negative, and that's the problem right now for this company. $3.5 billion. If we were talking about a free cash flow positive company, the story would be much different. Tonight, you want to look at cloud services, the OCI business. You want to see that number well into the 90s as it relates to the growth. That's what they need to do. 1 year ago, you're talking about 52%. I will say this about Oracle. As it has moved lower, the analyst community has stayed with this stock. 82% of the analyst community have a buy rating on the stock.
All right, let's get a midday scan.
Sitting at 254 at 50 cents. That's well above.
When people look at Oracle and say this is cheap, historically cheap, when it was a different Oracle, they generate free cash flow and velocity. Now they don't. So you've got to do the analysis completely differently. That's what the analyst miss.
It takes you back to 99. It gives you the trepidation that that's where we're going with this innovation.
I like the conversation there. Coming up next, we got our top call of the day. We're going to start with an upgrade to one committee name. JP Morgan says has a lot more room to run. Plus, we're just 2 days to blast off as investors await the SpaceX IPO. We have the very latest coming up. Halftime's back in just 2 minutes.
Okay, so let's do a quick scan here. June 10. Hope everyone's having a good day.
Not the claw that you're looking at on YouTube, but guess what? That they have yet to build. Apparently, they are gearing up for quite the project here. There's some details in this report. National Park Service documents showing a very aggressive schedule here for the project. The administration wants to have construction underway for 20 hours a day, year-round, until it's done. The timeline, by the way, this would involve
It's not a big deal.
shifts, making it difficult to
Make 3 shifts. That's not uncommon.
Here's the thing, though. This would require massive
AAOI.
50 feet tall. So you're going to have one crane at 300 feet and another at 320 feet. If you've ever flown into Washington here in a national airport, you go right over that thing.
Okay, this guy on Bloomberg is really annoying. He's like always got his hair on fire. Hyperbole, everything. Can't take it. Can't take it. Just cool your jets. Just report what stocks are doing. Oh, he's so funny. So funny.
By the way, it's going to be made out of concrete, clad in granite, unlike all the others.
Collecting roughly, we've got 250 credit here on the screen. That's what you would make if you collect 250 credit, $250 per spread with $750 in risk. Now, you got more risk than reward, but we talk about
All right, CBRS.
probability of success type of trade.
Okay, we're off the best levels of the session. All right, not unusual. Get the run up in the morning. People take profits. It pulls back. People buy back. Look for it to move higher over the next several months, years. Cerebrus. Oracle earnings tonight. Oracle. S&P equal weight index. Inside day. Inside day. Staying above the 920 50 day. All of those are up and to the right. We're not below the moving averages. We're above trending. Number of stocks above the 20-day continue to make higher highs, higher lows. I really don't see anything to be concerned about at the moment. Intraday volatility aside, New York Stock Exchange is holding above the 21-day. It's off the highs of the session and all-time highs of 23.6. Okay, so we're waiting S&P.
To take advantage of that high implied volatility like your short put vertical is, but I looked at a bearish put diagonal to the downside. If you're more bearish on this name and you think it's maybe going to fall post earnings, maybe like Broadcom did post earnings. I went out to the June 18th monthly options, so 8 days to expiration on that. Bought the 207.5 strike put. That's slightly in the money now. It was basically at the money when I looked at this earlier. So you buy the 207.5 strike put in the June 18th monthly options. Then against it, you go down about that one standard deviation. In the near term, June 12th weekly options that expire in 2 days, sell the 180 strike put. So $27.5 wide bearish put diagonal to the downside. You're paying roughly, I've got an $11.
Okay, Apple looks like it wants to keep going. Apple retracing a bit. We got a hammer. We could get a 3-candle reversal here. A hammer instead. We're above the 50-day moving average. 50 EMA we probably tested already. Apple showing strength. Apple, that's working. Apple's working.
Anything below about the 205, 204 level is going to be potential profitability on this. And Kevin, we talk about this vol dispersion, the $27.5 wide put diagonal, and you're only paying roughly $11, $12 for this. That's well below half the width of this put diagonal.
Exactly right. That 204 front month implied volatility. It doesn't mean you're going to be successful, but you are buying lower implied volatility.
Might be, for sure, but they're trading in unison.
Jeffries has a buy on Netflix. Finally, we're starting to get some buys. Apple 292.50s. Yeah, that looks good, Mondo. I like it. Hedge flows has yet to turn up markedly. They just kind of price is just sitting here about 7,300. We know that the hedging is occurring there at 7,300. We'll come back and watch it. High tick alert. Nope. I want to keep that high tick alert. Ready.
I think REITs from a trading perspective, there's probably some opportunity given that they've just been such a dog. but over the long term, I think it's going to take a little longer.
One of the better positions in the JOTI ETF that's non-technology or non-AI oriented is Welltower. We took a position in July of 24 at 111, I believe. This is senior housing. You're getting remarkable growth in this company. They've delivered for the last 36 months greater than 23% consistently throughout that period. So that's a name that I would look at. I know Josh yesterday talked about the REIT structure, talked about the building momentum. Simon Property Group, we own that one, and Prologis as well. I think a lot of people are realizing that REITs right now are building some strong positive momentum.
Yeah, by the way, from our data team, a few tickers hitting 52-week highs: VNQ, RWR, and FRI. All right, now our Christina Parts-Nevelis with a CNBC News update. Christina.
Well, thank you, Frank. Secretary of Defense Pete Hegseth addressed U.S. service members at Guantanamo Bay this morning as President Trump really continues to put pressure on Cuba. Hegseth commented on the state of the armed forces, including updates on Venezuela, possibility for action against Cuba, and what the president may do in Iran. His visit follows those of multiple cabinet officials in recent weeks as talks continue with Cuba. Appeals, for calms Bay in Northern Ireland after a wave of anti-immigrant violence in Belfast overnight. The unrest came after a video went viral of a Sudanese suspect attacking a man in the street with a knife. Hundreds of protesters attacked police and burned vehicles. British Prime Minister Keir Starmer condemned the violence by what he called, quote, masked thugs who targeted ethnic minorities. And opening statements are set to be today in the arson trial of a former rideshare driver charged with deliberately setting a blaze in January of last year that eventually grew into the Palisade Fire, one of the deadliest and most destructive in California history. If convicted on all counts, he could face up to 45 years in prison. Frank, all your happy news. There you go.
Christina Parts-Nevelis, thank you very much for those headlines. All right, coming up next, counting down to the SpaceX IPO, our Dom Chu is standing by with a look at today's ETF Edge. Dom,
all right, so Frank, amid all the recent market volatility, there's been a surge in demand for levered ETFs, funds that offer double, sometimes even triple the daily returns or drawdowns for indices and even individual stocks. So with a slate of levered ETFs that will track SpaceX once it goes public, just what should traders and investors be aware of? That story's coming up on ETF Edge on the halftime report. Keep it right here.
All right. Futures just stuck here doing nothing. Okay, hedge flows just grinding a little bit low. If this drops into this area, you can see very clearly gets very volatile as we near the end of the day. If we drop into this red zone below 7,300, all right, so have some puts ready just in case that happens. If we start to drop, I don't like buying puts at the low of the day, but this could be a quick move. Alternatively, if we start moving back up into the purple area overhead, that's positive gamma. And of course, we want to get back above 73.90 as soon as possible if you're bullish. Right now, we're just kind of drifting along.
If they knew what they were doing, and I wouldn't put it past them. And the press office of the White House, they ought to be tweeting this video of Stuart Paul right now. This is the best context you're ever going to get on what the president actually meant. Stuart, we've got a minute left. Crude oil prices are bumping higher again. Gas prices have been actually trending lower recently. What's the next CPI report going to look like? And what's the Fed going to do with all this?
The bottom line is that you guys want to see 0.3% or higher month-on-month headline inflation, year-on-year headline inflation to stay above 4. So if we see continual fading of gasoline prices as we saw throughout the first year, it will mean that we'll lose that 4 handle in the next couple of months, and that'll be a necessary condition for the Fed to move frankly in that direction.
We're glad you can stop by. So don't wear a funny hat. Don't love inflation. What was the other one? You have 3 rules.
Social Security, the third rail.
Oh, yeah, the third rail. Okay. See, Stuart could run a campaign for Bloomberg Economics. Stuart Paul, thank you, sir. We'll assemble our political panel next year on Bloomberg Radio. 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Another day of selling for the U.S. stock market with the Dow, the S&P, NASDAQ all in the red. The world's largest tech companies declining again today. 1% drop right now for NASDAQ, down 260 points. The NASDAQ 100 index also down by 1%. S&P keeping it all in context at 73.33, down by 52 points. Now a drop there of 0.7%. Dow Industrial is down 533 on the Dow, a drop of 1%. The Bloomberg Mag 7 index lower by 1.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, hit hard, down 2.1%. All of this for the VIX just above 21, a 10-year at 4.53%, the 2-year 4.12%, and the 30-year at 5.01%. Gold is down $133 the ounce. Spot gold down 3.1%, $41.27 the ounce. While West Texas Intermediate crude is advancing up 3.2%. WTI 91.06 a barrel. Brent 93.98 now, up by 2%. As for the energy backdrop and the U.S. election, David Kelly is Chief Global Strategist at JP Morgan Asset Management, and he was a guest this morning on Surveillance.
Eventually, the gasoline price started going up again, and as we're moving closer and closer to midterm elections, I expect that the issue of nuclear and the issue of Hormuz will be separated. And once that happens, and you actually negotiate also that try to get stuff in and out of Hormuz, then
Interviewed on Surveillance. Meanwhile, beef prices have hit a fresh record. Hopes for consumer relief are fading.
Okay, Apple off the screen a little bit there. Apple, nice reversal. Hammer.
The Bureau of Labor Statistics says U.S. consumers on average paid just over $7 for a pound of ground beef in May, slightly higher than the previous month, but up 13% from a year earlier.
Okay, previous high over here. Previous high is where we're bouncing right now. Okay.
Cherished by investment bankers, congratulating Citigroup for its position as the top advisors on M&A. It's unclear, however, what league table the president is relying on to put Citi in the leading position. The presidential proclamation comes as a surprise for Goldman Sachs, whose executives have been touting their major lead in merger advisory rankings. Recapping, S&P 500 index down 0.9%. West Texas Intermediate crude.
Okay, let's nice little area to bounce here. Previous pivot high. Back over here. And late November.
Curious. The president's been posting a lot today, and he just spent quite a bit of time talking with reporters as well in the Oval Office because it is now law. Reconciliation. They got it over.
Hyperbole, dude. You need to chill out.
All right, welcome back to halftime. The Amazon effect is hitting the transport.
All right, Apple's still moving here. Nice.
Freight offering for all businesses. Shares of FedEx Freight, Old Dominion, Saia, XPO, ArcBest. Names we don't talk about a lot. They're all
right, nice. Apple, nice.
You have some exposure here. You have Old Dominion, considered one of the better.
Apple's going. Okay, looking good.
ETF. Just your view on this Amazon effect when it comes to this space.
Well, first of all, thank you to Amazon for breaking.
Man, it'd be so cool if Oracle blows it out. Still all about earnings, you know. Yeah, the war, the Iran conflict, constant needling. It's annoying, no doubt about it. But
UPS or to FedEx had the spinoff recently to FedEx Freight. That was last week. Here's the way I think about it fundamentally, though. When you think about less than a truckload, you have to think about service. And is Amazon going to give you that white glove service that an Old Dominion or some of these niche less than a load carriers are going to give you? If you're focused on cost, if you're focused on freight that has low value, then ultimately Amazon is going to be the direction that you're going to go in. But if you have high value freight that you are attempting to move, I don't think you're going to move away from the Old Dominions, the C.H. Robinsons. And I think in the long run, that narrative comes to the surface. In the immediate term, it's clearly this headline is a catalyst to work off overbought conditions.
Yeah, just to your point, the fever you're talking about, by the way, not only are these Old Dominion hitting new record highs, trading at about 41 times forward earnings, XPO at about 42 times forward earnings. So these are very high valuation stocks. By the way, I want to pull up a chart from when Amazon Supply Chain Services was initially announced back on May 4th. You're going to see here, transports, they kind of dipped a bit, and then now they're outperforming the broader market over that time, up about 6.5%. So the disruption impact may be overrated. Evercore out with a note saying, buy the dip on LTL on this news. Deutsche Bank out with a great report. FedEx Freight, to your point, by the way, on service, has more than 350 terminals. They estimate Amazon only has about 30. So kind of giving you a sense of the service level when it comes to an Amazon compared to some of the other competitors. All right, coming up next, Mike Santoli joining us with his midday word. A lot to talk about there. Stay with us.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
My family and I came to the U.S. in 1991 as the very last batch of political and religious refugees from the former Soviet Union. Certainly extreme.
So if you start with the assumption,
Apple at the high of the day, a little profit taking. It's got a hammer forming on the daily. Looks good. Previous pivot high.
so I gotta believe Tim's looking at this as a real puzzle. And how am I going to get 60 votes for a temporary extension with no promise for who the future?
Microsoft trailing off a little bit. So is Tesla, Amazon, Google, Meta, Broadcom, NVIDIA. Not a whole lot of support from the New York FANG components. That's okay. When we look at the New York Stock Exchange, it's okay. Could look better. The equal weight index, number of stocks trading without the New York FANGs, or I should say equal weighted. Everything's equal weighted. So this is holding up above the 9 and 21 50-day. Number of stocks above the 20-day are not dropping off like they were in April. This looks okay. So it's just a matter of, I guess the markets are just feeling around these levels. Hedge flows turned back down just now.
Don't forget that the median home price these days is a little over $400,000 against the national median income of $100,000. So housing is completely unaffordable. Nobody has a day job, and he's supposed to be the guy in the Trump administration who's fixing that. So Democrats have every incentive to try to make hay out of their number one campaign issue. Well, that's an interesting connecting of the dots. He's keeping his day job. Director of Federal Housing. Would it make you more comfortable if you got to fill in? Like, I mean, of all jobs to be balancing at the same time as DNI, does that give you heartburn on its own?
POP may rest in 10 seconds.
Yeah, and that did a really good job of connecting the DNI's job to housing issues and affordability. So kudos to you, Matt. I haven't heard a Democrat actually stick the message in a long time. Well done. Yeah, look, I mean, I think it's more not likely to get to the point where voters are, scratching their head going, so I don't get it. What's Pulte going to do? Walk into the CIA and offer everybody a 30-year fixed rate? I mean, I don't think people are really thinking this one through with all the other things that are going on, including today's headline about inflation. It's a confusing issue to anybody outside the Beltway, but it is the number one issue inside the Beltway. And so I do think this is mostly a Beltway issue. When you start talking about jobs, I mean, look, everybody in the Trump administration has 3 jobs. That shouldn't surprise anyone. This one is extreme, but it is not unusual. And so whether or not Democrats want to step that on, I think it's a nice talking point. Matt framed it really well, but I don't.
We're still hanging out above 7,300.
I don't know if the president
Apple's at the high of the day. Apple.
In the Oval Office a little while ago.
Looks like a pretty good day for Apple.
We had this primary last evening in Maine. Matt, the president has spent years criticizing Susan Collins and calling her a rhino, but said today she has my support because she's a sane woman. She's not my best friend, but she's sane.
I can't get away from politics. It's really aggravating. Damn.
crisis. So the companies that are very flexible in how they're
Apple.
pricing their product and service seem to be doing better than those who are still stuck in the old software as a service per user based annual fee. So I think that's also important in the context for Datadog. The other thing too is if you look at what's going on with cloud and observability, as well as the high compute analytics demands that Datadog can supply users, they're becoming very effective in their operations, scaling up agentic AI, but also earnings continue to grow in sales. Last quarter over $1 billion was the first. So with that said, the analysts, irrespective of the fact that, yeah, the price did move very aggressively off those April lows, they seem to be now defending the price of the stock as well as the overall prospects for the business going forward.
All right. Thank you, George. That's George Sillis, senior markets correspondent, with the breakdown there on Datadog. Let's get Tom and Kevin back in here for example trade.
Oh boy, this is so boring. The markets are just sitting here at the low of the day, just above 7,300, that major level right there.
Yeah, it's not immune to the overall market moves, even after you saw multiple price target hikes out of Canada.
7,300.
Barclays after this conference that they had, and George mentioned the last after they grew revenue by 32%. Sample trade. I went out to the July 2nd weekly options from 22 days expiration on this unbalanced call butterfly to the upside that gives you that exposure while cost on a bullish play. Buying one of the July 22 or 227 and a half strike calls, sell two of the 255 strike calls.
Gotta mute you guys for a sec. All right.
Says we will be attacking Iran very hard. Welcome to the Wednesday edition. As the U.S. and Iran trade fire once again, with Trump now saying that the regime has taken too long to negotiate.
Oh, God. All righty.
The president says the U.S. will resume attacks on Iran later today.
Everybody's talking about the president.
Really, the driving force of a lot of this pressure, it seems, Alex, is we're seeing a bit of this somewhat undoing of that strength we were trying to build on to start this week, of course, after Friday's sell-off.
Yeah, today is a little bit more mixed. You do see some of the names. Like, I have some of the names that we talk about a lot just on a watch list.
Okay, yeah, let's take a look at a couple of things here.
Like SanDisk is hanging on to a little bit of
Home Depot. Let's see what that looks like. Home Depot. All right, Home Depot clearing the 50-day moving average. That looks pretty good. Bollinger Bands are just starting to open up, so this could get a nice little lift here. Home Depot, all right, that's up about $30 per contract right now. CBRX. Okay, CBRX off the best levels of the session. Best levels, we hit 25. We're back down to 22.20. All right.
Utilities, Staples, green on the day. Staples have been like the lone bright spot over the last week. That's been pretty consistent.
That's Home Depot. Looking at the stocks that are moving on the S&P 500. Okay. We got Casey's, stores. They're still up 15% off the best levels of the session. Devon Energy. A lot of the energy stocks caught a bid. Robinhood, looking for that to break above 90 and then eventually break out above these pivots. Okay, these two pivots right here. Robinhood, best entry on the pullbacks. Okay, we had a pullback at 12.45. That was 79. It's currently $4 above that level. Okay, starting to move. Robinhood looks like it might go here. Robinhood. Robinhood, I already have a position, right? Yeah, okay. Just managing existing positions, Robinhood. August. Most of my options are out in August now or later in the year.
It's definitely not abnormal to see the volatility of Supermicro, but this does come after we did see some overall financing concerns. So we did see an initial reaction right out of the gate to the downside after they announced a $7 billion financing package that includes roughly $5 billion in concurrent underwriting offerings of common stock and depository shares and a $2 billion at-the-market offering. And so this is really, they stated this is a result of that.
Hood starting to move here. All right, that looks good. It's near VWAP.
They struggle to meet the spike in demand. They intend to use this money to raise the buying components that is needed to fulfill the $39 billion worth of orders it has received in recent weeks. And so,
Robinhood, I added to 95-100 strike out in August.
6% in yesterday's session, as many investors did ditch that initial strength we saw linked to these AI names. But Supermicro is not the only company that right now is topping the market to help build its AI presence. We know that Alphabet last week is raising $80 billion. Oracle's been one that's been pretty criticized for its significant cash exposure to an expected build, not really a monetizable build. And yeah, I mean, when you're Supermicro, unfortunately, you don't have the backing of being an Alphabet or an Oracle.
Yeah, well, the Oracle comparison I really like, and I'll get to that in a second, especially since they have earnings after the close. But it's really a disingenuous comparison, and we've talked about this a little bit on Trading 360, me and Marley.
Okay, looking like we might turn the corner here. Here's Robinhood. All right, I just added to the 95-100 call spread. That's out of the money a little ways here. But looking like we're going to test that pivot again. Right here, this pivot. Okay. Okay, Microsoft just turned up. Apple's holding the high of the day. We got NVIDIA trying to turn up. That's looking like short covering. Same thing with Tesla short covering late in the day.
Look at this. Clearly, there's AI demand. How else would they have this giant backlog? That said, if you have to go out and float $7 billion worth of financing just
All righty. Robinhood, S&P. S&P just sitting here. All-time highs. Okay, we got a pivot there. Okay. Yesterday's low was the 50 EMA. 50 SMA is catching up right now. 7,300, that's a big level. So far, it's being defended. Really need to see this hedge flow line turn up sharply. If you recall what happened yesterday, look at the difference between the hedge flow line, the purple line. Look at yesterday. We had a nice drop, and then this started to rise up towards the end of the day. Okay, hedge flow line turned up. And on Friday, of course, we had that big reversal. Okay, down most of the day, Friday, Monday. Hedge flow line, nice trend on the hedge flow line on Monday. This is what we like to see, that hedge flow line rising instead of just sitting here and doing nothing, okay, which is where we are at present. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, June the 10th, and we have about 3 hours to go, a little less than 3 hours to go in this session. All right, so let me turn this on. I got to take a 2-minute break. I'll be right back.
Sanctions, because we find repeatedly that sanctions don't change behavior with these two.
You have to truly hold them accountable. You have to make sure that they feel the pain. You know, and a lot of that is a lot of the oil that China will buy from Iran. They wouldn't pay Iran directly. They do it through shadow accounts through UAE. You have to go to UAE and say, look, we working well together. You can't keep helping China help Iran. All of these adversarial things, those are the ones you go after. The point is, if you take your money away from Iran, they can't build nuclear production, they can't mine the strait, they can't fund Hezbollah, Hamas, and the Houthis. You know, right now, Iran's talking about now starting to hit Israeli boats in the Red Sea. They're not stopping. Their intention is to keep being aggressive so that they can get what they want, which is sanction relief, to unfreeze the assets, and to try and get the country to see them as someone they need to be dealt with.
Well, as if they heard you, Ambassador, the U.S. just announced sanctions on quote-unquote clandestine banking in China linked to Iran, sanctioning some Chinese and Hong Kong-based individuals. So perhaps that would be a start to what you're getting at here. But I want to go back to something else you mentioned, that's Lebanon and Israel's conduct there. Your point is well understood that it's Hezbollah they're targeting, but obviously there's been a lot of associated collateral damage. And I wonder if you view Israel as now being actually a very complicating factor in the path forward. Israel's desires and objectives are diverging from ours.
The U.S. partnering with Israel and what they did to really bring Iran to its knees was so important and so helpful for the national security of the U.S., of Israel, and of the West. So very important that that happened. Israel has to defend itself. But think, just since the April ceasefire, what you've had is the Hezbollah has struck northern Israel over 2,000 times.
Low tick alert -800.
What country would put up with that? What country would allow that? So it's not that Israel was doing this, it's Hezbollah. So Iran is trying to make this gray by saying, oh, they're hitting Lebanon. This is not the case. Lebanon is not the issue. It is Hezbollah that's the issue. And you can't let this terrorist activity that is associated with Iran continue. And I think that the U.S. and Israel are partners. I think that while Netanyahu and Trump may disagree at times, I think they agree on a lot more than they disagree. And I think at the end of the day, they both have the same end goal. And so I think that partnership stays strong.
Extreme low tick alert.
In June of 2026, remembering the no new wars mantra that followed the Trump campaign throughout his re-election. There's amazing analysis from our colleagues at Bloomberg Economics found since taking office last January, President Trump has greenlit at least 14,418 military strikes around the globe. I'm just curious, if you were sitting behind the Resolute desk, would you have started this war?
I think that Trump did the right thing. Iran was the weakest they had ever been. If Trump wouldn't have gotten involved, they just would have gone back to doing what they're doing. Keep in mind, you have to know the ideology of that regime. In 1979, they called the U.S. the Great Satan, and they said death to America. Believe adversaries when they say they want to kill you. I personally was targeted. There was a hitman that was actually paid money on U.S. soil to kill me. They are coming to America to kill Americans. This is a regime that finds that their Messiah is coming. And in the meantime, their struggles are supposed to be real, and they're supposed to cause chaos and brutality and murder in the process. You can't change an ideology like that. So they were going to rebuild. They were going to continue to cause harm. They were going to continue to put national security threats on Americans. Over 1,000 Americans have been injured and killed from Iran. We shouldn't even be allowing one. This had to happen. Now he just has to finish what he started.
So you see the national security justification for this particular excursion, as the president has called it. He also suggested that once this Iran situation is over, whenever that is, he may turn his sights to Cuba. And I wonder if you see that as urgent, what you would expect the U.S. to do when it comes to Cuba, a regime that clearly is teetering on the brink.
The U.S. put in their national security strategy to make the Western Hemisphere a priority. I think that you saw that with, extracting Maduro in Venezuela. The Venezuelans are going to see so much progress with that. That was something that needed to happen. They deserve freedom and they're going to get it. What you're seeing in Cuba is a little bit different because Cuba doesn't have a Delcy Rodriguez, a number two that can go and run things. Cuba doesn't have a Machado, a head of an opposition that can go forward. So I don't think that this administration is going to go militarily into Cuba. I think they're just going to put pressure through sanctions and weigh them down. They already stopped the oil that was going from Venezuela to Cuba. They had Mexico pull back on the oil that was going to Cuba, and now Cuba's feeling the pain. They can only take so much pain. What they're going to want is sanction relief. They're going to want to get the Cuban economy going again, but unfortunately, they're going to have to continue to deal with the people that are leading Cuba right now. That's not going to be something that they can change.
Yeah, there have been questions about whether we could sustain action in two parts of the world militarily like this, because we have a massive buildup in the Middle East that's standing by to do what you're suggesting, which is to finish the job. If in fact we went pedal to the metal and took the advice of Nikki Haley, how long would it take?
Stop negotiating with them. That's never going to happen. We've lost time. Go finish what you started. I think within a week to 2 weeks.
Is that right?
They could.
Well,
a week to 2 weeks. They could. It would take them the amount of time to extract the nuclear enrichment that they have. I think you'll have to have special forces there to go and hold Carg Island. Is going to obviously take a little bit longer, but this is one where they need to be focused and mission driven on go after the revenues that are going to Iran, and that's the only way to get rid of the regime. And then the Iranian people had no way to defend themselves. They killed thousands of people in the streets and made examples of them. What's happened in the past is the U.S. has actually helped countries so that the people can rise up. That's the way that this is going to end, is when the people feel safe enough to rise up, that they can go and take their country back.
If the U.S. were to pursue the course of action you're describing, do you believe it would be prudent for the president to go to Congress first? Do you see that constitutional necessity that he has consistently denied is necessary?
I always think you need to go to Congress. One, you need the buy-in of Congress. You need
All right, we're testing the low. All right, testing the low again. Looks like we might drop off. S&P 500. They take out some stops and then reverse it. What are they going to do here? What are they going to do?
Congress needs to step up. There are a lot of things Congress could be doing, but right now we're hearing a lot of talking and not a lot of action.
The political pendulum also swings as we watch the primary season unfold, and there was a state you know a lot about. That was, of course, voting yesterday in South Carolina. The president's endorsements have been on the line quite a bit here more recently, and they paid off last evening, particularly in the race for governor, the primary for governor. Pamela, curious your thoughts on this and what it looks to be the end of a couple of political careers, including Nancy Mace and someone who you endorsed and endorsed you back in Ralph Norman. What transpired last night, and is it good for your party?
I think, first of all, primaries are always good for our party. I think that it's very important that you have debate, that you have, them touching as many hands as they can and really getting their message out. So I think having a full primaries was a great thing. The press has been covering that Nancy Mace was a factor, and because of the Trump endorsement, she lost. She was never a factor in this race. She was always in fifth place. She was never going anywhere. She knew that, and South Carolina knew that. So, she laid her bed. She's now laying it. That's what she's doing. Ralph Norman, who I respect and love, we go way back. He does what he says he's going to do. He's got real clarity. Certainly, I wish he would have made it into the runoff, but he was always pushing, and then you had Evan and so look, it's the power of the Trump endorsement. Evan wouldn't have made it in the runoff without the Trump endorsement. So his endorsement is strong. It does move the ball, and we just have to make sure that who we elect in the primary is who we want to.
7,300 still holding. If it drops through 7,300, we could accelerate very quickly on the downside. All right, so if we lose this, we could accelerate lower pretty quickly. Watch it here.
I do think we'll hold the Texas seat, but it's just not Republicans. Look at Graham Plattner and Maine. It's amazing to me. I always say it's important to understand that in a primary, you make your choice. In a general election, you're given the choice. You have to choose between the two. But in America, typically only 15% of Americans vote for primary. So what you're getting is the extreme of both sides. So by the time most Americans go to vote, they're having to choose between two extremes. It's because we don't talk about primaries in high schools. Our kids don't know that. They know to vote in November. They know to do that, and they do. But until we start talking about the importance of primaries, and until Americans see that that's actually the race that matters, you're going to have the Paxton race, you're going to have the Plattners, you're going to have those that make us kind of uncomfortable. But, all in the name of getting the majority, let's get the right, good people in there so that we can start getting things done.
Just sitting here. Wake me up when it's over.
Congress done about that? So you want to talk about a war, but why aren't they talking about balancing a budget? We're $39 trillion in debt. We're going to be $40 trillion in the fall. That's unacceptable. That's like the U.S. taking in $5 trillion a year and spending $7 trillion a year. Now we're 100% over GDP. The last two recessions, we had a buffer. If we have another recession, there will be no stimulus. There will be no tax breaks. You aren't going to have a cushion to do anything with. That is something Congress can address now, and they've yet to do it. Social Security is going to run out in 6 years. Every U.S. Senate candidate needs to be asked, what are you going to do about it? Because 75 million Americans will be affected by that. Don't wait until that falls on us and do a quick Band-Aid of the deal. It's something I talked about in was reforming entitlements. You have to do that. In a few years, 15% of our federal outlays will be interest. That's not okay.
Bloomberg. They can't stay away from politics. All right, so we're hanging on to 7,300.
Stuck at this resistance area. Our moving average picture shows that we have crossed above
Apple still just off the highs of the day. Apple looking pretty good. Market's not doing too bad, really. Keep looking for reasons to be more bearish, but don't have it yet. If we hadn't already tested the 50 EMA yesterday, S&P 500, I'd be more concerned. If the New York Stock Exchange was below the 20-day, I'd be more concerned. It is coming back down to the 21-day. If it loses that, comes to the 50-day, I still wouldn't be that concerned. July tends to be a very strong month of the year. If you know anything about seasonality, you know that July tends to be a very strong month, especially for technology. So the technology stocks that are pulling back right now, here's July right here in the middle of the screen. If technology stocks pull back in the short term and get to where puts are expensive and calls are cheap, that's going to be a nice trade back up into July. Just a thought. Okay, so let's look at XLK and go out 20 years. Let's do a 20-year average. Okay, 20-year average. That's the most I can pull this over. 20-year average on XLK. July tends to be the strongest month of the year. June, we tend to have a little dip there. Semiconductors. Okay, semiconductors do the same thing. I'm going to go out 20 years, 20-year average. Okay, not the best for SMH, but still higher than June. And we can see what May seasonally does, right? So we had that big run up in May. Semiconductors, let's look at software, IGV. IGV tends to be higher in July. So stocks like Oracle reporting earnings tonight. Hopefully Oracle reports a good number. Seasonality looks good, though. So not that concerned. We're below the 200-day. We could come all the way down to the 50-day Oracle, for whatever reason, and still be bullish. The 50-day, okay, intermediate time frame, fair value. Okay, we're below fair value right here on the 21-day at the present time. Fair value, 21-day. That's the short term. Intermediate term, 50 days just below. The 200 days just above. So we're kind of juxtaposed between those levels. We've been making higher highs and higher lows. I got a feeling Oracle's going to do just fine. Whether price action reflects it or not, it's another story. But earnings should be fine because they've done a lot to address the situation that caused the pullback over here when we got all the way up to 343. On that earnings report, they talked about their CapEx spending. Markets did not like it, and you can see what happened. Big drop. You can see on the weekly. Now, if we lose the 192 area, the 10 EMA, short term, I wouldn't be doing anything else with Oracle. It would be good if we bounce and get back up towards 250, obviously. But these are the areas where I'm referencing. 192.64, that's the 10 EMA weekly. We moved above it 9 weeks ago. We moved above it, looking for a follow-through in the short term. That would be good for IGV. IGV, that's the number one component, Oracle.
It was around where we saw the highs after a gap down. It was around where we saw the lows after a gap to the upside later, and it was around where we hit lows before earnings. So now, even though that level has been breached, it still stands out as one area.
All right, so here's IGV. IGV, the top 10 components of the IGV. Software index, Oracle, almost 10%. Microsoft, 8%. Palo Alto, Palantir, CrowdStrike, Salesforce, etc. Adobe and Cadence Design Systems. AppLovin, of course, 5%. What is App 11 doing? I haven't looked at that today. App 11, APP. All right, that's off again today. Starting to come off the low. App 11. Apple. Turning back up. Apple. It's above the 100 period moving average. That red line, that's the 100 period moving average. This is Apple. Apple looks good. All right, about to take the high of the day again. Hammer on the daily. That looks good.
So this short-term area has so far held firm. We'll have to see if it can reassert itself and keep pushing to the upside here along with price. So now our RSI, we have made our way out of the oversold area. We have broken it up beyond our red downward sloping trend line, but we have not yet made it above the 50 midline here. So although we have had a decent bounce, there are some technical factors here that have not really been.
Okay, what is Campbell's soup doing? Campbell's look really good today. Earlier, right? This is Robin Hood. Let's see, Robin Hood. Looking for that to push off of this level, get back to the highs. It looked pretty good on the daily. You got to squeeze Robin Hood. You need to test that 95 level. I already have some 95 100s. I added to them a little while ago. Netflix got an upgrade today. I forget who it was, but Netflix getting another upgrade. A buy. Netflix, somebody covered it with a buy. I forget who it was. Citigroup, something like that. Microsoft still trailing off. All the New York FANGs, for the most part, look kind of weak at the moment. So New York FANGs, no surprise, we are back into yesterday's wick. 50 days right there. We tested it yesterday. RSI is almost oversold. So we're setting up again. Okay, setting up on these. All right, we've had this nice pullback. We had a huge run up. That's about a 30%, 382 Fibonacci pullback, right? Just visualizing what a 382 would look like. Why?
So, Jenny, the idea here is nice move today. Can even hold on to that gain, but maybe not a lot of continuation into the next week.
Okay, 50 days right there. 50 day. Okay, let's do a little quick calculation here. All right, here is the run up right about there, up to the high. Okay, so it's right at a 382 right now, right at the 50-day moving average. Okay, so 382 from the run up that started in late March, the run up in the New York FANG components. We're at 382 right this minute, more or less. The 50-day is just below, so I got a feeling we're going to bounce. I would think we're going to bounce. All right, so this is reset now. This is reset and ready to go. Now it just needs a turn. Okay. So 382, 50-day moving average. RSI is below 50. Get that to turn back up. Get stochastic to turn back up. Everything is resetting. Okay. After a huge run up, after that huge run up from late March, makes sense. So just going to have to hold your nose for a couple more days.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and get
Muse Markets. Muse Markets.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim's my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. Today we're going to discuss supply Applied Materials making a big bet on AI demand, announcing a $500 million expansion in Singapore, boosting its manufacturing and R&D capacity. So joining us now to discuss more on this deal and some of the positive sell-side reaction, at least so far today, is Marley Caden, of course, host for the Schwab Network. And so, Marley, walk us through the details because I've seen pretty positive analyst commentary following this news.
Yes. Okay, so let's go through the details first. We are seeing
The positive sell-side reaction, at least so far today, is Marley Caden, of course, host for the Schwab Network. And so, Marley, walk us through the details because I've seen pretty positive analyst commentary following this news.
Yes. Okay, so let's go through the details first. We are seeing a move to the upside in AMAT today, which is certainly different than what we're seeing in the market right now. Looking, all four major indices are in the red. So a nice move to the upside for AMAT. And as you said, they're expanding manufacturing and R&D operations in Singapore to help with this AI infrastructure build out to support the global demand for it. This new $500 million campus that they're launching more than doubles AMAT's advanced clean room capacity in Singapore, and this new facility is already operating at volume production. It's focused on servicing the chip makers that are expanding their production to try to meet this AI demand that seems almost unmeetable at times. The campus features an expansive manufacturing clean room and production capacity, along with R&D facilities that are supporting global and regional customers. With this expansion, Applied Materials says that they do also hope to add more than 1,000 local jobs over the next few years, both to support industry growth and also technology commercialization. Now, there were some interesting things that also stuck out to me that weren't highlighted in most reports, but I did find them fascinating. The facility deploys autonomous mobile robots. It has autonomous assembly and testing.
All right, Apple making a new high here, so that's going to help out. Apple's making a new high. All right, there it goes. There goes Apple. The S&P still stuck here.
They have augmented and virtual reality tools that are further supporting technician training and precision maintenance operations. So really,
IWM.
It's kind of futuristic.
Just watch the 10-year yield.
Low, tick alert minus 800.
Also features an on-site solar panel system. It has LED lighting, low carbon concrete construction, and a closed loop.
All right, watch the 10-year yield. Let's see if we can get this up here for you guys. 10-year yield. Lower 10-year will be good for IWM. Okay. So you can see the 10-year starting to rise. We need that below 4.5%. Okay. The 10-year starting to rise here. Okay, 10-year. Daily, 60-minute. 60-minute. Okay, that's a 60-minute. So IWM, you got to watch it. It's going to do the inverse. Okay, Microsoft just fell out of bed. Microsoft.
The analyst was saying that the firm also has leading edge foundry and logic of its primary wafer equipment growth driver, with the majority of these new wafer start investments in 2026 and 2027. And UBS also raised their price target up to 570 from 515, keeps a buy rating. Not as significant of a price target hike there, but a company that has been performing really well year to date, they're at 94%. So to have more bullish action in this name, just more upside for AMAT, as they're really trying to keep pace with this demand, where it seems as though almost no company can keep pace.
Yeah, no, looking at this space, whether it's LAM, whether it's Applied Materials, they just seem to be more consistent than some of the other more volatile parts of the semis. When you talk to guests and they're talking about this space broadly, or you look at analyst notes, is that because they're a little bit more in that secure part of the, I guess, the supply chain of all of this? Or I look at this and I thought the NASDAQ was down this week. It doesn't look like this stock's really experienced any of that.
It is sort of behaving oddly compared to the other names that we're seeing, but some of it is what you highlighted, where it falls in the ecosystem. There is some protection, I think, to its general location in the ecosystem, but also I think that they've made a lot of really smart choices. I mean, nothing is done unintentionally here. And when they're doing it to the highest level of performance. The new campus isn't just a new campus. It's a new campus that meets the highest level of green rating possible. And they've deployed all of these really appealing things to where it's located and also to investors. They're also maxing out AI usage with robots and AR, VR training and really putting their money where their mouth is in terms of the AI revolution and sort of firmly putting themselves in it. I don't think any of those details hurt them. If anything, I think that's why we see a lot of positive reaction to this name, because they're clearly very intentional in every move that they make. And also this announcement, yes, we're expanding, we've got this new campus. The new campus is fully online. It's coming in 2 years. It is fully functional, and we're telling you about it right now.
Yeah, that's a good point. I do think that proof of execution right now is so critical. We've talked about this at the top of our show. I think, again, it's really what's seemingly working in AI and what's not in applied materials today, even though modestly higher, did still touch an all-time high quietly today. So it's not like the widespread doom of tech is impacting every company the same, as we've said.
Well, I think the thing that you said, too, is the big piece. It's not like this house of cards thing like it is maybe with, maybe bad analogy, but Supermicro, for example. It's this float money to do something in the future.
Firefly.
This is expensive, yes, but it's like, it's immediate.
Yeah, nice slow turn here would be good. Fly.
Some of this other stuff that we've seen in this AI trade.
We have a lot of the show me story right now. Everybody wants show me. We want ROI. We want to see where your money is. We want to see proof that you're spending it where you said you spent it. We can see where they spent it. So I mean, here,
previous low.
Story
Firefly looking for that to turn back up.
We will show you.
Yeah, and that's a very good point. I think, again, we continue to say it, but it's really the theme.
Okay. Intel had a nice run up this morning, gave it all back. Apple at the high today. Apple hits the low, reverses, gives us a hammer. Okay, left to be seen, but if we hold this level and follow through tomorrow, that would be great. That would be good.
Trying to get it to center around $500 a share is a best case scenario, but it's done for a credit, and because it's a broken wing butterfly where you have a $20 wide credit spread to the downside and a $10 wide debit spread to the upside. And so with this, it's
really don't feel like trading much today. It's just a lot of chop with this, with the signal telling us that we're probably going to see more downside at the moment. Okay, even Bitcoin pulled back. That was one thing that was working.
With a break even down at 486.50, a max loss of 650, and a 1350 max gain if it kind of hangs out right here. So omnidirectional in the sense that the best case scenario is for the stock not to move, but there's no upside risk, so it does have a neutral bullish construction.
And hey, up 95%
Okay,
this year,
IWM.
10.5% this week so far. So it's been a pretty decent week for applied materials here. So appreciate it to Marley Caden for all of that breakdown on really some of the positive catalysts behind this name. Now, coming up next, we will discuss some of the drivers of today's market. Oracle earnings.
Man, talk about stay down here forever, right?
We'll break down what you watch across tech.
Gosh, this is really a pain in the buttocks. We don't have to bounce off of it. I mean, we could just close right on it. That'd be fine with me. You can see the red down here. That's telling you that if we move into this area, we could see an acceleration pretty quick. So far, we've traded about 2 billion in 0 day. You can see it right here on the right side. Okay, 2 billion. Selling 2 billion worth of 0 day. Market makers. Okay, I got to take another break. I just can't sit here and look at this thing any longer, just sitting here doing nothing. I got my, what do you call it? Okay, I got my phone so I can monitor what's going on. Audio.
She's got your smile, Carl. Yep, your number one broker's here to welcome your new little dependent. Actually, we invest what you want now. We have everything we need.
Okay, I got to take a 2-minute break. I can't take this. Go up or down. Let's do something.
HXHX. HXHX. HELC may resume in less than a minute. CRMT. AMPG. HXHX.
It is 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Worst level of the day right now on the S&P 500 index. Stock market losses are intensifying. Right to the numbers here. Lots of factors for the sell-off. The S&P down 93 now to 72.93. That is a drop of 1.3%. We got a flare-up in geopolitical tensions. That is spurring a rally in oil. And stocks are selling off. Right now we've got the S&P down 1.3%. Again, lower by 92 points. The Dow, 50,108. It is down 762 points. That is a drop of 1.5%. NASDAQ down 1.6%. Tech names being hit hard again today. The NASDAQ 100 index down 1.6%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 3.1%. All of this with the VIX closing in on 22 amid geopolitical tensions. The 10-year at 4.55%, the 2-year 4.13%, and the 30-year currently at 5.03%. Gold is down 3.6%, 41.05 the ounce. Crude 91.59 a barrel on WTI, up by 3.8%. Barrel of Brent 94.35, up now by 3.2%. Starbucks may have a deal brewing in Japan. Sources tell Bloomberg Starbucks is considering options for its Japanese business, including a stake sale. This would follow the disposal of a majority interest in its China operations. Starbucks shares up now by 1.1%. Again, recapping the Dow, the S&P, NASDAQ all lower, oil higher, S&P down 1.2%, NASDAQ 100 down 1.7%, and the SOX down 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Palladino Daily. That is a Bloomberg Business Flash.
Okay, Charlie, thanks. We'll be back in just about 20 minutes, top of the hour, as we kick off Bloomberg Business Week Daily with another look at the markets here, keeping our eyes on the Wednesday trade as we talk politics here in Washington. The President of the United States held a big signing ceremony a little bit earlier. He did reconciliation past the $70 billion for ICE and Border Patrol, now signed into law. And the next stop on the road brings us scaling to FISA 702, and the President is now starting to get involved, knowing that we've talked to a number of lawmakers, Democrats and Republicans, who have quote-unquote heartburn over the idea of Bill Pulte as DNI, and that's been slowing things down on the renewal front. Vote set for Friday. Now the President is asking not only for a bit of patience in naming a permanent DNI, but also a short-term solution here. Such as we can to buy time to come up with the right candidate.
Another short-term extension after we've already seen short-term extensions previously, knowing the original bipartisan deal was to extend this key warrantless surveillance program for 3 years. That'll part with the tapping of Bill Pulte, but perhaps the suggestion here that he is looking for an alternate candidate to serve on a permanent basis seems to be something of an olive branch to concerned Democrats. So let's get into all of this now as we turn to Republican Congresswoman Nicole Malliotakis of New York, who is here with us in our Washington, D.C. studio. Congresswoman, welcome back to Bloomberg. It's good to see you. I don't know if you think that this short-term extension is possible by even Friday. At this point, is the president doing enough to make it clear that Bill Pulte will eventually have some separation from the nation's intelligence services?
I think that we have to extend FISA. To me, as a New York Republican in the post-9/11 world, there's two things that are more critical at this moment is to make sure that that FISA authority remains with the intelligence community. It has stopped terror attacks. It has provided necessary information to keep our country safe. And it is critical that it does get extended, particularly when you think about all that is happening this year. It's not just the 25th anniversary of September 11th. It is, you have the World Cup starting this week, and you have the Knicks. You have America 250 events coming. There's just so much activity not to mention the conflict with Iran. So there's a lot happening right now where we need to make sure that our intelligence community has that as a tool because it's just so critically important.
We've been discussing the fact that it's not top of mind or in front of Americans the way it's shut down. You've got lines there, of course, there's a point of pressure here. Not everyone knows what FISA 702 is. What would you tell someone in Staten Island who asks you, who cares what happens if it expires? What would we lose?
Yeah, and part of the reason why the average person doesn't know what FISA is because it is so heavily classified. And you can't even publicly give examples of the types of things that have been stopped because of it. Although, there were reports that in 2024 there was a potential attack at the Taylor Swift concert, for example, that was thwarted because of FISA. But basically, it is a tool that is used, a surveillance tool that the intelligence community uses to track foreign individuals not on U.S. soil, and that is how they conduct a lot of this investigation. Now, the controversy with some of the members of Congress, right, has been that if that foreign individual outside the United States communicates with somebody who is in the United States and is an American citizen, those are the privacy concerns that some of the members have. But I think that at minimum, we should be able to do a short-term extension of the existing law. There's still negotiations that are happening in terms of whether there should be a warrant or not a warrant if an American citizen inadvertently got swooped up in an investigation of a foreign individual. So I think that, but we can't let it go dark. I think that's the bottom line for people like me who are very concerned about what could happen if FISA were to go offline and that tool is taken away. And remember, there were a number of reforms, about 50 reforms that were added about 2 years ago when FISA was reauthorized. And so there were already very significant reforms. And remember, President Trump had been one of the biggest critics of FISA. He felt that exactly. And he's the one saying we cannot let this thing expire and that there were reforms. And so he's advocating for it. Hope he can convince some of those members who have been kind of reluctant right now to support it.
Well, I wonder what you make of the president's timing decisions here, tapping Bill Pulte as acting DNI just before FISA expires, having the DOJ announce this anti-weaponization fund just before you're trying to get through a massive budget reconciliation package. Is he just making it more difficult for those of you who sit up on Capitol Hill?
I think maybe it wasn't the most politically savvy things to be saying when you're trying to get certain things done. You gotta love President Trump for his honesty, right? He's very blunt. He's out there. He's transparent. He says what he feels. He does what he thinks is the right thing. I think that it probably was not the best timing if he truly wants Pulte to have that position. With that said, I think that a lot of members are looking to see if we can get somebody a little more qualified specifically in the national security space. I think that that's probably where this is going to end up. It'll probably be somebody else, and I think is concern about that, and he needs to address it over the next 24 hours or so in order for us to get this, I think, across the finish line.
Before we move on, though, should people brace for this temporary expiration, or could this still be saved by Friday?
Look, I'm hopeful that we will get the job done. I've spoken with folks over at the White House, with the speaker, and I mean everyone understands how critical this is, and we've been told to not rush out of here. Usually the last vote of the week, everyone's already planning it's a mass exodus. We need to stick around. I'm prepared to stick around, and we need the members to stay here. And I think that the attendance does become a problem though. And I think that's irresponsible. I think the members need to stay here until FISA is extended. And a short-term extension, I think, probably is the only solution at this time, considering how late it is. And the Democrats have already said they're not going to help at all. So if they're not going to help at all, we need every Republican to stay here and just do that temporary extension to make sure that it stays on board.
Well, as we consider what else the president is grappling with here, he announced in the Oval Office earlier that the U.S. is going to be attacking Iran very hard, to use his words, after we saw the response yesterday to the downing of the Apache helicopter. In your mind, is it in the best interest of the United States to just go forward with the military option in the absence of real progress on diplomacy?
Look, it's hard for me to say without having all the information in front of me of what the military with intelligence is saying. I do believe that Iran has been dragging its feet, and if they're not going to come to a deal, then we're going to have to deal with them in a different way. And, the president has made these threats, and if he's making these threats that they're going to take military action if there's no progress in negotiations, I think he needs to follow through with that. I think you can't bluff in this situation, and it's too serious. This needs to be resolved. And as Secretary Rubio says, it's going to be resolved one way or the other. And so I think that it's good to be pushing Iran, but at some point he's going to have to make a decision if they're going to just use military force to get the strait back and to try to put an end overall to their capabilities, any nuclear capabilities. I think it's in Iran's best interest to make a deal, but they also know, with an election coming up, that time is on their side in a sense, right? Even though the president says that's not.
Back above 7,300. Gosh, this is so boring. This is so boring. Intel's starting to turn up. Shorts covering. Intel. All right, we got a lot of shorts starting to cover. Shorts starting to cover.
That enriched uranium gets turned over to somebody. It may not be the United States, but maybe an intermediary. But it's got to get out of the hands of the Iranian.
I saw evidence today that for a third month, this war or conflict, whatever you want to call it, is pushing prices higher and look no further than the.
Okay, simultaneously, got a lot of stocks moving.
Nationally, 415. I think we're at 442 in New York. The president was asked today about prices, and you might have heard his response by now. It's a little bit difficult to tell exactly what he meant with his answer, but let's listen. We have reporters in the Oval Office.
The numbers were great. You know what I really love? I love the inflation. You know why? Because as soon as this goes up, I can say it now. Something in the, we've been taking out millions of barrels of oil. Nobody knows. Who doesn't know about it? Iran. So right now.
I love the inflation that's going to be in campaign ads.
Oh boy.
For months ahead. It's unclear how he meant that. I think he's suggesting that because it's going to fall, he's getting a kick out of these numbers now. I'm not sure. What does it mean for your voters, though, and for your election campaign?
I don't love inflation. My constituents don't love.
Oh, shit. Man, they're just like nonstop politics today on Bloomberg. Jesus.
AFPG.
HKIT.
AMPG, CIIT, FRMI, DSY, BSM,
All right, Microsoft trying to turn back up. Yeah, Tony, earnings. The earnings are what they are. That's what's keeping things up here for the elevated for the most part. At least from my foxhole, that's what it looks like. You got Apple continuing to push here. Apple. Okay, it's going to turn into a club instead of a hammer. That's a club. That's not a hammer. Jeez. That's a nice reversal so far. Yeah, definitely a nice reversal. Mondo caught some of this down here, I believe, right? I got stopped out of a position, I think what's today? Wednesday? I got stopped out of a position I took on Monday, yesterday. And I do have an existing position that's out in July. So hopefully that's doing okay. So I got the 300 strike for July. I added some 310, 315s on Monday, and that got stopped out on Tuesday. Anyway, so it's nice to see Apple running back up. All right. All right, Apple's still going here. Nice. Nice, Frana. Oh, boy. Here we go. Apple's still going. Apple, nice little round trip here underway. Wow. They let this thing drop for 3 days straight. People sold. There goes Broadcom. Broadcom turning it back up. Broadcom. Broadcom +7 off the low. Hopefully, Oracle 250. Okay, Intel turning the corner. Looks like futures might want to run back up.
CHOW. GCDT. CRMT. DSS. CHOW. AMPG. DSS. CRMT. CHOW. CPOP may resume in less than a minute.
Okay, Tesla trying to turn. We got Intel trying to turn. Broadcom $7 off the low. Apple at the high of the day. That was a nice retracement. Can we get futures to push up a little bit more? That would be nice. Hedge flows trying to turn up, but we're losing time. It's 2 o'clock on the East Coast. A little bit after 2 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on Wednesday, June the 10th, a rather boring Wednesday, I must say. Markets haven't moved much since about 11:15. Drifted a little bit lower down to the 7,300 level and dipped below it. Now we're popping back up. Okay. All right. We're starting to push off of this level. Shorts covering. There goes Apple. Apple doing really nice here.
All right, let's get more on the U.S. war. Of course, that was President Trump earlier today. We also want to talk a little bit about the U.S.
Broadcom.
With us is Chris Kennedy. He's Bloomberg Economics. He's out there in our Bloomberg News DC. So Chris, good to have you here. Lots to get to on this Wednesday. Let's talk about the war. President Trump, first of all, saying Iran would, quote, pay the price for delaying negotiations for an interim peace deal after the renewed attacks on it, but for restraining. really what's been a very, very fragile 2-month truce. So what does this mean in terms of U.S. elections? Does this war continue to drag on? What's next for the U.S. initiated war? Because it keeps feeling like we're going to come to an end, but it just doesn't really happen.
Yeah, so I think the president's clearly frustrated with the pace of negotiations that they haven't been able to get to this sort of interim deal that would allow deeper technical negotiations over Iran's nuclear program.
McDonald's doing well. Yesterday we highlighted McDonald's looked pretty good. McDonald's was looking pretty good yesterday. Let's take a look at it. I just noticed it on my extended charts here. Okay, McDonald's turning back up. Okay, so McDonald's is at the lows of the year, basically. So, not basically, it is. So, at the lows for the year. And the probability of moving back up towards the 200-day is much greater. We have the 10 EMA, prices moving above the 10 EMA. Soon, most likely, probably by next week, we'll be up here. A 50% retracement would bring it back to about 310, 315. That's the target I'd be looking at. McDonald's, I do have a small position in McDonald's. That is December 290s. I have December 290s. That's just out of the money. Okay, I think those were about a 40 delta. Last time I looked. Let me see, December McDonald's. So I like McDonald's for a bounce.
Well, clearly, Iran is feeling very confident that they have the ability to completely shut down shipping through the Strait of
Let's see, December. Let's see what these are right now. Let's see, Vega's 81. All right, they're 50 delta now. They're 50 deltas. They were 40 deltas at one point. So that's December. Okay, those are going for $19 each, $20 basically. Offer, you can get in for $17. I made it a spread. They had, at the time, they had about 1,000 contracts. There's still about 1,000 contracts in there. So I bought the 40 delta, sold the 30 delta at the time. Now it's a 50 delta, 42 delta. So that's doing well. That's about $100 per contract so far. Up on McDonald's, $80 per contract on McDonald's. With the prospect of this moving back up, could be in the money pretty soon. McDonald's, so it's something to consider. McDonald's, I have the 29300. So this looks good. McDonald's. Okay, so let's see what is Mac actually moving at the moment on the S&P 500. What's going on here? Okay, there we go. S&P 500. We got Casey's up 17% now. It's trading near the highs that we put in back in May. Robinhood. I did buy more Robinhood. I have some Robinhood. Looking to buy dips on Robinhood. Okay, so we got some dips over here before lunch, right after lunch. Okay, looking for this to move a bit higher. Robinhood. That's been active lately, so yeah, that looked good. Devon Energy, Hammer, Light, LITE, AAOI, and GLW. Those all got a bounce today, I believe. Live Nation. It's the time of year, I guess, people start going to these concerts and stuff, right? Live Nation. Oak. What do they do again? Oak. OKE. What do they do? OKE. Oak. I want to say construction. Energy. Kind of close, not really. Energy, Oak. They're based out of Tulsa, Oklahoma. Good old Tulsa. That's where my father moved at one point. With my stepmother, who hated me One of the reasons I joined the Navy is to get away from her. She was an evil witch of the West. Back when I was a kid, I gave her my enlistment. I was 17. I gave her my enlistment papers, and I said, if you sign this, I'll be out of your hair. She hated me. Son from another mother. She signed it, and like the next day, I was at the recruitment office, and then 2 days later, I was in San Diego at boot camp. Good memories. It was January, cold as hell, which I find was unusual. I guess California gets cold right during the winter months, somewhat. Anyway, we were wearing jackets and stuff, marching around, doing our boot camp stuff. Good memories. Anyway, how did I get on that subject? Oh, Oklahoma. Okay, so Oklahoma. Apple, though, Apple keeps going. No relation to my stepmother. The funny thing is, you know what her name? You know what her name was? It's so funny. She was so miserable. Such a miserable person. Her name was Joy. Joy. It's like, oh my gosh, can you be more miserable? One day I went home from school. I had a bunch of my buddies with me, and she was sitting there at the table. We had air conditioner, but she had all the windows open. She's sitting there in her bra and underwear. And of course, I'm like 16 years old, 15 years old. I'm not paying attention. Come running in with all my friends, and she freaked out. It's like, oh my God, there's like boys in the house. And that was back when people were like really religious, you know. So I got so in trouble for that. So man, I was just a kid, just coming in. I get in trouble for everything. Meanwhile, Apple continues to move higher. Enough of my stories about my stepmother, evil stepmother. So many stories about her. I remember she made my dad a cake one time, and she wasn't the best baker or candlestick maker. She baked this cake, right? And she took it out of the oven. She iced it when it was hot. And people that have baked, they know exactly what's going to happen next. 2-layer cake. She put the second layer on. She turned around to wash off the knife that she was using to put the icing on, and the top layer had fallen off on the floor. I was like, started laughing my ass off. She like threw something at me. I don't remember what it was, but the good old days, man. I tell you what, I miss those. Makes you a better parent when you see what bad parents are like, right? Joy, Joy, Hudspeth from Tulsa, Oklahoma. Then they moved to Oklahoma City. Meanwhile, we still lived in New Orleans. Okay, what's going on here? Apple's still pushing, looking pretty good. S&P, not much momentum here. Staying above 7,300, but could roll over very easily. So just be watchful. I'm not doing a whole lot today. As you can tell, I'm telling childhood stories instead of trading. Yeah, San Francisco. Yeah. I was in San Diego though at the time. I remember the guys that came down from San Francisco area that were in boot at the same time I was. They were saying, "Wow, this is really warm down here." It's like, okay, whatever. I was from New Orleans, and it never gets cold in New Orleans hardly. Every once in a while we get a little bit of snow in New Orleans when the jet stream dips low enough. That maybe happens once every 10 years. Whose anniversary is it? Happy anniversary. Harry nurses covering quick. Cayman, you're crazy, man.
So then the next question for Rush is, when can you? How far down does inflation have to come? We don't know what he's going to say, but it's going to be very difficult for him or anyone.
Okay.
The good news for Rush and the president is it looks like tariff inflation is starting to fall out of the numbers because core goods prices were down a 10%.
Okay, enough of you. Enough of you. I only have Bloomberg on when I'm like switching channels usually.
Okay, what's next for Oracle?
So RPOs matter.
Okay, S&P trying to follow through here. Apple's still going here. Apple's still moving higher. Okay, this looks like institutions. Okay. Wow. Very nice. Very nice, Apple.
The numbers that we see demonstrate that Oracle Cloud is actually growing faster than its peers. That includes AWS, that includes Azure, and that includes Google Cloud. So I think this is something that will reflect the fact that Oracle Cloud is being successful, and as such will be able to meet its guidance. And I think this is also reflecting the fact that Oracle Cloud and Oracle overall has demonstrated clear innovation in areas such as driving multi-cloud implementation. This is where I think Oracle won valuable mind share. Plus, Oracle has the AI database engine really fueling its entire portfolio, and that's been a clear differentiator for why Oracle Cloud, the fact that they're winning a lot of these new deals, including on the AI training side, because of the bare metal approach they took. And this is a clear differentiator against folks such as Google Cloud, which has relied more heavily on virtualization. And as a result, we're seeing them, having to diversify their capacity with folks like SpaceX. And so I think this is all lining up to show, like, okay, why Oracle? And these are the reasons why.
OCI, Oracle Cloud Infrastructure, is expected to grow as much as about 90% on a year-over-year basis. What's your expectation on 2027? Do you think that momentum can continue?
I believe so overall. That would include the entire, I would say, hyperscaler realm. And so Oracle is benefiting overall from this rising tide. Now, there's been some speculation and talk, okay, what about an AI bubble? There's more, say, local resistance to data center build. But I think what we're going to see is that they're going to be very smart about where they do the data center build so that they optimize the land and energy requirements so that it does help, the communities understand why it could be a net benefit for them. And that's, one aspect. But I think equally important is the fact that really the balance sheets are very sound and that the capital reserves and the mean cash flows are demonstrating like these enterprise demands are real, that they're actually pulling through, the capacity demand that warrants these builds. And as a result, Oracle Cloud, at least through calendar 27,
Low tick alert -800.
Okay, rolling over now.
And I think this offsets the overall concern about what about an AI bubble. The fundamentals are much different from, say, the .com bubble.
Ron, let me ask you this. I think I framed the conversation about,
Okay.
the expectations on the most recent quarter. But what if they miss in
They're
terms
killing
of
puts and calls on either side of price action right now.
when they've missed expectations? December down double digits off of missing their forecast while also spending big at the same time. If they miss on that front, do you expect a similar market reaction?
I would say it's not terribly unique to Oracle that, yes, if you, for whatever reason, miss a guideline or, have a miss on the beat, you're naturally going to be penalized. And I think in Oracle's case, if that were to happen, this hypothetical, that, yes, it would be a hiccup. And we already saw, with the concern about, okay, they're having to borrow, whereas, the hyperscaler competitors did not really have to borrow in order to fund, their CapEx outlays. And so I think that's already been offset. Oracle has demonstrated that it has the overall resilience, the portfolio diversity, and all the fundamentals in place. So even if there's a hiccup, that Oracle will remain a sound investment regardless. However, let's wait and see. I think they will actually deliver.
Ron, I'll leave the floor to you. Take it where you want to go. Any final thought you want to leave us with, whether it's a challenge you're expecting or something that you are hoping to hear from Oracle?
Yeah, I think the benefits are going to outweigh the concerns. Some of them are really not unique to Oracle, but I think what's really important here is that Oracle really does have some portfolio capabilities that are very distinct and are competitive advantages. I touched on the AI database capabilities, but I think also Oracle has the pieces in place to help drive agentic implementations, and that's going to be a key part of why enterprises are going to spend even more. And Oracle has a rather strong position in the enterprise market to drive the adoption there, and as a result, really
Apple.
Thank you, Ron. That's Ron Westphal, Vice President, Practice Lead, Networking and Infrastructure, Hyperframe Research. Coming up, we'll bring you some charts to keep an eye on in the middle of this roller coaster trading week. Watch this. We'll be back after this short break.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Man. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need.
New York Fangs are worse for wear right now. We got Apple at the high of the day. That's helping somewhat. We had some short covering, but that's quickly started to see a resumption of weakness. Okay, futures. We had a little bit of selling pressure. That's dissipated. It's really tough day today. For day traders, okay, but for swing traders, market's just not doing anything. Super Micro down 20%. Oh, Super Micro got slammed. Wow. What the hell happened there?
The S&P 500 on track for its third down day out of the past four. The pressure is on today. So walk us through the levels you're paying attention to.
You got it, Diane. Good to see you as always. The weakness we're experiencing, it never feels good. It's often important just to put everything in a little bit of context. And we look at the move that we've made over the last, say, 7 trading sessions. Even if we find support at the 50-day moving average around 7,200, 7,215, it's going to result in about a 5% drawdown off the peak, which is very standard, very much within reason. And to this point, nothing to really write home about. But the levels we're monitoring now, we've clearly taken out the 10-day with some conviction, the 20-day with some conviction as well. We resided around 74.70 on the 20-day there. But the 72.95 ledge, horizontal support, it's a gap level. We traded through it to the downside with some aggression midday yesterday. We rallied and closed above it. I think that 7,300 presents an interesting area for traders in the real short term, the remainder of today heading into tomorrow. And we'll see if there's a need to actually test that.
Yeah, Super Micro. What the hell? That thing's down. Oh, ouch. Ouch.
side. So
Yeah.
let's not, put too much
Sold on the move above the 200-day. Man, this thing is super volatile. All right, TSSI better, right? TSSI. It's still back down. I did reduce my exposure in TSSI at the same time. So my position is smaller. I have my average is a little bit higher now because I had an average around $11.
Let's talk an individual name that's on your radar today. Bank of America. The stock back a little bit higher today, so it's bucking the broader market trend. It's actually up over 6% this month. Year to date is a little change, but talk to us about why it's on your radar today.
Sure thing. Well, first thing that we're going to notice about the two stocks that we're going to look at here, both are in sectors that have provided relative strength over the last week, staples and financials. And so,
okay, Apple
3.5% over the last 5 sessions.
Doing a nice job today, reversing at a previous pivot high that we set back in December. Big cup and handle, if you will. The handle's not really a cup and handle, but you can definitely see the cup, the base. The handles should be less severe, but you get the point. The last of the sellers will dissipate in what most of the time is a handle. The sellers will dissipate when they're finished selling. The follow through can occur or continue, I should say. Okay, I got to take a break. I'll be right back.
Sentiment, but you do see some flows on the margin. We mentioned 2008, that Silicon Valley groups. I'm wondering what you're seeing in terms of portfolio size and assets of clients right now. What's the typical portfolio size? How much assets, where are the assets that your clients have? It's like New York Times article today talks about how states have utilities, roughly 4,000 millionaires. And a couple like 100 more than 100 people. That's such a bad idea. Are you seeing CPO? We've seen good companies in private markets that create liquidity opportunities through secondaries or through IPOs, ultimately lead to assets going off the platform. We don't get into specifics of how many clients we have that are employees of different firms, but it's always been an area of strength for us to help people invest for the long term, optimize their taxes, and do that with knowledge workers. We have a lot of clients who are employees of and ultimately the value that we offer to them is the same value that we offer to a 22-year-old opening their first investment. So how big is the account? $70,000 is the average client, but we have accounts as small as $1 and accounts as large as $100.
Interesting. All right. competition. We were talking about this too as we were prepping to talk with you. Robinhood, total assets in custody recently exceeded $20 billion. And they've got about 27.4 million active clients. Schwab, total client assets, 12.6 trillion as of 1 month ago. And they talked about total client accounts of 39.1 million. They also got reported active brokerage accounts, which is actually 39.1. Total client accounts, 47.2. Wealthfront on earnings last week, funded accounts 1.46 million, grew 15% year over year. Funded accounts of 1.9 million, also grew 15% year over year. And you talked about 99 million in assets on the platform. Who is your competition? Like, who do you see as your biggest competitor in this space? Because it increasingly is growing. The big guys now, maybe.
MLAC may rise in 10 seconds.
The number one practical competitor that we see is underconsumption of financial services or underconsumption of investment. So folks are coming to us. They're doing something that is a shorter term investment or is a speculative style investment, and ultimately they're graduating to a diversified managed portfolio. They're looking for more tax efficiency because gains in individual stock trading lead to better outcomes. Most of our clients that are coming on new to the platform are in their mid-20s, is the average. So folks are getting started early, and they're moving away from products that, our clients are professionals. They work a job, they don't have time to day trade every day. And so they're looking for someone to manage their assets for them. That's what we do.
Is there an average age? I'm just curious. Or what's the
average age on the platform? Is around 35.
That's interesting. And they're working, it's not inherited money, or it's a combination of both?
I think one of the things that is underappreciated is there's a pool of the millennial and Gen Z generation that's very actively earning and saving. So our clients tend to be anyone who's earning more than they spend maybe that month. And so whether they're starting by saving a few dollars or saving tens of thousands or hundreds of thousands of dollars a month, we offer great CPI.
We're all over this SpaceX IPO, expected to start trading on Friday. Curious about access to SpaceX if these included in indexes at some point in the future, how you would allow your users who don't have access to SpaceX if it is an index. It's funny, this is like it's a very polarized thing. Right now there are folks who are like, I want a piece of this, I want it, and there are folks who are like, I don't want it.
So we don't do IPOs. In general, we don't. Volatility around IPOs, as we discussed earlier.
Apple.
Most of our clients can participate in direct indexing. That gives a fair amount of flexibility in portfolio construction and what we can do. Explain what that is.
Okay, that looks good. Apple. See, the volume keeps picking up as it moves higher.
Securities to match index performance while also being able to take advantage of some harvesting opportunities.
S&P doing nothing. Nothing.
It is. There's more opportunity and more volatility inside the index.
So then would that allow you to essentially say to a customer, you can own the whole S&P 500, let's say, that one SpaceX S&P 500, but if you want to remove SpaceX from that allocation.
It's a feature we've had for more than 10 years. Yeah, I mean, if you try to exclude half of the index, then it's less likely to work.
Do people take you on?
Clients are active in stocks. I would say there's a population of people that are very excited about SpaceX being part of the index in the future, and there are part of people that are skeptical of SpaceX being part of the index and want to exclude it. We've always been a digital first financial advisor, and so when you look at what a financial advisor does, they're basically a natural language interface on top of some software tool that's helping them think about and plan their financial future for their clients. So the opportunity that we see is to use the financial tools that we've built, the financial planning tools, and the investment tools that we've built, to be able to do intake and understand our clients and invest for the future.
Are you worried about that?
Uh-oh. Did we lose Bloomberg? Did we lose Bloomberg? Yeah. Looks like it. Okay.
MLAC may rise in 10 seconds.
Boo, 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 boo. All right. Exxon. McDonald's. I'd like to add the McDonald's, actually. McDonald's. Coming off the lows on the daily. You can see that we pull back a little bit intraday. I'd like to add down here, actually, if this would follow through. If it wasn't for the S&P threatening the lows, I probably would. Probably just some rotation going on. McDonald's. Do I want to add to this right now, McDonald's? Got a decent sized position. I got 10 calls. The 200, 290, 300 calls spread. Got close to that. I'll leave it alone. I'm not going to add. What I was telling you coming into this week and towards the end of last week, over the last few weeks, I've been taking profits off into strength. And what I wanted to do was reduce my exposure, but still be involved. I have to keep reminding myself, we're not in a normal regime at the moment. The positive gamma we had the previous couple of weeks have given way to downside action. We dropped below 73.90. That was a gamma flip point. So I need to reduce my exposure when these things happen. And I just said that maybe I'll buy some McDonald's. I do know probably that McDonald's is part of that XLP that's getting some rotation. So that's defensive. And you would expect to see this moving higher, which it is. So XLP, stocks like Keurig Dr. Pepper, Coca-Cola on the Coca-Cola on the watch list. Okay, these are all breaking higher. McDonald's, MCD, cyclicals and defensive stocks we felt would rotate in. Those continue to show support and momentum. That still, I don't want to get carried away because my plan was and remains stay involved, but reduce your risk. And reducing my risk also can mean moving into stocks that have obvious rotation signals, right? But I don't want to go too big. I don't want to go to like 25, 30, 50 calls, whatever, right now, because it's really not moving that much. If you look at McDonald's, it moves $5 a day. So that, I mean, if you catch at the absolute low like it is right now, you can probably get a good day trade out of this. It's late in the day. if you get RSI, and it's not oversold. So that's the thing. You got oversold here at 2 o'clock, so that would have been a better entry. But even still, you're only up, what, 40 cents? That's not worth it. It's not worth it. So I'll just stick with what I have, the 290, 300. Okay, so that makes sense. 290, 300. I'll stick with my 10. I'm not going to add to it. What else can I look at here? CBRX. That is a core. I'm building a core position. And knowing that the market's CBRS. I always get these backwards. I'm not dyslexic either. Okay. So it's trying to turn the corner. Shorts are still trying to keep this down. Not sure the mechanism they would use to keep it there. I guess they can keep selling into strength. Anyway, so this is an IPO. Obviously, it's only 4 weeks into it. 5 weeks. Looking for this to be much higher. So I'm building a core position and day trading around it. Okay. It's, you know, that 60-minute 20 MA, the rule here is we want to stay above the 20 MA. Want that to start to tilt up and to the right. It'll look like this eventually. Okay, it'll look like this, where we are currently moving back above the 20 MA and then start trending. That's what we're looking for. Okay, so right now we're the opposite. We're just starting to change trends. So we'll keep an eye on this one. Apple fading off the high of the day. McDonald's starting to see a bid here. McDonald's. Defensives look good. Defensive XLP. Defensives are also bouncing. The whole group. Procter & Gamble, another one. J&J. Defensive healthcare. J&J. That's at the low. It's a doji for now. That's okay. Abbott Labs. Okay, returning, coming back, rejected at the 50-day. AbbVie. Okay, that's higher. 3M this morning. Big pop on 3M. That did see profit taking. So people are quick to take profits too. That makes a lot of sense to me. If you make money, take your profits quick. Once the market starts trending again, hopefully off the 50 EMA. The bounce that we saw yesterday, and we don't come out back to the 50 SMA. All right, we're back down below 7,300 again. S&P back below 7,300. Do I have any? Yeah, I have audio. Okay, cool.
Here, you know, we're going to make the decision that's right for our mission, and unfortunately, I have nothing more specific I can share beyond that.
Understood. And then just people starting to use cheaper Chinese models in the past few months. And the danger is this whole thing gets commoditized. And look, here comes the cheaper Chinese product, just like they did with kind of the export model of the past 20 years. How do you make sure that it's not a race to the bottom, where if it's a race to the bottom, that you guys could get squeezed out or see, you know, your margins squeezed?
Well, actually, if anything, I would say over the last 4 or 5 months, I believe we've seen sort of the opposite, which is seeing OpenAI and Anthropic kind of pull apart. If you look at the adoption of Codex and Claude Code, you're really seeing people actually gravitate towards these extremely high-quality models, and I'm really happy that these 2 American labs, and obviously I bias towards OpenAI, are really showing just how far ahead we are than the rest of the market on producing these truly frontier models. The pricing thing is really complex. I think, you know, I don't think anyone's questioning that we have too much compute anymore. And, you know, what you're seeing is there's just a lot more demand for these frontier models than there is supply. These tokens as a unit of intelligence. And just like the more power we produce, the more watts we produce, we actually create more demand for energy. I think as we build out this compute infrastructure, we'll actually see an increase in demand for these tokens. And I believe we're seeing the value of these true frontier models like GPT 5.5 and eventually GPT 5.6 actually pulling apart. And that's the trend that we're seeing here, certainly in Silicon Valley.
It's a great question by Kelly, too. And there's Chinese models, there's open source, but there's also now Microsoft. There's also now Google competing at a lower price point. Have you started using those models? And you are one of the companies that sort of does that model routing, decides which is best for which task. What are you seeing from the big tech players when they try to compete here?
Well, it's a really interesting point, and I think if you fast forward 4 or 5 years, which is like science fiction right now, I think you're going to have a lot of different models that are purpose-built. You don't need frontier super intelligence to, classify an intent in a phone conversation or to remove background noise from a phone conversation. So I'm not saying there's only going to be, one frontier model. But I think what we are seeing right now is the quality of these frontier models is really differentiated. If you're imagining, writing a piece of software with an AI agent, the difference between GPT 5.5 and GPT 5.3, which isn't even that old, is staggering. And so I think we're going to see certainly a constellation of models where in sort of an industrial application or an applied AI company like Sierra, you'll have a lot of different models in use. But the thing I'm seeing right now is every time one of these frontier models comes out, it's actually opening up new use cases. So I think the idea that, we're seeing diminishing returns, I just don't agree with. I actually think we're seeing the opposite right now.
Intel trying to recover. It made it all the way up to 111, almost 112, I guess, at one point. Intel's trying to turn the corner. Apple's holding it near the highs. We need more of these New York FANGs to help. The S&P Equal Weight Index and New York Stock Exchange. New York Stock Exchange is below the 21-day now, so this could turn into more negative gamma as the NYSE. If it doesn't bounce here, we hit this low here yesterday, 23.1. 50 days coming up underneath. Hard to call this one. It's just we do have some selling though. That's true. Junk bonds, JNK. This is risk off right now. Junk bonds, risk off, neutral. Let's see. Advancing stocks versus declining stocks. The breadth, everything is pulled back. Yeah, everything's pulling back now. So, yeah, we would expect to see the S&P Equal Weight also pulling back. Give us a little pivot. Yeah, a little pivot there. Could very easily see a pivot back up into the bullish direction tomorrow.
Its security plan for tonight's Game 4 of the NBA Finals between the Knicks and the Spurs. City officials decided to keep in place the extreme security measures that were necessary for President Trump in Game 3, even though he is not expected to. Kelly, back over to you.
They gotta win first. Let's not get ahead of ourselves, okay? That's how we jinx it, Angelica. Thanks. More power lunch after the break.
All right. So we're definitely not cascading lower like we were in April, okay? We're just kind of grinding upward. Our CCI is getting pulling back from overbought. Number of stocks above the 50 day, also above 50%. Still just sitting here. So it's not a big sell-off. And on the contrary, we're staying above the 21-day. Very possible we could pull back. If we pull back to the 50-day, I would expect to see a bounce. Okay, and the main reason is because earnings are still good, and we have July as one of the better months of the year for tech. It's one of the strongest months of the year for tech, and the comp and the industrials and the markets in general. So, okay, Broadcom rolling over a bit. Broadcom rolling over. Okay.
Low tick alert minus 800.
Okay, now here we go. We're finally going to drop off now, it looks like. All right. See where we go with this. See where we're going to go with this. 50-day. I'm going to test yesterday's low. Taking out stops. If this reverses really quick, that's going to take out some longs that had stops down below. If it just keeps going, there's really nothing down here to keep markets from fading even more. Okay, let's look at net open interest.
It's another down day for the markets and a substantial one as we head into the afternoon.
Okay, there's a little bit building down here. Okay, there's some building. We're at some right here at 7,300. We drop below that, and there's some levels down below at 7,105. 7,105, Benny. Geez, yeah, that's where it is. 70, 7170, 7250. All right.
It's interesting, Kelly, and I think this business IPO is getting all the hype. I am trying to buy it personally. I know some clients are trying to buy it as well. It's oversubscribed 4 times, but think about it in context, Kelly. $75 billion. Last week with the secondary from Google, $85 billion. Let's throw in OpenAI. Let's throw all the IPOs we're talking about. About $250 billion. You know what the buybacks are for the S&P 500 for the year 2026? 1.1 trillion. So I don't think this is a big deal from a component of moving and rotation, but I think we're going to see a positive in SpaceX. I think there's a lot of restrictions on selling on platforms, so that's where I'm optimistic on this Friday.
Okay, so let's all just feel great and fine. So what are you buying in this sell-off? Then do you worry about Oracle after the bell? Is that an opportunity, or is that just a totally different story?
Okay.
So we own Oracle, our support ETF. We recently bought it back in April in our Gary, our Mango Growth ETF. But when we talk about the repricing, the profit taking, I see this more as profit taking, Kelly. I know the NASDAQ was down 5% on Friday and it's down nearly 2% today. But we're looking at buying some of these software names. Let's look at the dispersion between semiconductors and software. We talked about it all year. It's 100%, Kelly. That's historic. So the opportunity to buy Palantir, Microsoft, CrowdStrike, Salesforce, and even Broadcom. Let's talk about Broadcom. Down $100 from where it was just 5 days ago. So we look at Oracle as a test, as a litmus test after the bell today. We own it. We think it has the ability to talk about that $553 billion backlog that they're going to realize. But the expectations for a 12% move, Kelly. 5 of the last 8 quarters, Oracle has shattered that. It's been much more violent than 12%. So I'm looking for a binary outcome.
All right, Gilbert, for now, thanks. Really appreciate it.
Okay, Intel trying to get back up here. It's about 382 off of the low. Watching the S&P, we're going to drop off here, test the lows, come back to the 50 SMA. Yesterday we tested the 50 EMA and reversed. The NASDAQ Composite, COMPQ, I think that's what it is on trade. Is it comp? Let's see, indices. NASDAQ. What's the comp? NASDAQ Composite. Composite. Now, let me just do it this way. NASDAQ Composite. There it is. IXIC. Okay. So this came down to the 50 SMA yesterday, NASDAQ Composite. Okay. So that's about 2,700 stocks in this one. Still showing weakness. We're inside of yesterday's candle and no cavalry yet. So I wish I could tell you something better, but that's what it is right now. So it is what it is. As a good friend of mine used to say all the time, used to drive people crazy. It is what it is. Yep, it is what it is. S&P 500 looks weak. No reversal yet. Okay, we're $3 off the high with CBRX. I'm looking for buyers to come in again on the dip. These momentum traders seem to keep repeating themselves as we make these higher highs and higher lows. CBRX. All right, the markets look not that great. Looks like we're going to drop off a bit. Looks like we'll drop off. The good thing is, as many of you talk about in the trading room, these pullbacks are an opportunity. I know it's glib, it's obvious, and it doesn't erase some of the pain if you got long positions and you're waiting for this to bounce. That's the business we're in. That very often when the markets aren't trending, they pull back, and it gets to be an emotional roller coaster because you get invested mentally instead of just stepping back and saying, okay, this is normal part of the business. We do get pullbacks, got to be patient. Where are some of the likely places that institutions will come in? 50 EMA, 50 SMA, 200-day, 21-day, support and resistance levels, gamma levels. We lost this one today, so we're losing this battle. At the moment, we're right near it, just below it. Coming into the last hour of the day. Okay, we're below this 3,100.
Welcome back. Before we go, some quick takeaways from DC in our reporting here at the Atlantic Council Global Energy Forum. Had over 1,000 attendees from more than 80 nations. So amazing on and off the record conversations and meetings. Well, I can't report everything, but what I can report, some top takeaways are these 5. Number 1, ship traffic is rising. It is what the Secretary of Energy told us in the conference yesterday. It's what CNBC reported from those conference yesterday, and it's what the president confirmed today. Now, to be clear, number 2, the data is difficult. You will see all kinds of numbers. There will be people discounting the figures. It's messy because ships are turning off their transponders, meaning they kind of go dark on the transponder on the radar. You got U.S. naval escorts, and you got ship owners secretly paying Iran's toll. Many ships may go uncounted in the official numbers. There are hundreds of ships on the ocean at the same time around the area. Very hard to track. Either way, a July reopen, or whatever you want to use, on the Strait of Hormuz is critical. Because remember, Kelly, over 200 ships in 30 days. Still there's 6 to 7 ships per day, well below pre-war numbers of over 100 per day. We are getting closer to some tank bottoms on refined products. That's a fancy term for inventories going down, and that term tank bottom getting thrown around more and more, meaning real worry about product shortages. And finally, the most important thing, the U.S., Iran, and the energy markets, they're all looking for an exit. Both the U.S. and Iran have economic incentive. Iran needs the money from oil more than the world needs its oil, but it's going to take the right people in Tehran to make a decision that will benefit the country and the world. And it's unclear from my reporting who exactly is in charge of Iran and making those decisions.
Love the way that you brought that all to some really clear takeaways, Brian, especially because it's been a lot of different reporting. And let's go back now and show the oil price and show the markets, because this trading session seems to be all about bracing for what may be to come later on. The president again saying that there's going to be, it written early this morning, Iran has taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price, Brian. He says we're going to be attacking them very hard. The market obviously trying to figure out exactly what to make about and what that means.
Yeah, we don't know what it means. I mean, is the U.S.
Okay, Walmart.
Attacks in Iran tonight? Well, it is tonight in Iran right now. I believe they are, correct me if I'm wrong,
Walmart
9-10 hours
again.
ahead of U.S. time. So it's
I did, by the way, manage to get my fill. I noticed earlier that my fill, I now have 10 total of these 120, 130s. I have the 120, 130 call spread. Okay, 120 is just overhead. I got filled on those earlier. What time was it? Oh, hold on. I got to get this.
could be interesting tactically to add to dips here.
My highest read on headline in the last 3 years. Doesn't that put that at the very minimum on the back burner, maybe not even happening in 2026?
Yeah, I think the market is right now pricing out Fed rate cuts. Our expectation is still that we can see 2 rate cuts this year, and I think the drivers of inflation are really important. Obviously, headline is being driven by higher energy prices, but the components of core are not picking up. So you're not seeing that higher energy trickle through into core. And as we think about shelter, core goods, as well as the impact of the consumer having negative real income, all of those 3 things point to disinflation as we move into the end of the year at the core level, which is really what matters to the Fed. The Fed raising rates is not going to do anything to curb energy prices, and I think they know that, so I think they will be more focused than ever on the core components of the CPI.
All right, Brent, I'm coming to you. Here on TV, we get really excited about things like a SpaceX IPO just because of the size of this company. And I think a lot of people are saying it's kind of looming over the market. It's kind of an overhang over the market. The fact that this is coming up on Friday, you said it's only partially true. So what part's true, and what's the other factor here we should be looking at?
I think that you see the sell-off. First of all, this year's been, I think, anything but normal. We have this group of AI beneficiaries, Industrial Revolution, and also if Trump can pull off some type of ceasefire that goes into permanency, the markets are going to rip higher. And so I think you just have positioning around right now in technicals that are weak. And I think that these stocks being under the 21-day moving average, I think investors really need to take a close look at that, because we could still see some weakness in those semi names while they're in that downward consolidation.
So, Brent, just kind of pulling on that theme, I know you're looking at the 21-day moving average. I was looking at our charts, the 50-day moving average for the Mag 7, and also for NVIDIA, just specifically as an individual stock. So are you saying this is a buying opportunity? Megan pointed out how much of their earnings are coming from the tech sector, and specifically these 7 mega cap names. Is the fact that these are trading at a technical level and moving to the downside, but their earnings should still be intact, is that an opportunity, or is that something you should be careful of? Explain the thesis.
Well, first of all, tech earnings actually this year are driven largely by NVIDIA and Micron. And so if you take those 2 stocks out of earnings, not only this quarter, but the rest of the year, the earnings growth from tech flattens out quite a bit. You're still getting a decent amount of growth. I think that you don't want to confuse short-term technicals with long-term earnings growth, because really there's not that much correlation. And so I think the fundamentals of certain tech stocks are really strong, but I always respect the technicals. And when you have a momentum area like within these semis and they break back 10, 21, you just want to understand where the 50-day is to see if that natural gravitational pull could be a better entry point versus in the middle of the 21 and 50-day.
Well, I want to come back over to you.
All right, S&P. That looks like a bear flag, a little drop there.
You don't see any Fed cuts coming up this year, but you like 2 very cyclical sectors, financials and industrials, that directly benefit from rate cuts. If there's not going to be rate cuts, what's the thesis? Why those 2 sectors?
Yeah, it's what's priced in, what's not priced in. I think Frank's best way to put this, market's looking for a hike. That's what Fed Fund futures are telling us. Today's inflation data, yeah, the core is a little bit weak, but we've been saying for a while at Carson Group, by the way, I'm at our headquarters in Omaha right now, and our Nelly's upstairs on the 6th floor. And we've been saying inflation's broadening out all year, even before the war started. So we've been saying there's probably not going to be a rate cut. But we think now the Fed's probably simply on pause. And the other thing about inflation and rates and the economy's getting better, Frank. I mean, listen, the reality is it's getting better. And that wasn't really priced in when everybody was telling us.
Okay, looks like Microsoft's trying to turn. Apple had a nice run up today, bouncing at a previous pivot high on the daily. Going back to December 2025, we had a pivot high. We pulled back, produced a cup pattern, broke above that level. Late April, early May, and then pulled back to that exact level yesterday and today. So watching Apple for a follow through.
What creates all the choppiness that you're looking at? Is the volatility from the SpaceX IPO? And I know Brent thinks we might be making too much of it. Is there some other factor that creates some of the choppiness?
Well, I think we've had a number of headwinds to
the market since we started this year. It began with some slower economic data. It then moved into concerns around AI disruption to the labor market, other business models like software, and then we have the war. And the market has shrugged off a lot of that, continued to climb the so-called wall of worry. And I think a big part of that was two factors. One, earnings, which completely agree with Brand in terms of some lopsidedness and some few companies that were really driving an outsized share of that. We also had tax refunds, which were 18% higher than last year. So that helped consumers to weather the increase in energy prices thus far. Now we're moving beyond earnings season. We are not getting more tax refunds. And obviously, as we saw from the headlines today, there's not really an end in sight to the war. So I'm not really expecting energy prices to move dramatically lower in the near term. So I think all of that just spells to kind of moving into more of a churn phase.
Intel continues to rock up a little bit, continues to push back up. All right, the dip got bought, Intel. All right, McDonald's. We were looking for McDonald's to continue this move off the low. Okay, we got a doji. McDonald's making a little bit lower low. Not quite. Got close. Starting to turn back up now, McDonald's. If you like it down here, I have a position in the December 290, 300 calls. And those are up currently. So looking for this dip to get bought. McDonald's. Look at the 60-minute time frame. That gives you an idea what we're looking at. Higher highs, higher lows. So we've changed trend. Double bottom, starting to move a bit higher. 60-minute on McDonald's, showing you what you're looking at. Starting to move higher and headed towards 50-day.
Live in DC. Megan, thank you very much. Now I want to turn to our Pippa Stevens with much more of the president's comments on the oil market. Pippa.
Okay, NVIDIA is still pushing lower. NVIDIA not having a good day. NVIDIA. All right, below the 50-day, NVIDIA could come back to the 200-day before resuming any uptrend. All right, so it'd be nice to see a reversal tomorrow and push back above, but not going to hope too much. AMD, LRCX, Micron, all of these pulling back. All right, so SOXS might be a way to play this, right? So some of you are already in this SOXS. Looking for this to push higher. SOXS.
Adding that those barrels delay the day when commercial inventories reach their minimum operating level. And Frank, we are seeing prices up about 2% here on the day.
All right, Pippa Stevens, the very latest on the oil market. Pippa, thank you very much. For much more on the impact in oil, let's bring in CNBC contributor, RBC Capital Markets, Halima Croft. Halima, it is great to see. I can't think of anybody better to talk to on a day like this. The supply coming onto the market. So Pippa just talked about it. The president said it earlier. 100 million barrels. How meaningful is that? And if all this extra oil is coming on the market, why are prices up 2%?
I mean, Frank, what we don't know is, again, the composition of that 100 million. Was it released from sort of the floating storage of previously sanctioned barrels that were on the water? We have been escorting more ships through the Strait of Hormuz, but it's not a huge number. Estimates are maybe 6 to 8 at most on any given day. It's 15, but we are well below pre-crisis levels when it comes to shipping traffic. And most estimates say that we have lost between $1 billion and $1.2 billion of oil from the market because of this war. So it's going to be very interesting to see how you round up that 100 million number. But again, we are still losing significant volumes every single day.
So we're losing those volumes. When we're looking at the oil market,
Okay, watch SOXS, SOXS. This looks like it's going to break out. Semiconductors, short semiconductors. All right, so you can see what's going on here. We could see this move up to, say, 10 or so. If semiconductors continue to sell, people are hedging with this.
I mean, I think you'll get a sell-off once we get some type of deal. But then the question is, how long is it going to be to fully normalize shipping traffic through the Strait of Hormuz? And what's incredibly important, Frank, and that was a big theme of discussions in Washington, is how does this end? If it ends with Iran exercising operational control over the Strait of Hormuz, charging a transit fee like they are doing now, you are not going to normalize from the Middle East saying the U.S. must do more to ensure that Iran is not controlling the Strait of Hormuz. So it really matters, Frank, how does this end?
Apple's still fading.
So we got to hit on the possibilities and what could happen. Let's deal with what's happening right now. The president's saying there's going to be more strikes on Iran. What's your view of the oil market over the next, let's say, 30 or so days? We have 4th of July coming up, big travel time here in the United States. Demand generally picks up. Where do you see pricing going?
I mean, Frank, this is so crucial because if we are in this sort of stalemate right now, we are drawing inventories at an astonishingly rapid rate. So
All right, so we're breaking a bit higher. All right. S&P is moving lower here. S&P. Okay, we're dropping off S&P.
And what's really important, Frank, is there are operational minimums for storage facilities. And people are saying, look, if you get below 300 million for the Strategic Petroleum Reserve, you are threatening the operational integrity of that facility. So it's going to be increasingly important to think about the volume of barrels in storage that's actually usable. So I do think there's going to be increasing pressure to bring this to a close, but whether we do so remains to be seen.
You know, Liam, according to your data, the SPR, the Strategic Petroleum Reserve, at its lowest level since the 1980s, decades.
Since we filled it, yes.
Liam McGraw, thank you very much. Always great to talk to you. So we're spending a lot of time talking about what the president said about oil market, the oil markets, I should say. He also talked about USMCA. I'm going to toss it over to one of my favorite Canadian imports, Christina Partsinevelos, for a look at the names, moving into the close.
I was wondering how you were going to connect that oil, but I love it. Thank you. Let's start with shares of Supermicro, and I'm sure it's not because they're down about 24% after setting plans to raise $7 billion in equity-related.
Okay, Palantir pulling back rather sharply from the highs of the day.
Especially NVIDIA chips. The proceeds will go towards fulfilling specific AI server orders. Companies typically see their share price drop after announcing stock sales because of dilution. So that's what's happening right now. Robinhood shares gaining roughly 4% on some strong operating metrics. Funded customers rose nearly 28 million to 28 million, while total platform assets reached 377 billion. And separately, the CEO of Vlad Tenev said Robinhood Securities is now approved to serve as an underwriter of IPOs, setting up potential new avenues for growth. And Frank, touching on your beat over here, transportation stocks, though, are falling lower, as Amazon said it will open its less than truckload shipping services to companies outside its own network.
S&P is still fading.
Market share, and so that's why you're seeing names like Old Dominion, XPO, FedEx Freight, all lower. But I know you know this, Frank.
I do know this. By the way, a lot of analysts, including John Chappelle from Evercore, very respected, says, buy the dip on this. A lot of people think it's much ado about nothing. Christina Partsinevelos with the movers. Thank you very much. We'll see you in just a bit. All right, we're just getting started here at Closing Bell. Coming up next, investors anxiously awaiting the SpaceX IPO. A rundown of what matters most from that upcoming debut coming up next. Plus, we are near the session lows on the market. We're all over this sell-off.
All right, so here we go. We're dropping off a bit more. S&P. S&P 500. Okay, what's that doing there? Okay, Z-scaler is off. Yep. Oh boy. All right, so we'll continue to move lower here. S&P. Google trying to turn. Short covering on Google. All right, S&P futures continues to drop off here. Okay, below 7,300. There's not a whole lot presently showing. You can see the red showing up now, so faster moves in the red zone. All right, negative gamma, more volatility. Okay, let me zoom out a little bit here. All right, so zoom out and let me enable net open interest. See where these levels are. Okay, so there's a level here, some levels right in this area. 72.60, 72.45. I would think 72.50 maybe. Maybe that'll hold. 72.50. We're currently 72.71 and continuing lower. All right. Yeah. Everything's fading now. Okay. I'm gonna wash out some bulls, bull trapped, many of those. Coming down to the 50 EMA again. Walmart bouncing. Defensive stocks, probably the way to go at this point. Stocks like McDonald's moving higher. Kimberly-Clark, KMB, Coca-Cola. You can hedge with consumer staples. That appears to be where institutions are turning their attention to. Okay, you can see the volume picking up. Rotation, XLP, XLV, healthcare. That caught a bid. Coming into this week, and then now we're just kind of reversing it right now. XLU, utilities, a little bit. XLY, consumer discretionary, pulling back. XRT, retail. XRT is holding up fairly well. XLB, materials. XLC, communications. That'd be Meta, Google, Netflix, etc. Those are pulling back. Energy, XLE, holding up fairly well. Financials, holding up above the 200-day. Industrials, pulling back. So Caterpillars and stuff like that are probably pulling back. Caterpillar, John Deere. Okay, stay away from that for now. So XLP looks like that's where money's rotating. XLP, XLU, XLE. Okay, a little bit of XLF. So it looks like rotation. And out of semis for now. Semis, out of semis, you can see this is taken off to the upside. SOXS, cheap way to insure against your semis. If your semis are pulling back, whatever you happen to be in, like Intel. Intel just pulled back a little bit. Intel will be fine. You just need to have a lot of time. You need to have like August, September options later in the year. This is probably gonna base in this area. I would think that what's gonna happen, not unusual. you know, people get a little over. Okay. So this is probably going to bounce somewhere in the 50, build a little base, and eventually break out higher. You know, you get your trend up, get the big trend up. What you would expect is to see some consolidation. That's exactly what's happening. So no big deal. Looking for this to turn back up eventually. Same thing, MACD, stochastics. These are already reset. So the stochastics reset. MACD will reset as a function of price. You can see the volume here. So they're still selling this. Intel looking for a bounce. In the meanwhile, as we look for these stocks to bounce, like Micron, they still fading. Buy some SOXS. That'll neutralize your position. Okay.
Low tick alert -800.
AMD. All of these are pulling back. So best course, if you don't want to sell those positions, you could sell covered calls overhead. I don't like to sell covered calls when the price is pulling back, but probably not going to be that long this base that we're going to see most likely. Okay, S&P continues to move lower. We're at 72.70 now.
So I know you're talking to a lot of people about this as well. With the retail interest that you expect because of Elon Musk to be like very bullish and just kind of feverish, at the same time, there's a lot of institutional and high net worth individuals that probably just have too much of it. How does that equilibrium play out?
Yeah, that I think is a really important piece of how they ultimately cobble together that retail proportion of the IPO. My understanding is they have a large list of book runners on the cover of the deal, and there are certain banks that do have sizable
50 days right there. That's your 50-day.
Side of the U.S. that may not have that same dynamic where they're already overexposed, say Deutsche Bank in Germany.
Okay, 50-day.
In Latin America. So my understanding is that they're being somewhat creative
Yeah.
in terms of really expanding geographic reach in terms of retail. And
Note the Bollinger Bands are moving in opposite directions. This time, price is moving lower, so the momentum is clearly lower for now and could accelerate more now that the Bollinger Bands are opening up and volatility is picking up. We can go look at VIX. VIX back up. I didn't get a chance to purchase any NVIDIA, any VIX volatility. All right, so I'm completely out of my 22s, both for June and July. I was hoping that was going to pull back to the 200-day and we get a better entry and S&P would move higher, but that's not the case. They have other things in mind short term. Don't be too upset. The markets are going to bounce. We're coming into end of June. July tends to be a good month. When I say end of June, when we get to the end of June, we start to turn. Okay, getting a little bounce now. All right. A lot of stocks pulling back. Interesting enough, crude oil has pulled back, right? Crude oil. USO. All right, bounced a little bit, but it's under the 50-day. So this run up and these highs for crude oil, yeah, we're probably going to strike Iran, according to Trump, tonight. It's tonight right now. Let's see, 7-hour difference, right? So it's like 10 o'clock there. 10, 11 o'clock p.m. in Iran. Something like that, 10 o'clock, I think. So crude oil ran up. Futures got way ahead of itself. Extreme. People got fearful. Now people, I don't know. I just get the sense that people are thinking that this is going to be over with soon enough, even though it's dragging on. So crude oil pulled back in response. Do we get back above the 50? Do we roll over again? I think we're going to roll over. That's just me. Short term. The 10-year yield, that's not helping IWM. Or is it? Okay, let's try that. Pull back a little bit. So IWM. Okay, that's at the low. You would expect this to move in the opposite direction of the 10-year yield. So the 10-year is up a bit today. US dollar. We'd like to see the US dollar back off a little bit. Okay, that's back up here above 100. I'd like to see this pull back to the 50-day. That would give us a little bit of uplift. If you got the 10-year yield pulling back and the US dollar pulling back, that should help these tech names. For now, hedge, SOXS is a good one because semis did run up quite a bit. Okay, this turn in the corner. Probably could see anywhere from 7 to 8, maybe 9 on this before we get a washout and a base to form on a lot of these semiconductor stocks. That's my guess. Buy. Let's see. Hot Legs. Remember that song and the MTV video? Okay, so tonight, Oracle. Tonight. Don't forget. Oracle earnings tonight. That could change the complexion of everything by tomorrow. More bearish or more bullish. Earnings have been good. So, here we go. We're starting to get a bounce here on the S&P. Like I said, coming into the week, I've been reducing my risk, but staying involved, right? I have quite a few longs, short-term options. I also got most of my options are out in July. July is the earliest, the closest, I should say. August, September, I got some out in December. McDonald's, for example. So my idea coming into this week, because we've been, fading after a 10-week rally, my idea was that we need to reduce our risk, stay involved, but, hedge as well. So we're more neutralized. And if we get a directional change very quickly, we can always let up the gas on one side or the other. Meaning if we bounce furiously like we did yesterday, you can take your hedges off and ride the trend back up, take profits off into strength, and then repeat the next day, because we want to go probably day to day or short-term swings at the max right now on the trading accounts. Any new trades, that is. I got a feeling we'll probably be just fine in the next couple of weeks. Might take another week or so for the markets to settle down up here. Okay, 5%. Yesterday was 5% off the high. Okay, so the pullback from the high to that low yesterday was 5%, a little bit over 5%. A little bit over 5%. Okay, am I still broadcasting here? It says my streaming service says that I'm not. Let me just check real quick here. Let me go to YouTube. Mic check, mic check. Mic check. I'll go to Yep, YouTube. I'm fine. Okay, so might just have been a temporary glitch there. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com on a rather boring and somewhat bearish day. We're inside of yesterday's wick. Very possible we could be back up towards the 21-day tomorrow or below the 50-day. So I'm hedged. I'm trying to neutralize my positions and still hang out with some of the longs that I have. Got Oracle tonight. I got a position in Oracle. Fingers crossed. I believe, let me just double check before the end of the day here. Oracle, what is, okay. Oracle. Okay. I have ORCX shares as well. ORCX shares. Oracle. All right, continues to trend lower. Okay, let's look at the ARCA institutional index. Let's see what institutions are doing. Okay, yeah, so they've been selling. They've definitely been selling. Do we come back to this breakout level? Momentum is clearly bearish. So they're selling a lot of what's in this XII institutional index. A lot of the names you're familiar with, I'm sure. Okay, a lot of these names. 75 stocks that institutions commonly hold in their core portfolios. Red Elder Sticks, they're definitely selling. Taking profits from this big run up. Will probably bounce pretty soon. Mohammed Al-Arian, he's good.
At how core is behaving, it was very muted, 0.2% month on month. So far, it looks like we're having a headline shock and an energy shock, but it's not spilling over into broader inflation. It's important because more people are worried, Frank, these days, that the AI impact on the demand side, not the supply side, the demand side will be inflationary.
Okay. Explain that piece. The AI demand on the supply side, you're saying?
So no, on the demand side. So the promise of AI is the supply side. Productivity increases, allows us to grow faster. Demand, and there's now concern that that in itself may be a driver of future inflation.
Okay. I want to hit one of the key drivers of inflation that we all know is the energy market right now. We just heard the president saying there's going to be more strikes on Iran. Medium term, how do you see that impacting inflation? So far, it doesn't feel like that much of the energy increase have been passed along. Do you expect that to ramp up going forward? And then again, back to the Fed, how do they view this? The fact that this is a conflict that's going on longer than most people expected, but it will actually have an end at some point.
Right. So first, that's the longer term energy issue. There are those who believe that we will have a glut of supply, especially with OPEC having increased its production. And there are those who believe that we've run inventory so low that before we get to the glut, we are likely to have the opposite. I think that the forward curve has now steepened, and a price of about low 80s is where we're going to end up in terms of the longer term price of oil for now. Are we going to see volatility in the short term? Yes, we're going to see a lot of volatility. Are we going to see more spillover to other things? I think so. But I must tell you, so far, the data has been muted.
Volatility seems to be the word of the day. We're seeing a lot of volatility when it comes to the broader markets. A lot of that's chips selling off, tech selling off. So Henry McVeigh from KKR, he was out with a note earlier about the global economy. So he's talking about the global economy, but I think it also applies to the AI trade. He goes, the cycle's not over, but it's becoming more selective. And it seems like that's what we're seeing in the markets as well. How does that play out, at least in the near term, as investors are trying to figure out where the winners are? They're looking at the technicals. We have Bryn Talkington on earlier, looking at the 21-day moving averages of a lot of these tech stocks. It's just not a broad trade anymore. It seems like people are trying to pick and choose the winner, especially after those Broadcom earnings were a bit disappointing.
And it should be. Dispersion should be the leading theme for investors because we're getting all sorts of developments that are going to differentiate names. But I think we're hitting a bigger pothole today. And it has three elements: fundamentals, valuations, and technicals. Fundamentals, there's now concern, and you just said it, about how long can we keep on going running down balance sheets. We're running down balance sheets. On the technicals, there's a major question mark that you've been exploring. Where are all the funds going to come from for all the IPOs, for all the bond issues we're looking at? And then valuations had gotten stretched. So I think what you're seeing is a reset, given that there's more concern about fundamentals, valuations, and technicals.
You're talking about IPOs. Of course, you're talking about SpaceX coming up on Friday, potentially Anthropic, potentially OpenAI coming down the line as well. What's your view of the SpaceX IPO? Do you actually believe that investors are selling off crypto, tech stocks, chip stocks to buy SpaceX? Or is this simply a rotation into things like healthcare, consumer staples? If you look at real estate, financials, healthcare, and staples are all up about 3% or more over the last week.
So it depends which investors we're talking about. But if you were to generalize, I think some investors are making room for SpaceX. And right now, the sell-off is concentrated among a few things that you just talked about, tech and crypto. We haven't seen it spill over in any meaningful way to other sectors, and that's going to be the key issue. Can we absorb not just SpaceX, but there's a lot of other things coming to the market? Can we absorb that without a major displacement? I get a sense there isn't as much capital as the optimists think there is, but that's going to play out.
So you don't think there's as much capital as an optimist thinks it is?
No.
Is there a bunch of money sitting on the sideline in money markets, and don't people have the option? They've had a lot of big gains this year to sell some of those AI winners and reallocate. I mean, why do you not think there's enough money out here for this IPO to take off?
So I don't know about this IPO, but I'm talking about the amount of issuance that's going to be coming this year.
With all three of these big IPOs.
All three big IPOs, a lot of corporate borrowing. We can talk about Google's $85 billion. There's lots of borrowing coming along. Governments are running high debts, high deficits. They need to refinance. There's a lot of claims on capital markets. So look at what the numbers are telling us. The Bank of America's survey of investors shows that cash levels are very low levels. So that's not going to come. The big institutional investors from the Middle East are likely to have less appetite than before, simply because of the competing claims on that capital. So the question is, where is this money going to come from? I hope we can source it, but I suspect there's going to be substitution with other assets as we go into the year.
Okay. If the capital's not there, what are the ramifications for the market if the capitals aren't here for these big IPOs? And you said it depends what investor you're talking about. Does money still rotate? Because if you actually look year to date, the S&P equal weight's outperforming the market cap weighted index. So it seems like the market's been broadening kind of quietly. So does it continue to broaden quietly with those certain pocket of investors you're talking about, and the ones who are really bullish on AI, maybe they don't have the capital?
At some point, others are going to come in, right? I mean, tech is simply too important not to have a significant amount of your portfolio in it. So it will come in. It's at what valuations? That's going to be the key issues. It's going to be absorbed. It's at what valuation, and in terms of the fixed income market, at what yields is all this going to be absorbed. We're starting from a situation where corporate spreads are incredibly tight for the economic situation.
I always listen to you when you're talking about the markets and the macro, but we got to disagree on sports. You know, I'm saying Spurs and 6.
Yeah.
You're a Knicks fan.
I'm a Knicks fan.
I'm saying Spurs and 6, but it's great to have you here.
Had you told me before, maybe I wouldn't have been on the show with you.
I don't think I'd have been on the show if I said it before. Mohamed El-Arian, great to see you. Coming up next, we're tracking the biggest movers as we head into the close. Christina Parks-Nevelis is standing by with that and more. Christina.
And more. How dare you say that you're not a Knicks fan tonight of all nights? Let's talk about a few movers to chew on. A restaurant chain surging after a surprise profit and a raised outlook, as well as a few other names too. Like
Low tick alert -800.
So anyone that was kind of short or may have had a bearish trade on in this move to the downside may look at closing trend positions once this ADX starts to curve over. And we'll go to the longer term chart here, and I'll get rid of some of those draw today and yesterday of some of these longer term levels. We had the anchored VWAP from the yearly lows that broke in confluence with let me zoom out here, with the 50-day moving average as well. So forming like a little bit of a double top formation. So we'll have to see if there's further downside. The levels to watch would likely be.
All right, so quite a few stocks have pulled back here. We got 187 stocks advancing. The majority of stocks are declining. 70 out of 100 on the Qs are declining. 30 are advancing.
We're about 382 right now. So if you look at the options action that we're seeing in Tesla today, what are you seeing? What's the sizzle? Is it heavier than normal? I mean, this is a heavily traded name on any given day.
Yes, sizzle is heavier than normal. The sizzle, the last time I looked, was about 2.1. So we have about double the amount of options traded than we've had the last 5 trading days. We're also seeing kind of close to a little bit of a bearish.
Okay, Oracle earnings tonight. Okay, let me take a look at Oracle here. Oracle. Turn that off. Go to New York Fang. Oracle. Let me add Oracle here. ORCL. Oracle, pretty expensive, huh? Okay, so 97 percentile reversal rank. Oracle. Okay, Oracle. ORCL, ORCL. Okay, and the 250 strike is the call wall. So there's some people selling up there as well as buying calls at the 250 call wall. Oracle going into earnings tonight. Oracle.
Sometimes, you could have done better. Same goes for where you invest.
Oracle. Okay. So we're looking to maintain this phase 2 markup trend, higher highs, higher lows. Okay, phase 2. 200 days right there. Okay, base 1 accumulation. Okay, watching this. We're right at the 50. Okay, so MACD, stochastics, those are pointing lower. It'd be nice to see these turn back up. Oracle. Seems very expensive up here at the highs. So selling covered calls above 250. The problem with selling premium up here is that we've already pulled back. So you want to sell premium when you're at the highs, call side. So there's still a lot of people selling 250s though. Bollinger Band's pretty wide, so 250 on the upside and 150, 160 on the downside. So 100 point range here, just about 90 points. Okay, I would, if you're going to sell premium, if you're going to sell condors, sell outside the upper band and below the lower band. 160. I'm not going to do anything. I got ORCX shares and Oracle calls at the 220 strike, 230 strike.
Minus 800.
All right, we're turning back over here. Okay, there we go. Turning back down. Wow, that was quick. A little dip and then a rip. What's going on there?
with the copper and the optical, but also with semiconductor chips for the data. The catalyst is here for this stock moving higher today.
Yeah, this one was a little bit of a standout today. That's what we're talking about. So, Credo Technologies is one of these picks and shovel plays associated with data center transfer, but it's going against the grain with a lot of the major competitors down today. Companies like Broadcom, Marvell, for instance. Coherent is another one we've talked about. That's actually a competitor also of Credo Technologies, but they're filling essentially a gap, a bottleneck right now, which is connecting all of these technologies together, particularly the GPUs, CPUs, and even everything that Jensen Huang is talking about with their Vera Rubin platform, which is forthcoming. Connectivity, and that's where a lot of the DRAM technologies are used to, of course, improve efficiency, lower latency for memory and data transfer. But Credo is really gaining traction in terms of sales from major hyperscalers like Amazon and, of course, Meta platforms. But the reason, too, is, it's a standout today. It wasn't necessarily moving higher based on anything particular news. If you go back to the first of the month, they did post sales and earnings numbers, which were quite remarkable. They are also estimated to continue to grow their top-line sales by 85% on a forward basis for the full year. But I think the other thing is their proprietary technology, which is considered active electronic cable digital signal processing technologies. Again, they help scale up copper. That's important because we know that optics and photonics are used to, of course, reduce latency to do so on an energy efficient business. But Credo is actually scaling up or helps scale up copper transmission, but also doing it in a way that's energy efficient. So they're really solving an engineering problem, which is plaguing data centers right now, is how do you speed up data transfers between servers, GPUs, and CPUs, etc., but do so in an efficient way. And Credo seems to be growing quite substantially in terms of their grasp on the market, but also dealing with an engineering problem, which is, again, creating problems for data center development.
And as you say, I mean, it is one of those sort of picks and shovels type names that is benefiting from a lot of the capital flowing away from the big spenders as far as the hyperscalers into more of the bottleneck type companies. And I guess that explains why it's up almost 70% year to date here and higher on a day when the rest of the chips are down, because obviously it's trying to solve a big problem here right now. I see across the analysts pretty bullish. I mean, no one seems to be in a sort of sell or underperform type camp. Everyone sees this as a buy or a strong buy. Anything else that sort of stands out? I mean, I see, as you mentioned, pretty strong fundamentals when it came out to tripling its revenue just recently. And yeah, the stock's had a pretty good run. What are the analysts saying?
So I think one of the things I'm taking away from the price action today in Credo is if you look at the stock, which is up, about 200% in the last year, the last 6 months it's gained about 53%. But from a technical standpoint, the stock had not been really extended. And we are seeing a lot of the bigger names, Dell, for instance, Qualcomm. If you look at also Marvell, we talked about Marvell, which is a competitor of Credo. All those stocks have made these tremendous moves. So I think the moral of the story today is we are seeing Credo, which is in the midst of competing with these larger scale companies like Marvell and Broadcom. Broadcom has specific issues associated with their integrated circuit technologies competing with Google now. That is also plaguing Marvell. Marvell also got the acceptance, if you will, or endorsement from Jensen Huang because of the bottleneck in connecting technologies together, which Credo is helping alleviate. But I think valuation matters, and the fact that the stock itself has been moving steadily higher, not essentially moving in a parabolic capacity, because one thing I'm certain of in markets over time is mean reversion. And we're witnessing that right now with many of these names pulling back significantly that I mentioned. The Credo really didn't make a huge move to the upside, and it's not pulling back extreme to the downside. It's moving steadily. It's hitting lifetime highs and even 52-week highs in a really bad tape. Because if you look at the forward earnings multiple, it's around 30 times earnings. And effectively, it wasn't extended even after its earnings results. It's been moving steadily. And I think that's
what we can take from today's price action relative to some of the majors that we talk about all the time, which are down a lot.
Oh, for sure. Okay, so maybe more of an orderly run. Suffering today makes sense, George. Really appreciate it. Thanks so much.
Okay. A little short covering at the end of the day there. A little people taking profits.
Thanks so much to Sam and George for that.
Okay.
End of our market session. We'll be bringing in Alex Coffey to
Meta
action, as well as the earnings from Oracle.
down again today. Meta.
That's all next. Stay with us.
Oracle.
Sometimes, you know,
Put walls 190. Call walls 250.
same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live.
So if we get a little bounce in Oracle tomorrow, I'm probably going to sell some put credits. I'll sell some put credits if we stay in this area, because we've already pulled back. I want to sell put credits when it pulls back. If we get a bounce, I'll sell some put credits after we see how the markets react tomorrow, tonight and tomorrow.
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad?
So the idea with Oracle is, after earnings, if we do get a pop on earnings, I expect that we might, then I'll sell something like the 200, 190 or something like that. If we pull back first, I'll wait for a bounce and see if we can't hold on to this trend. As you can see, that trend line. If we come down into this area above the 190 put wall, if we come there and start to bounce there, then I'll wait to sell some put credits on a pullback. So I'm looking to get some exposure credit wise on Oracle. I do feel like Oracle's most likely going to be much higher by year end. It's going through this phase right now where it broke the downtrend in April, continues to build higher highs, higher lows. This little pullback over the last 2 weeks has been, troublesome. 50 points. It is what it is, though. It's an expensive stock. Anyway, so we'll be looking forward to that after the close. Let's see. IONQ. Oops. What happened there? Okay, IONQ. What's IWM doing right now? IWM pulling back with the indices. IWM. Yep. 60-minute. Still weak. Intel, not too bad, right? Intel doing okay. Flat. SOXS.
We're on pace for that to happen. That can be an indicator of trend shift, momentum going from overbought to below 50 on its way to oversold. As this is not quite oversold yet, but at 41 in the RSI, it's working its way there. Is starting to show that the downwards pressure is gaining steam. I also talked about sort of this stoplight or kind of organization of these equal distance price levels going back to what I thought was a pretty significant level of 7,000 as our green.
Bollinger Bands opening up, top and bottom. Whenever you see Bollinger Bands opening away from price action, away from each other rather, look for RSI to tell you what direction, but this is definitely accelerating. Did we hit the 50 SMA and bounce? We hit the 50 EMA yesterday. All right. So waiting around for Oracle earnings. That's the closing bell. I'm your host, Cousin Benny, coming to you from theclosingprint.com. I hope you had a decent day. I know it's been kind of a drag. The market's pulling back over the last week. It is what it is. We'll look for a bounce in the short term. 5% was yesterday's low. I think I have that somewhere, right? S&P 500. Okay. All right, so 20% up. We had a 20% move to the upside from the lows. 20% upside. And right now it's a 5% downside. Okay, 5% to that low yesterday, right? 5%. All right, so we're going to build a base in this area. I got a feeling we will. I don't think we're going to go past the 50-day. RSI is almost there now. MACD stochastic's trying to turn as it is. You see that little hook trying to form? So momentum is too bearish at the moment to give us a decent bounce. Okay. Anyway, I'll be watching for the Oracle earnings. I'm just going to log off here, get out of the stream and take a break. My daughter's leaving, going back to college. So for the summer, she's got an apartment there. So going to go help her out. And I'll see you guys in the room on Oracle earnings. I'm your host, Cousin Benny, coming to you from theclosingprint.com. We will see you tomorrow.